Welcome. Hey everybody. Happy Friday and happy birthday, everybody. Apparently we're doing this today, so happy birthday to all. Thanks for joining me here. So we are going to be talking about market profiles, some more advanced techniques regarding the market profile. So we started last week, but it was just too much for one. So we're going to wrap that topic up there, and then we're going to hop into some chart overview, some things I'm looking at this week to set myself up for success next week. And we can also look at any charts that you guys are looking at. So that is the plan. Welcome everybody. Good to see some familiar faces and some new faces in here. Welcome everybody. Okay, yeah, so we're going to hop right on into it. Okay. So today, like I said, we're going to be going over the market profile in a little bit more detail than last time. So we stopped right about where we were getting into the examples of the trade setups in specific. So that'll be a good place to get back into. But first, I just want to kind of catch anybody up in case they forget exactly where we left off, or if you're not familiar with what a market profile is in general. So we will be brushing up on all of that, and then here's what we're going to kind of add to the mix. There are a few types of opening trades kind of setups that we're going to talk about, like I mentioned, and there's specific strategies that go along with those. Again, just in line with making everything as systemic as possible, and just learning how to frame the trade and taking the emotions out of it. So after we talk about that, we're going to go through what a typical kind of day will look like for if you like to do this kind of trading, and what the workflow is like, in the morning before the market opens, during the market opens, as you take your trade, as you manage it, and then after. So that'll be really good kind of proof of concept for this kind of thing. We're going to get into some more examples because, there's new examples every single day. We can get into some really fresh ones and talk about what we learned. And then we're going to, like I said, hop into a Q&A session and all that good stuff. So these are some of the more advanced techniques that we're going to talk about. Like I said, the pattern recognitions, that's where we left off. So talking about ledges, about excess structures and poor structures, and how we can play each of those scenarios. We're also just going to touch up on the volume analysis and how we can recognize these institutional footprints, because that's what we're all looking to trade with. We need to see what the big money is doing and recognize it early, and then we can follow their lead and catch the easy moves. So this is kind of what we went over last time. We talked about those institutional footprints, those activity recognition patterns. We went over how it looks like when big buyers hit the tape, and when you can look for those big volume prints at key levels, and how that can often indicate a price reversal. We also talked about more advanced volume distribution analysis. So just looking at the breakdown of buys versus sells at key levels, like we're talking about, this really helps build our bias on whether the big volume that's coming into these key levels is going to reject, or whether you can see continuation at any given point there. So we went over volume at price strategies, which is basically talking about the high volume node and the low volume node. So we talked about how out of the price action on a given day, the 70% of the range where most of the shares are traded, where 70% are traded, that's going to be your value area. And the high and low of that area often will provide trade entries. So we talked about how you can look to fade moves above or below these value areas back to the equilibrium or the point of control if it's a mean reversion type day. So lots of setups like that. If any of this sounds good to you and you don't remember it, go ahead and pop in back to the last week's on Trade the Pool's YouTube channel and refresh yourself after this, because I think it was a pretty good one there. So there are different value area dynamics and trading strategies surrounding those as well. But the most basic are just the three volume profile shapes of the D, which is a balanced one where the most it's kind of like a bell curve. the most shares are traded right at the middle, and then it's going to be less and less on either side in a nice rounded curve. So that indicates a balanced market, a balanced structure. You also have an imbalance to the buy side, which looks like a P, where most of the shares of the day are traded up at the high of day. That's very bullish. Shows that people, the market wants to find acceptance at this high level and push even higher. And then, of course, vice versa. If it's a B shape, it will be heavy on the bottom and just price will be driving down. Sellers will be in control and it will look to continue down. So these are just some of the basics that we went over. We also talked a little bit about opening types. I don't think we got quite there yet, so we'll talk about that this week. And then, the quote here is that market profile shows where price spent time. It also shows how much volume was traded and when activity occurred. So it really tells you so much just from one indicator. All right, sorry, just checking up here. Awesome. Sorry, I'm seeing all of these comments now. I will get to all of these as fast as I can. But going forward here, so ledge patterns. These are going to be the first thing that we talk about here. I think we might have mentioned them just briefly last time, but this is one of my favorite high probability setups, and this is kind of what it looks like. So you're going to have a area of significant volume, and that will look like, see this big node right here, marked by this rectangle, and then you see another one forming here that's even bigger, and you mark it this way, and also some up here. So these areas of significant volume, they represent institutional positions where they hold a lot of inventory at a certain level. And what we can expect is that they are high probability reversal points if we retrace into them. So, for example, this example here shows a really strong flag, breakout, continuation. And then when it flushes out here, it comes right back to this high volume node or this ledge and caught and reversed very, very aggressively there. So these are some areas that you can basically look to mark out on your chart. And when price comes back and revisits them, you can see a lot of good action off of these. If you're a scalper, you can often take a quick move directly off of these and then see if the move will stick or not. But in general, these are just areas where you can look to essentially get involved in a trade that kind of got away from you. Because that's what this is representing, where institutions, they were buying down here and then price ran up, but they still have an order down here saying, hey, if it comes back, we'll still buy more here. We're not going to chase, but down here, good price. So these are some ways you can look at ledges. And then I also want to talk about what poor structure is going to look like, because those institutional ledges that we talked about, you can often get a nice bounce off of those. Poor structure is going to be a little different. This is going to be more like a lack of balance, of a balance developing in the week. And what that means is essentially, there's going to be a buildup of either more buyers than sellers or more sellers than buyers over the course of the week. And eventually it's going to kind of break through. And when this happens, you're going to kind of knife through. After you break through a strong support node, you're going to knife through these low volume areas, and you can get a really good follow through move there. So it's important to be able to recognize them. And this is an example here where we have a nice high volume node across multiple days here. This is where we were flagging and broke out from. And then price revisited it once, tried to catch, and is revisiting it again. So this is essentially showing a imbalance in the markets where the sellers are just winning, because when price goes up like this and forms like the point of control is up here, but there's also a lot of volume down here, and then it just rejects. It's kind of like you built your house on sand or on something that's kind of eroding under you, because this should be support, and we shouldn't revisit it so fast. And the fact that we do and don't see a strong bounce, like this is a sign that basically people were up here, or institutions were up here with a lot of inventory, just unloading that, selling heavily. And when you get that heavy selling up here, it's just going to be really hard to push through. And very often you need to retest this level, and it can be a fake breakout. So this is something to watch for this poor structure. And essentially you're looking for like I said, in this day, it's very telling that the profile here is rounded at the top, very narrow in the middle, and then round down here. And you would like to see most of the shares trading up here in a nice P shape to show it like an incentive for price to return back up if it drops. But instead, it can just drop all the way down here and it loses all the momentum. And then if it goes any lower, it traps bulls, and them closing is going to drive the market down further. So that's an example of poor structure. And you can also see poor structure on the other side too, and that can cause a squeeze to the upside and squeezing bears out. So it's not all just one side, but that's just one thing to keep an eye on. So excess patterns are another interesting one here, and this is going to look like a spike, and it's going to form basically beyond the value zone. And so when this happens, often it's going to basically be telling us that there's a rejection there, and the market's going to often turn. So in this example, essentially we're looking for high volume moves below or above key levels. So this is a level that came down once, held, came back again. And when it kind of failed an auction lower, it couldn't break any lower. It reversed very sharply and it formed kind of a spike. And that often, it's a sign that basically the auction failed and now we're going to try to test somewhere up. And obviously this was a very strong move. I think this was probably on some kind of news or pre-market data, but it just came up and sought the liquidity right over here. And that's when the tape kind of got mixed and the market actually started trading sideways and a lot of shares became entered the market here. But so essentially what we're saying is looking for a sweep lower and a reclaim. That's going to be that excess pattern. And often it's very high probability and you can search for a nice target way up above. And it's basically saying that we've done our job down here for the short term, and the path of least resistance is no longer down. Now it's going to be somewhere up. And so I'm really a big fan of these guys here. So I want to talk about some high volume node trading. This is going to look like essentially this. Oh, wait. Can you see this? There's my cursor. Great. So see this high volume area right here on the volume profile on the left. This is something that's good to mark out when you have a zone like this, because you can expect these areas to be kind of tough to work through. But if you can see rounding in the bottom of this area, then often that's a sign that it's going to start to reverse. And when it breaks above this, whenever it is ready, when it's done accumulating down here, then your entry is very protected because you have this nice shelf of volume above you at that point, or what's now above you. And once the trade starts working, it will be your support. But very often this will be the base and it will push way up here to the next big node. And you get a really clean trade for a nice percentage gain. So that's what you should be looking for in terms of like on a bigger chart here, on the intra-week chart or higher time frame there. But intraday, there's also a lot of things you can do with these high volume nodes. So essentially, when you have a high volume node, you're going to be considering it a kind of resistance or support, like a level, And I think of levels not as like one price, but as kind of a zone. And that's because I primarily use these volume profiles. So it's kind of like, it's not like a level is a piece of glass where if it breaks, it's over. It's more like a top of a mattress where it can get pushed down and it's got some give to it, but it still does have like a firmness at some point. So in that, with that in mind, let's see. I'm trying to remember what I did this a week and a half ago now. I'm trying to remember what the example was that I was looking at here. So it looks like we basically did a failed breakdown of this area. And now there's a chance to basically move up to the next volume profile because this was the high volume node yesterday. So price was like basically leading down. That's a B-shaped profile. And we did get the move down, but now we might have seen a trend change because this looks kind of like a bullish P shape to me. Looks like a longer bottom tail, and price action would confirm that, looks like. So in this is a case where you're trading out of and back into a high volume node. And even if you think we might go lower, very often you will get a nice push up to test the next level to the upside and then either confirm a move back to the high of the range or reject there and go lower. So that's just one strategy you can look to do there. Like I noted here, expect a bounce or rejection on the first test. And like I said, you're always looking for confirmation between volume and price. So that's to say that when you're trading into a level like this, you want to see basically, if you want to go through the level, you want to see a big amount of volume to push you through, and you want to see price to move through to match. If you get the price to move through, but there's not a lot of volume, that can, be a sign actually of like impressive strength, and that could be good. But what you really want to look out for is if you get the volume but no price movement, because that can be a big warning sign. Because if you have a lot of volume but no price, that's like a lot of effort with no result. So that shows that there's either a big seller that buyers are just getting absorbed by, or vice versa, if you're on the other side of the trade. So these are the things to check for in these high volume nodes. And now I'd like to talk about the other part of the volume profile. So we talked about the big high volume node, but what about this low volume node? So what do we do for those here? So generally, these are considered areas of non-acceptance. And that's just to say that if price is accepted and traded equally in these high volume nodes, a lot of shares are traded back and forth. There's price acceptance for the most part. When price moves through these low areas of acceptance, they just slice through, and there's no two sides of that exchange. It's just like an imbalance, and it makes a very direct straight move. So these are setups that we love to look for, ones where we can basically find either a push out in a back test of a high volume node, and then we can target up here this next high volume node and cut through the low volume. Like that's essentially what we're looking to do, So we want to trade directionally up into these ones, and we want to have the high volume nodes behind us as support. So moving on here, talking about volume imbalances and how to trade them. So basically, we're talking about how to identify buying and selling pressure imbalances and what those look like. And essentially what happens is that once we have this high volume node that's starting to form and we see moves away from it, especially moves that are past the value area low. So let's see. Where is my cursor? I'm trying to show you guys this. There it is. Okay, great. So here's our high volume node. That's our point of control. And when price comes down and then starts to find buyers underneath the value area low, which is this blue line, then we can say, all right, probably sellers have got ahead of themselves. And even if we're going lower, we're going to need to come back up and just confirm some levels that were support as resistance. So we have this very obvious level that was support and is now resistance. So it's a very clean trade to look to, once this rounds and finds some buyers, to trade it back and take some profit at the value area low. And then your big target is this point of control. And then you can also be greedy and say, all right, I'll shoot for the value area high on the other side too. And as you can see, price very often, it does want to go lower eventually, but first it needs to come back and see what's going on up here. So these are some really high probability setups, and some of my favorite, basically fading, mean reverting big moves. So for example, overnight here, it was just puking. And then right at open, it dumps a bunch more and then finds buyers in the first half hour, which is a time that I love to look for reversals. So that is a high probability setup for me to come back here. And once it starts working, you can just put a stop under the low. And if you're wrong, you're wrong. That happens. But for the most part, you can just expect a return to the high of, the where the majority of the shares traded. So in this case, there's confluence with the open level too. So yeah, this one gave you the same look twice in a row in the same day. So like I said, these are very high frequency setups that can just, get some consistent income going when maybe there aren't any amazing breakout setups on your radar. So I wanted to talk a little bit about how to link sessions together and how you kind of can conceptualize one volume profile into the next and like how they will develop into each other. For example, in this bit of price action here, first we spend 1, 2, 3 days basing. And it's a little hard to see, but right here and right here, the volume profile of these 2 days are very nice and bullish with a nice P shape where most of the volume is traded in the top part. But they are still relatively balanced. So essentially, these are telling us that our price probably wants to go up. We should probably be in buy the dip mode, because if price comes down on a day like today or like this and maybe clears out some stops and then comes back up and reclaims something, well, then it's probably going to want to come back up to where the most volume was traded over here. And it gives a nice chance for a engulfing candle and a push higher. So because of the price action on these 2 days, we can kind of infer that we're looking for a green day tomorrow. And also on this day, we're looking to buy any dips. So you might be able to catch that dip, or at the very least, you're looking bullish the next day. And right out of the gate, since you're trending bullish, you can get a nice move very quickly. And then there's always going to be mean reversion, so that's where you can do these, even in a bigger uptrend, you can still take a short there. That's pretty high probability. So maybe right out of the gate, you're biased long. But then you're also saying, okay, in the first 10, 20 minutes, half an hour, I wouldn't be surprised if the market's going to turn a little bit. So it would just be a scalp long and looking for mean reversion for the main trade of the day. So this is how you can kind of take these volume profiles and based on them and what they're doing, kind of frame tomorrow's trades. So that is something that we can talk about in more detail when I pull up charts in a sec, because we can talk about what I did this week, trading every morning. And we're going to just power through here because I'm kind of forgetting what I was talking about on some of these slides now that it was 2 weeks ago. So what's really important here is aligning your time frames. So I wanted to go over that real quick. So basically, each time frame is going to represent a different kind of participant in the market, whether they're really long-term investors that are just buying and holding for the most part, or whether they're short-term day traders. And you can kind of personify each of them or capture what each of these kind of participants is doing based on these different time frames. So when you're looking at a monthly chart and you're seeing a big bottom wick on a monthly chart, the process of it forming that bottom wick, going down for 2 weeks and up for 2 weeks, that might be torturous if you're a day trader, or if you full ported the stock. But on a monthly chart for these long-term investors, it was just forming a bottom wick in a candle that's pushing much higher. So it's just important to remember that the best trade setups are going to be aligned in time frame on all levels. So it's going to be bullish on the monthly. It's going to be trending up there. That chart's going to look bullish, as well as the weekly, daily, all the way down to where ideally what we're doing is we're taking trades when the very short time frames are starting to break bullish, and the longer term time frames are already pretty bullish, So that's going to look like flattened EMAs, for example, and starting to curl up, and the moving averages price starting to move above the moving averages, and price using them as support as they curl up. So that's going to represent kind of the ideal swing trade, what that'll look like when all the time frames are lining up. So the monthly represents like the major trend. The weekly is going to be intermediate structure. So it can do a lot of movement on a weekly level within the context of a larger monthly candle. So there can be so many fake outs, so many like weird moves at each of these smaller time frames, but it can still be in the context of a much larger, bigger trend that's almost always bullish with most of the things we're talking about here. So the daily represents short-term opportunities where you can use this time frame to frame, essentially where you think the next direct move is going to be. For example, if we gapped up overnight and then we're starting to show weakness in the first 20 minutes, well, you can bet that it's a good chance that we go down and test or fill or at least test the gap. So because of that, you can a few times a week just basically make free money just by identifying these things and having the confidence to play them. And that's what we're all about here. So intraday is going to be these precise entries. So once we recognize on the daily, for example, that there's a gap up and the market's looking weak, so we go intraday and say, all right, what's the next level up after this gap up? Maybe the price is going to push up a little bit more in the first 20 minutes, and then it'll tag that level where we're going to short with a target of the gap fill. And that's how you can kind of use like an hourly or lower to frame these daily opportunities. So really important to have them all coming together. And what that'll look like is you can align multiple, like a POC or point of control for each time frame. You can align multiple ones of those and get really high probability trades. And so that's something where you can use a tool called variable range volume profile. And basically you can just control the range that you want to do it for, and you can set it for 20 days for a full trading month, 5 days for a trading week. And that kind of gives you these levels where
oil wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at. What's going on, traders? How we doing out there? It's good to see you guys, and we are in another fast market as the market keeps trickling down here, and we'll take a look to see what's going on. We'll get right to the sunrise report. We'll get to the playbook action. We'll take a look at some trades before here as we get to our traders in just a few minutes here. Sorry about being late there. Just like the clock ran out on me, the clock ran out on the clock is running out on Iran right now, and Trump is only 48 hours away from the 5-day strike pause, and Iran has rejected the U.S. 15-point peace plan, and you guys are seeing it affect the futures right now and continuing to leak in. I was actually able to play this overnight in a little bit as that futures action. I expected this to come right back down as the market loves to play this, just ping pong action. We go up, we go down, we go up, we go down, we go up, and guess what? We're going down today. So at least seems like that's what we have right now. Of course, it just doesn't look like things are changing here in the war, and that's really what's affecting things as we get conversations that seem positive from the White House. But when we hear from Iran, it's almost like, who's giving us the actual truth here? Definitely probably isn't Trump right now, as oil is surging back above 100 and the Pentagon is actively preparing for a final blow option, including ground forces and a massive bombing campaign. And Trump warned that in Tehran Wednesday night that it had better get serious soon before it's too late, because once that happens, there is no turning back. Futures are sliding hard. Wednesday's rally is already just a memory in the past. The 5-day clock, of course, expires as Iran rejecting the deal, as Iran's foreign minister confirmed Wednesday that the top authorities were reviewing the proposal, but simultaneously stated that Tehran had no intentions of having talks with the U.S. Iran's counteroffer is a 5-point plan that included demands for control of the Strait of Hormuz, which really is a non-starter that effectively killed the diplomatic framework here that had briefly sent crude below 100. And there it is, right back to the upside. So now the Pentagon has, of course, briefed options for a final blow that includes deployment of the Army's 82 Airborne Division, pretty much Marines coming in here also, and then a massive air campaign. Trump overnight warned that there is no turning back. We'll see what happens there. Oil snapping right back to the upside. Yields over here as, of course, getting affected from this. The 10-year Treasury yield was trading near 4.32. Heading into Thursday, yields expected to rise again as oil inflation trade reignites. Jobless claims, of course, ending in March 21st, came in at 211,000 versus a 205,000 consensus, showing you a modest miss, signaling a softening in the labor market. Of course, something to think about. But in focus, Q4 GDP final revision here. The Bureau of Economic Analysis released a third and final estimate of Q4's 2025 GDP Thursday, and the reading carries an extra weight in the current environment. The growth was softened than previously reported heading into the Iran war, and stagflation narratives, rising inflation, and slowing growth become even harder to dismiss. Economists are parsing through the PCE component within the GDP report, which of course feeds directly to the Fed's preferred inflation gauge ahead of Friday's core PCE data. That's where you're really going to see some real swings Friday, tomorrow. It's going to be something to look at. The peace trade, of course, is unwound rapidly. Energy is right back up. So, of course, what is that affecting? Well, you're seeing energy stocks like the XLE push right back to the upside. This is why I wanted to buy the dip in oil yesterday, and I felt like there is no reason to short oil with this type of strength. It just makes no sense. If anything, it just shows us that we should have jumped on this trade, even if we only got like 5% here on the XLE since the war. I mean, with oil continuing and everything showing that we could see uplifts and in the Sarah week, warning that conflict isn't fully priced in. That came from Chevron CEO Mike Worth. So, hey, just shows us more and more this energy trade is seeming to stick hard. And the trade that seems to be affected massively, like the trade like DAL and other trades like UAL, right? It just keeps coming up and then right back down. Now we're starting to get hit. So now I can start taking a look right back to those shorts that I was looking at, like RCL, like Viking, right? We'll see what happens on these trades. Will they start to crash right back to the downside? Consumer facing stocks also could see a major hit right back down. Defensive stocks were rebounding like Lockheed Martin and RTX yesterday. We'll see what happens as they were recovering, as they got a nice little lift here. Are we to kind of jump in on this dip, right? We'll see what happens. I will keep my eye out on the defensive names. I think this had more to do also with just the industry, because of course they do kind of bunch together defense and aerospace and space stocks. So if you saw yesterday, you had a big move in some space stocks like Space Mobile, Planet Labs, Rocket Labs, all looking good. So we'll see if that trade can actually hold on today. But Lockheed Martin, some defensive trades doing well. Consumer discretionary under pressure as the sector that, of course, led the rally on lower, right? Definitely taking a hit there. Retail, travel, leisure. That's the area that I'm worried about here. We'll continue to watch there. Chewy down after earnings here. So looks like Chewy can't get the push here. We'll take a look here into the intraday action. It was down, and now it's kind of, it's a small fade, right? Reported quarterly earnings that disappointed Wall Street. The online pet retailer missing on key metrics. I don't know how they miss on key metrics. They get so much money from me. But hey, that's just how it is, right? ARM and all the analysts now starting to chase the action. I talked about this one on the monthly, how it was such a great looking chart. Now it's really taken off, and it's kind of hard to play catch up now. But moving on, guidance, ARM Holdings was among the, of course, notable movers in Wednesday's pre-market article. The chip design company, of course, generating attention around its AI-driven royalty revenue outlook. The stock remaining closely watched as a proxy for the broader semiconductor licensing and AI infrastructure build out. Of course, the setup going into Thursday, Iran rejecting in the U.S. 15-point peace plan and the 5-day strike pausing on Thursday. It's just about to run out. The Pentagon is, of course, briefing the final blow options, and we've already heard multiple mentions of troops getting ready for Friday. Could this be leading into tomorrow? Right? Brent back above 106, WTI at 93. Wednesday's peace rally was fully unwinding. Trump warned Iran that there's no turning back once the deadline passes. Q4 GDP final revision lands this morning, and stagflation fears are steepening here if growth is disappointing. And it did. Jobless claims slightly missed here at 211,000 versus 205,000 expected, showing more of that labor market softening. The market, of course, has been living and dying by a single variable for the 5 weeks. Will there be a deal with Iran? Well, Wednesday it looked like a yes, and Thursday morning it looks like a no. Volatility isn't random. It's the price of genuine uncertainty around the outcome that will define whether inflation stays elevated or retreats here, whether the Fed can cut or has to hold, or maybe even has to raise here. Until the 5-day deadline resolves one way or another, the deal or strike, every rally is a rental and every sell-off is a warning. We'll see what happens there, of course, as we get more and more action. Let's talk really quickly. Let's go over now to a quick playbook action as we take a look at some trade ideas. All right, guys, let's take a look here. Long ENTG. Let's take a look there. ENTG is the trade that I will be looking at to see if this can get long. Of course, this trades in the semiconductor equipment stock, so we'll see if this can start to make a move. Yesterday, we saw that area take a hit because of the Micron and that kind of outlook into memory with the, of course, the quantum from Google being released, that model that's showing you more efficiency in AI and Micron continuing down here and leaking, so it doesn't look good here for these names. We'll continue to watch SNDK, a bunch of those names. If they could get the bounce, I think this market's right back up, but if they keep leaking, it isn't going to be looking good here for this trade. We'll see what happens. Let's go to BTU. Coal catching fire. Of course, like I've mentioned, I thought it was the best trade to take out of the war. Why? Because, of course, I know how Europe works, and Europe is all about natural gas. And once the natural gas prices start to spike and go higher, well, guess what? They turn on those coal plants and they start burning it like crazy. And we know how Asia is exposed to coal. So here in this case, BTU going higher looks like it wants to break the 39. We'll look for a bigger move there. Last one is, of course, long on MU, but I'm going to have to turn this around because it doesn't look like it's going to get that reversal, at least for the short term being. We'll look to see if we get it. It's about 6 straight days down, so definitely the RSI kind of really getting a takedown fast, right? So the relative weakness in this name is significant. We'll look to see if maybe it does just an undercut and rally and comes back, but man, it's harder and harder to catch this falling knife now as it keeps falling. You guys know I don't like these often, but hey, maybe this is more up your alley. We'll see what happens there in Micron. All right, that's going to do it for, of course, the playbook. Where can you guys get the playbook? Get over to the Discord side of things. Get the Sunrise Report also. If you want the full printout of what I kind of go through, you can check this out, of course, where? On our Discord. If you're not there, you're missing out. Let's go ahead. Let's bring on our traders here as we kick things off. Let's go to my man Michael Noss and see how he's doing in this
Yo,
market. Missed him yesterday. Did we get your batteries checked? Are your batteries recharged here?
yeah, feeling a little better. We
Feeling a
are
little better.
the market is frustrating as always, right? We're not really doing anything, so I think that's what would really charge my batteries if we finally break in some way, shape, or form. Just taking a look here, if we go into the SPY for on like a 30-minute chart, it's just been nothing. It's been exactly what we talked about, right? Is that you had that huge, the taco bar right here. And then ever since then, we've just been chopping back and forth inside that bar. Just nothing, no headway on either side of things, right? So we have this huge bar. I know there's a lot of people, probably fib guys, who are just looking at this, but we're pretty much smack dab in the middle of that bar, and we have been since Monday, and we're now sitting Thursday. We had a number come out, and nothing really happened there. We don't really have anything for the rest of the day. So these are the times, right, that they test your patience as a trader. Right? Can you sit there and do nothing while the market does nothing? Or do you find yourself really itching to, try to get involved, especially, again, if we're looking at S&P 500 names? Are you really itching to get involved, or can you just can you chill out and just wait?
I think you might have to hang out here. But one of the things is certain is it just doesn't look good out there, man. And I think that's one thing that we'll continue to look at. We'll see if the SPY can hang on here. And it's all about what? The lies out of the White House, right? That's what's really causing, I think, even further concern, because we keep hearing mentions of things that are just complete false. And that's why the market is coming back down here, right? All that pop that was given, and I said it yesterday, how that pop, we never went above that pop. It was just a quick pop, algos took control, and from that moment, we've been leaking. So I think at this point, we can't believe anything that the White House is telling us. And it's kind of funny that Iran, information that's coming from Iran seems to be more accurate than our own White House right now. So we will see what happens here moving forward. But I think, of course, today is the 5-day pause run that runs out, and more attacks could be happening overnight. This doesn't leave me room to thinking that we're coming back ripping and roaring. More in that bear camp, but let's expand here. Let's bring on Airplane Jane. Let's talk about the markets here. How you see the markets here, Jane? I know that you've been a proponent of catching some kind of bigger orders and staying in that kind of bearish tune here. How you seeing it?
I was just reviewing the levels right now and really still seeing that we are in a selling mode. We have basically the dollar going up, the index is going down. we had Peter Hegseth say, you know what? We negotiate with missiles, right? So they're not into talks. Even though Trump was like, oh yeah, ceasefire. We had the temporary drawdown on oil. We got oil up. This is the big area to watch with the Strait of Hormuz. Basically, whoever's running the Strait of Hormuz is going to be controlling oil, right? So if that, we did see yesterday that we have 80% of the ships going through, and we had a surplus for the last 2 weeks. However, the market is telling us something different. The USO level to watch is 115.87. We are just above that today. Are we going to see a close this week below? If so, likely some red going into next week with oil. And that could create the upward shift with the market, with cost of transportation dropping, cost of goods for manufacturing dropping, with the oil price dropping. So keeping a tight watch on oil to see if we might drop the cost of transportation and goods for manufacturing and then allow some profits to rise. However, we are somewhat, I think, seeing the price in of the lack of profits coming in at the moment for future quarters because of the ships that were held up. So I think they are pricing that in. Once we see the strait officially open, we see Trump officially say it's done, we have Iran agree, then we're likely going to see a rebound as well as the bigger money. But right now, still seeing selling across the board.
We will see what happens there. Of course, USO going higher and energy can't stop, won't stop. So we got to start taking a look at trades, right? And I was thinking about it in two ways. I was thinking either the oil starts to come down and we can start looking at the industrial trade and things like that, and tech can kind of get jumping here, or the opposite. We start looking at trades that can continue to make moves because of concerns coming out of the strait. So you could take a look at maybe potentially trading the XLU higher. That's actually been showing a little bit of some strength. We'll see if that can kind of bounce back there. That's kind of your utilities outlook. But then you have agricultural and inputs like CF. That's one name that I'll be looking to see another takeoff. You have names like Mosaic, right? And your
Well, and
agricultural inputs.
this chart, when just talking about energy and oil, is super interesting to me, right? If you take a look at this over the last handful of days, so this is USO over XLE, so it's basically energy or oil over energy, right? Usually, you can see this chart go sideways, which essentially means that XLE and USO, they move somewhat together for a bit. And then you had the spike where oil outperformed the whole energy sector as a whole. But ever since then, and this is including today's action, it's been the rest of the energy sector that has really outperformed oil over the past week or so. So it's, it could be one of these rotation things. We talk about it intra market all the time, but of course it happens in commodities. If oil gets too expensive, people will look for alternatives in which to power and to fuel things. So you might want to, the move in oil might not be the most advantageous place to look, where you can look here and say, well, what are they doing next, right? Mitch mentioned coal. I don't know, maybe uranium becomes something that's interesting, right? If oil price stays too high for too long, that's the beauty of capitalism, right? Is that we always find a solution, find a different way around what we're doing. So this chart becomes real interesting to me. I know this, and I have this chart because I know someone who has this trade on right now. They're essentially short oil, long energy. So expecting that this particular chart to come back in line. He's a very successful pairs trader. So keep an eye on that. That's something that's very interesting to watch, right?
Breaking news coming out of Apple. Let's take a look at the Apple chart, see if we're seeing some reaction on this news. Of course, we're getting some news out there, and Apple's coming down, so it's not even caring about it. But it's a program that Apple will spend $400 million through 2030 on new programs with Bosch, Citrus, Logic, TDX, and Quinity Electronics to manufacture essential materials and components for the U.S. So American manufacturing program being mentioned here. Of course, this has some other partnerships like Amcor, Broadcom, Corning, Global Foundries, and Texas Instruments already hitting some milestones. So just, I would take a look to see if maybe Apple gets a little bit of a lift today if we do see a turnaround.
Yeah, and for levels of the SPY, they're still the same levels they were at the beginning of the week. And, every time you get a big kind of high volume, massive spike like this, you just have to look that everything inside of that is just pure digestion. So, that's what I'm looking at. We have a pretty significant level at this 650 that we're at right now. This one's a little bit important, so I'll highlight that line a bit. But yeah, I'm just, we pounding the table on this one for a long time. We have just been straight in a you buy the dip, you sell the rip. That's been the game plan pretty much since the beginning of the year, and it continues to be. We're now, I think, almost 7 months of this chop action where absolutely nothing has kind of happened in the market. We're at the same price we were in September of last year, and we've only been up about 10% above that, and we've only been down about 5% below it. So just insane range bound action. So this is one of the benefits of what we're doing at Trade the Pool with intraday stuff, is that intraday doesn't really care about this, and I think that's where you want to focus. Short-term swings, intraday. I've been doing a lot of that. It's when I looked over at my investment account recently, it's done, like the market, pretty much nothing for months, but the short-term trading account's been doing great because it does a lot of give me some really ugly days. I'm going to be buying stocks. Give me bounces from that. I'll be selling them. That's making a fair amount of money, which is good because at some point the market will recover and that investment account will be the move. But yeah, for the longest time, it's just been buy the dip, sell the rip. Seems like we're back in that zone. I was hoping that this economic number that we had, it was a job something, would do something, but it hasn't moved the market like at all.
Also, we were talking about DXYZ yesterday. That one is still moving today. It's still moving to the upside. I do see for those smaller cap traders, 3012 is the area to watch for support for the larger money. Starting to see that gold and silver are also pulling back. And you're going to be happy to hear, Mitch, BATL is rising to the upside. We do have that market madness that is going on. We have our final day of this week for the Elite Six. I think I'm going to be eliminated this week with my directional trade being off on oil. But
you can join me on the shit talking bench then, where we just
on the sidelines watching the competition continue.
We can be good. Like those two old men from the Muppets that just sit up in the bleachers and talk crap the whole time. That'll be
exactly.
the rest of it.
Yeah. So, there are some disruptions that will happen for market madness this week, but I think overall, still seeing the Mag 7 pulling back. We're below the 198.93 level for RSP, so getting the red across the board. So I think for those long bias traders, if you are not comfortable shorting, in my opinion, maybe just sit out on the sidelines for buying when you see that support come in. But right now, be cautious because it's like we were saying, sell the rip.
Sell that rip, indeed. We'll see what happens here towards the open. We still got about 15 minutes left here, and Treasury's kind of holding on for dear life. We'll see what happens there. I think that's also what's weighing it.
Trump speaks today at 4 Eastern at the Greek Independence Day celebration.
He speaks every day.
This one's their expected remarks about the war.
Oh no!
So more.
No! It's
going to be more of the same. Basically, just means right. The market's going to.
There's going to be a whole lot of memes, huh?
Well, it just means there's going to be another gap, right? Another up or down 0.5% to 1% tomorrow.
It just means, you're just going to get the shake again. But the truth is what it is, really, right? I mean, we are ready to put troops on the ground and just pretty much destroy everything in Iran. That's the next step. So we are on that verge overnight. So you overnight traders are going to be on a whim to see what happens. Do we attack? Do we send ground troops? And how will the oil markets react then, right? And if we start to attack energy infrastructure, how will oil react then, right? Will we see $150 barrel tomorrow? Could very much be, right? So
Well, and
this is
that's the the big thing just to know when we were talking about this a little bit in like a meeting we had where some of us are dabbling in futures now because of that. And it's the same we talked about with now the 24-hour markets and with trade the pool. You can trade 24 hours with like SPY, TQQQ, these liquid names because the reason the market looks like it does, which is if you just look at most of these candles, every now and then you get a big one, but like 4 to 5 recent candles are a gap and then nothing, and then a gap and then nothing, and then a gap and nothing. It's because all the action's happening when the market's closed. So, if you were someone, if I was in like college right now and didn't have 2 kids, I would probably be sitting out the regular trading hours, and I'd probably
yeah.
be looking at that like 10 o'clock, midnight kind of time, and I'd be watching futures, or again, you can do with us with SPXL and TQQQ. These things are still plenty liquid overnight, and looking for the news when it happens there, because like we saw, jobs reports usually a big deal. The market didn't care at all. So it is
Overnight action.
100% the overnight action. So this is why, again, if you're going to swing, you just got to know swing appropriately so you know that there's going to be a big gap one way or another every single day. And if you're day trading, know that the ranges are probably going to be kind of tight and boring because there's even on the day that we had like the 3% gap up, of course you released that before the
Yeah.
market opened. So more and more things are just taking place outside of market action with no earnings season going on that we care about, no real economic numbers that move the market. Just be very, very cognizant that everything's happening overnight. So either trade it if you can, or just kind of stay out of it if you can and just do a little bit of intraday trading and wait. This will pass just like everything else does.
Hopefully.
Well, and Michael, I don't know about your thoughts, but I always see that, or many times I'll go to, I want to say it's CNN, world markets, I think is what it is. And what happens on their Asia market, I find tends to roll across the world. So if they have an up day in Asia, it tends to be green across the board. If it's a red day, it tends to be red across the board. So trading, after hours, 8, 9, 10 o'clock is good because you're trading when that Asian market is open. And so it will end up giving that volatility because we do have different time frames for each of the global markets. And so many times that you'll see a drop off in the US market when the London exchange closes. So I think that's a good thing to also keep in mind with 24-hour trading is the different time frames of the different markets being open.
Well, yeah, because they're very, especially in periods of like global events, they're all going to be very correlated. One doesn't move in advance of the other or anything, but the fact that you can take these bets anywhere, they're all very, very correlated. So I know, especially for Forex traders, they'll often split up their day to Asian market open, London open, and New York open, and know that there's going to be a bit of volatility around each of these segments. So I know a bunch of systematic traders in the futures environment that does the same thing. They do like, opening range breaks are a very common way, and we'll talk about the strategy I've built all around that, a very common way to trade. So what they'll do is they'll do some sort of opening range break system that happens when the Japanese market's open, and then some sort of opening range break system when the London market opens, and then another one when the US market opens, just by amplifying that amount. And the other thing that is interesting to me about overnight trading is the liquidity is lower, and that's a lot of people think that's a bad thing, but it's actually a good thing, right? Because we don't need a lot of liquidity. We're not institutional traders. We're trading a contract here or there. So when you have lower liquidity, you generally have a lot faster moves. So there is some benefit that you can have to that. But yeah, absolutely. I know a lot of traders that trade specifically, the open of the Chinese and Japanese markets, and then the open of the London markets, just knowing there's like these liquidity bursts that happen as their markets open, and there's a whole bunch of orders that flood through, just like happened in the US, just to a little bit of a smaller degree.
I also noticed something interesting that I used to always check the Economist cover on Friday mornings because they used to always put it out on Fridays. And now they're not putting it out on Fridays. Barron used to always come out on Saturdays. Now it's not released until Monday or Tuesday of the week of the covers. So it's really interesting to see that they are somewhat delaying their covers. I'm not sure if that's, I'm going to see what time the Economist cover comes out today, if it comes out today, because it's interesting to me that they're no longer putting it out early on their website. Just something that I noticed after following it, my goodness, for about 6 years. All of a sudden, the day that they're releasing it is interesting.
And they're tired of getting memed on so much, right? Like, what was the last one that the dollar sucked? Like, way down here?
No. Well, that was a while ago now. But we had an attack on the world economy was the 14th. And then we have Operation Blind Flurry for Trump on the 21st. So it's interesting why America and Cuba could cut a deal. So now they're talking about potentially turning on the lights again with Cuba.
Yeah, we turned the lights off on them.
Oh, well, this is I gotta share. I know we're opening in a second. I found this. I post a bunch of stuff in our WhatsApp here, and I do it so I don't lose it, to be honest. But yeah, this. So this is how can I grab that? I think if I do this. So this is an email that I got from the creator of the Stock Traders Almanac, right? So it started with his dad, who created the Stock Traders Almanac like 60 years ago. It's the thing we always quote. Oh, I think I deleted that. This thing we quote all the time for the seasonality. He's the one that invented the concept of the Santa Claus rally and the sell in May and go away and all of this stuff. And he posted this chart to his followers and to me as well. His name's Jeff Hirsch, if you just want to look him up again. I highly recommend. Every year I buy my Stock Traders Almanac. And he has this chart that he built. And this is just a composite chart of every year that Trump's been a president. So you're only talking 5, right? So it's not a huge amount of data, just FYI. But a very common pattern that you can see here is, and we'll overlay this with the SPY, is a nice push up from the beginning of the year. And then around March into April, something crazy happens. And then at the taco, he has put right here, taco spring bottom, where in April he goes, okay, let's, pop it up. Now, this is probably going to be messed up a lot by COVID, which, he was president during, and that happened in March. That's probably going to skew this chart a little bit. But the idea to me makes sense. It's the same reason I follow a lot of seasonality around the election, is that if you're going to taco and reverse any strategy or any policy that you have that people don't like, you're going to want to do it in like the spring because you have midterms coming, right? So you're going to want people to be loving life into midterms if you're going to want your party to stand a chance. So yeah, he just wrote a little bit of thing, but I think the chart kind of tells it all, right? And I love this. He follows up Art of the Deal seasonal edition, where, right, always cause your nonsense earlier in the year. And then as you get closer to elections, always, go back on your nonsense. So if this chart holds through, we are sitting at or around the bottom for the year. And this actually, if you line this up with the midterm seasonality, this lines up as well, where people start to make really favorable policies about how much they're going to help the people, and then look how great we are. And that starts to happen now, and then it trickles out all year. And you get back up to the high of before, whatever nonsense he caused in August, September, which I don't think surprised anyone because the election's in November. So you're going to want markets to be hitting new all-time highs in September, October, November to kind of get everybody back in gear. So just an interesting chart from the GOAT of seasonality, like the inventor of seasonality, is thinking that we're getting close here.
I'm just checking the USO trade to see where the levels are here. still at 1587, but starting to see that it's curling back a little bit. XOM curling back a little bit as well. So let's see what they have in store.
SPY's, interestingly, right? So we had this prior high. I think this was right after. This was 9 o'clock. So big push up there. Came back to retest that low, and we're sitting right around that area right now. So just keep an eye, what 252-ish or 652 on the SPY. That'll be interesting. And then all the way down here at 650. That's the lows that we've put in the pre-market. Those are for me, just looking at the chart, those are the most important areas. And sadly, now that we know that there is not only Trump, but look at this, every dude who has Fed anything in his name is talking this afternoon. Cork, Marin, Jefferson, Barr. Like, come on, dudes.
Inflation.
Do we care about any of these people, though?
Yes, because the Fed focus is back on about potentially raising rates.
Yeah, but do these guys, like, I never know which ones matter. There's a whole bunch of them that don't even vote. Like,
it doesn't. Well, they all get an opinion. Let's be honest, right? The way that the Fed works, right? They all get the opinion. They all sit around the round table, right? Each one gets a chance to talk. There's some that vote, there's some that don't, but they all get a chance to talk. So, does some matter more than others? Yeah, I mean, of course, the one that matters the most, Jerome, right? But at the end of the day, they're all talking about inflation going higher now. They're all concerned about where things are heading, and the complete path that they gave us, let's say 3 or 4 months ago, is no longer the same path, right? This is where it gets a little bit difficult because you're having a changing monetary policy with a fiscal policy that is trying to create growth at the same time, start wars, right? So it's very difficult times for the Fed.
Do you see
I wouldn't want to have that
ripping?
Yeah, BITL, Lovesac is moving up on earnings. Lovesac is another small cap that's moving to the upside. And with the bank rates, you're seeing as well that they are talking about raising rates around the world. You heard it. Japan did it. Australia did it. And now you're looking at European Union doing it. You just had the financial minister of Canada saying, hey, we need housing prices to come down. Well, one way that they do that is also adjusting the rate, because if they raise the rates, then the purchasing power goes down. Then obviously the prices drop with a housing crisis in Canada. And so they could do that in the US as well with, trying to tighten up the economy.
We will see what happens there, as the home builders kept getting a takedown yesterday, and we look to see further takedown there as sellers are outpacing buyers more than ever in the market. We will see what happens there. I guess people trying to sell them homes out there, but they're older homes, and people don't want the old ones. They want the new ones.
And the newer ones are cheaper. In Florida, the newer ones are cheaper than the older homes.
That's where the competition is, really. You have to create incentives. That's the only way you're going to get an old home sold right now, is if you literally are giving money for people to take your house.
Yep, seller's credits.
Yep, that's the only way. We'll see what happens out there, guys. Market continuing to struggle here. Here's the bell. Let's see what happens towards the open here. Of course, the way the market's been, it's been opposite reactions at the open for pretty much a lot of times the first hour and a half, and then we get a flippening, right? Either it's a push up and then a fade the rest of the day, or it's a pull back and then the push. So watch out for the flips. We've already done about 6 or 7 points of the ATR range, which I keep talking about how that just happens overnight. And then what do we got left now? Right? Not much. AMD continuing strong out the gates. That's the only thing doing well for me in the market madness competition. So AMD going higher.
Yeah, so just right off the bat here, look at the first minute of the open. Things did a little bit of a sell-off. right off the bat there. We'll see if that reverses a little bit later on. Funny enough, when I was away yesterday, the system that I've come up with, that again I'll do a little presentation on. We'll do some videos on for the opening range break that I built hand in hand with Claude. Kind of forgot I don't have to do anything for that to set up. It will just run like in perpetuity, actually forever. Like it would just, if I croaked, it would just continue because it's using a static list of the S&P 500. So it did some trades yesterday while I was out, and we now know it works, because the problem was before it didn't, it wasn't pushing trades. But now that it's all fixed, in theory, because it's all cloud-based, all up in the server, it'll just go forever. So we will see. Again, those will happen after the first 5 minutes, because it's a 5-minute opening range break strategy. So as things go through, you'll start to see some of those from me. And again, I'll talk about them. They're all going to be opening range breaks on S&P 500 names. I did that for like a simple liquidity filter. And then again, if it works, we're going to do some videos on it. I've got some presentations on my first ever, which is one thing I love about Trade the Pool, is that we can test this. My first ever, me combined with an AI system in order to build these. I had it do a lot of the grunt work that's required, like tons and tons of back tests while I sleep. But broke new highs there on the SPY and then right back down again. So we're just we're
Like,
feeling it
out there, guys. All sectors in the red here from the open, except communication services and energy, of course. Can't fight that energy trade as it just rockets higher here, led by drilling stocks. I've talked about these smaller ones like RIG, PTEN, SDRL, BORR, right? We'll see if those can continue making a lift. EMP stocks also making a lift, like ConocoPhillips, EOG, Oxy going higher. And I keep saying it, man, we should have had that Warren position. Now it's just been nothing but straight up weeks in Oxy. You're going to see this thing break the high and then be like, oh, Warren wins again. Should have been winning with the Warren there. As
I'm on in a QQQ futures short at the moment, just playing around with it. But watching NVIDIA drop and knowing that that's going to affect everything, saw that the SPY was lagging a little bit as well. So,
well, where's the trouble areas, right?
NVIDIA can't break above those bigger levels. We're hitting a major exponential moving average, and it's still looking short biased to me. Looks like I might get stopped out here with a little profit. Always nice.
Looks like this Anna is making a third day move here, right? So I had big crazy move yesterday, pullback, big gap up today. I see randos looking at this, just huge break, trying to get over that prior day's high around 850, 860. That's a good one to keep an eye on. Nice push on Anna. I don't know what the story is behind this one, but from $2 to $10 in just a couple days.
And it also has 2.7 in the float. I see it only at 860.
I think, was it an overnight high? No. Yeah. I don't know.
To 20, did you say?
No, yeah, I thought I saw a high of 10 there. Let me do. Might just be a bad tick.
Maybe it's going there. Maybe you just had a psychic moment.
Yeah, there we go. Premonition. No, I'm not seeing that tick on. It's part of the problem with some of these cheaper guys, right? It's the bad ticks are even worse. What a pain. I just remember
is doing nicely on earnings in the open. It had earnings this morning. Seeing that the bigger money is actually at 1309 and below. So looking like that might have some legs there, and that's also a smaller cap for Love.
They make like coaches, don't they? The Love Sack. I think it's like coaches or beanbags or something funny. We looked at this before. Yeah, a huge gap there. I wonder if they signed a deal with OpenAI for coaches. Still just, feeling out this opening range break. I think I saw us down as low as like 1.2% in the pre-market. and then as high as just down 0.6%. So that's a half point range, which normally is a wide range, but in this market is kind of a tight range as well.
Is it time to continue shorting Bitcoin as that looks to rip higher? I've talked about the biddy trade. That looks like it wants to rip higher on the weeklies. Weeklies look really good on short Bitcoin.
So there's Iran news agency. So Iran has officially responded to the U.S. 15-point proposal.
That's already been said.
Just they're on their Iranian
Good
news talk
Lord.
about it. They're not, but the tweet doesn't say whether they responded positively or negatively
They
or
did
up
though.
or
They gave
down or
5-point plan. Come on,
now
guys.
it's
We
a
gotta keep up with
15-point
the
plan.
news.
Well,
We
now
gotta keep up with the news
but it's a
there.
15-point plan now. So they added
So
10 points to it.
So they
Probably
responded with their 5 points yesterday. So maybe they're just reiterating on their TV about that, but nothing new there at least. Things that we already knew about. But one of the major things that they said on their 5 list was that they wanted sovereignty over the Strait of Hormuz. That is never going to be allowed. The Saudi Arabia would go absolutely ape. They'll go crazy. Let's just say that much. And no one in the Middle East is going to allow Iran just to own the Strait of Hormuz. So I think at this point, that's why Trump turned around and said, "You guys need to get serious," because that's not even a question, right?
So we got a bunch of trades on here. They all flopped in right at the opening range break mark. So we can keep an eye here with. All right, so I'll just go through them. MAR to the long side, MOS to the long side, FISV long, FTNT long, Adobe long, Delta Airlines long, all longs, KRR longs. Okay, so there we go. I think that like probably taps our buying power pretty. Where is it? Yeah, so that just completely ate up the entire buying power. So there we go. So we're long those 7 names and we see what happens. So the only exit for them, as most things that I found work systematically day trading, is like a massive target. I think it's like a 5-hour target, or we're out at the end of the day. Those are the two things. So there you go. So it all just kind of like just pop through there right away. Oh, and Oracle through there as well. So Oracle to the long side.
Oracle, you're taking some shots on the beaten down software names.
Yeah, this system doesn't even, and this is one of the reasons for it, doesn't even look at daily charts. This is purely intraday. It's there's a couple candles that kind of have to set up, but yeah, it's a pure 5-minute opening range break trade set up just right off the bat. So we will see, all to the long side. So of course I will benefit if the market finds some kind of a bottom here, but just not doing. The SPY is still almost essentially inside of its opening range break.
Yeah, it's doing nothing. It's almost paused right now. What's leading to the downside? The trade that is affected the most when oil goes higher, the industrial trade, leading the downside here. Basic materials also getting hit hard here. So basic materials just had 2 days of strength. Now it's getting a huge day of weakness here. So just be careful out there. There goes your copper trade, right? It bounced a little bit and now getting completely flushed. Tough trade there in the metals. That's for sure. All right. All right, let me go ahead and see if I can get that up here.
Yeah, so I'm looking through, nothing really, and this is probably why the market hasn't moved. There's really nothing standing out coming from the news front. No one's really talking about anything.
All right, guys, it's time to check in on the bracket in the leaderboard. Let's take a look here as we take a look into the Elite
Oh,
Six here. We can take a look at the first, and of course, let's see if I can get the. Sorry, Lovable is struggling here. Let me hit a refresh. See if we'll fix it. Still struggling. All right,
Let
we'll
me
come
try
back
it.
to this.
Bring
We'll
on
come
mine
back
then.
to this.
we'll get it.
Lovable.
We'll get it.
There he goes. It woke up. There it is. Avery at 143, 141. Of course, BATL killing it.
Killing it.
As the rug pullers continue to pull ahead. And Money Mitch down 44,000 now. As of course, Microsoft and Palantir, not Palantir, as Path continue down there, dragging down my positions there. And then Chris H up 537, but beating here Airplane Jane down 26,020. Need you to come back, Jane. Where do we go pushing? What do we need to push?
We
Oh,
need to smash the oil.
you're short oil. You're short
I went
oil.
short
That's what
oil.
happened.
Yesterday was a good day. Today, not so good.
Oh, you might want to tell Trump that. If you have some insights into the White House, let him know. Be like, hey, we need this to come
Oh, yeah.
down really quickly.
I think that's if there is something that's going to turn
The
real
day is
quickly.
so young, but I
it'll
don't
be
think.
on.
I think Chris is definitely going to kill it. I think he's going to kill it.
We all know who's really killing it. It's Valerie with that consistency up another 30,000. So killing it there, Valerie in the portfolio managers looks to be pulling through. And of course, this will lead to the championship where there'll be 3 that face off for the championship. So stick around. Of course, that'll be next week, and we'll see what happens with this. And we'll just kind of tune in, guys. Of course, I hope you guys been enjoying it. And there are some players that have even more money than I think Kevin. So it just goes to show you guys that you guys out there are also just as good in the competition. We'll see when this loads up, but there it is, guys. Not doing too bad. There it is, 448,000. Michael, that's you. No, they just picked you, my friend. It's the other Mad Quant out there. So shout out to the Mad Quant out there doing really well. 448,550. So shout out to Mad Quant, the average Joe, or the Cup of Joe. That's what we named him yesterday, Jane.
Right? That's right. Cup of Joe.
And then Watt E doing really well there as he jumped on that BATL short, 14,000 shares. I'm sure that's helping him take the lead. All right,
Well, I
we'll
was
see
just
what else
looking
is
at
out there, guys.
BATL. I don't know. It looks like it's trying. It had a nice
We'll
pop
see.
off yesterday's low. Looks like they just gave a shot at breaking that opening range. Got kind of slapped back down just a bit, but it gets through 7. Crazier things have happened, especially just with this stock.
You will see. The only thing is Microsoft is still on a fire sale, as Microsoft just doesn't want to come back. Looks like software's still on sale.
A little bit of a bounce today. It's trying to dig in there. Just looking.
The IGV looks ugly, dude.
Yeah, ooh, there's a
It could
SPY.
reverse
Nice,
right off the bottom, but it is literally as ugly as it can be right now.
nice pop in the SPY. Nice green stick going on. Things are starting to rally here.
Well, you know how we do
don't
it. We
know.
rally for the first hour and a half and then fade. So here's your rally. Let's see if we get it. I'm gonna probably
Let's
take
see
some
if
future
there's
trade on it at least. Let's see if we
See
take
if
a
there's a
look.
reason here.
The future. Into the future.
Can I get you
Joanne
playing
is-
around now, Mitch?
Oh, I've been playing. Been having some fun. The one that was scary last night was the WTI open 15 lots, and little did I know that was a lot of money.
Ooh. Yeah, that's the thing with futures is that they have such weird tick values that like one contract on one is like $10 and then a contract on the other is like $100,000 and you just go
See my
"Shit."
eyes when I first opened it up. I was like, okay, let's
it's
be pretty tight with this risk here. But it
it
just kept going up. That's what I love about it. It's a real trend trade like type of vehicle. It's not like what I was using, and I'll just use deeper time frames, like 4 hours, 2 hours, half a day, doesn't really matter. And then I'm just trying to see the turns, play the turns, and see what happens. Like right here, you're getting a turn, right? Who
Yep.
knows how long the turn lasts? But you can play turns, right? And you can just use simple moving averages or things like that, right? But you can do the same thing on the SPY, right? You can just trade the
Well,
SPY if you wanted to, right?
that's the beauty of all of this, and it's the beauty of market makers not allowing arbitrage across any of these, is that you can trade the futures or USO or some sort of leverage version of it, and it's going to move one for one, right? If the leverage is going to be more than one for one, obviously. But if you trade an ETF, if you look at the SPY and you look at the ES and you put them up, nearly tick for tick, they're going to be exactly the same. And it's because
Mhm.
if they weren't the same, there's free money there. So there's all of these algorithms
Exactly.
looking all the time for any kind of discrepancy at all, and they'll just take the trade and they'll have it revert. But very quickly, RSP, your average large cap stock, green today, just flipped green there. So the SPY lagging us is just showing us again it's big cap tech. There's some XLK is down, but if you look, financials up on the day now. We have healthcare up, we have retail up, we have biotechs up. It is just tech's weighing us down. So one of the big guys, is it NVIDIA? Is that what's kind of crushing the SPY?
It's kind of weird because you have AMD ripping higher.
Oh, sorry. I thought I was muted
No,
there.
you're good.
But yeah, this is what we talk about, why we look at equal weights all the time, is because right now, if you're looking at the SPY, you're saying, oh man, it's still down in the day. But most stocks are up. So this is why, Mitch talks about it all the time as well, is look at the equal weight version, right? Look at the equal weight version of whatever you can find. And there's tons and tons of ETFs out there. And this is actually a really good use of AI. So let me actually just go, and I'm going to do this right now and show you guys. You go to Perplexity, and you just say, list all equal weight
NEM, Newmont
ETFs
going higher. Some
like
gold
the
names.
RSP. And it'll just build you a list now. And you can just
Mhm.
create your own. Here's all the equal weight versions, and take a look at these. And you'll notice that if you ever see my watch list, they combine both, because just looking right now and saying, okay, the Qs are down almost 0.75%, and the RSP is up 0.2%. That is an insane amount of information, because you've just quickly, by just looking at two numbers, go, okay, most stocks are having a bad day. There are some big cap tech names that are weighing down these particular indices. So if I'm looking for strength, I'm going to look somewhere else, right? And showed you guys all the stuff that the system bought off the open. Let's see where we are. Let's go through here. We're up $30 so far today. And again, just, I'll show you guys this account as it goes. It was up, 110 yesterday, off 2 trades, and up about $30 today, and just maxed out. So we have 8 trades on the go, and we have no buying power. So there'll obviously be no more this week. And if this passes, if it doesn't, I'm still going to make the videos. But if this passes, I think it'll be a really cool video series that I'll probably do here, and probably something on my channel as well, because I think there's a lot to be learned from it, where again, it's me and an AI. If I had just relied on the AI, I probably would have already blown up the account on day 2. But combining those two things made for potentially a really interesting strategy, with not just the trades that are getting entered automatically, but like scale up, scale down rules, things like this. So I know when to increase position size and decrease position size, and throughout. And the beauty of it is, it was essentially, I worked all day like I do, and then I have a list for Claude, and I say, you have all night, go nuts, because each of these back tests take a long time, because it's crunching like millions of lines of data every time. But it doesn't matter, because I'm sleeping. So it's like, have fun.
And that's where the
the
back testing, that's also what happens though too with traders. If traders don't analyze their own trades, how do they improve? And that's where the back testing comes in. You
Mhm.
do your own personal back testing. What's the best time for you to
Absolutely.
trade? What's the best instrument for you to trade? And is it going long? Is it going short? So it's all
Well,
about the back testing and analysis, statistical edge.
and that's what I always say too, is that people, if you don't want to be a nerd like me, I totally understand. There's not a lot of people that want to be nerds like me, but you should be generating your own data set. I pay thousands of dollars a year for external data sets. But if you don't want to do that, then you should be every day generating your own data set. And it now, in a world today, it is as easy as exporting the trades from Trader Evolution or your broker, which is so easy. Once a day, you click 2 buttons and just throw it into an AI thread. Just every day, just here are today's trades and throw it in. And just, save these for later. And then with something like Claude Cowork, you can tell it to make you a spreadsheet. You can tell it to analyze the data and come up with ideas to become a better trader. One process that I'm working on building, this will be part of the video series I show, is the next process of systematic trading is to make sure the trades that I'm taking in the real world are the same as what the back tests say I should take. So every day at 2 in the morning, Claude's going to wake up. It's going to grab the trades from Trader Evolution. It's going to rerun the back test, and it's going to grab the trades that should have happened. It's going to reconcile those. And if they're wildly different, it's going to flag them and yell at me and say, hey, what you're trading in real time is not matching what we have back tested. And that's huge. That could be a coding problem, liquidity problem, all these type of things. But that is the important part of this work, but it's also an annoying part of this work. So I'm going to have him do it because I'm not a detailed oriented person. So it's not something I want to do. RSP continues to rock here. We're up 0.3%. SPY is getting fairly close to going green at this point, only down 0.4%. We were down 1.2 a bit there with XLK, Tech, and the MAGS, MAG7 being laggards here, right? And that's, you can see that with the RSP versus the SPY, but it's definitely the MAG7 that's holding us back.
We will see what continues today in this market. EEIQ, one of the high flyers of the day.
Ooh, look at IVG really popping here.
Yeah, it was off the bottom there, so they just played the bottom on the daily there. The question is, it's still an ugly looking chart on the daily though. Really ugly.
Well, again, I'm not a big head and shoulders guy, but
a bit as
That
well
doesn't
here.
look like a head and shoulders, dude. Come on.
you got your shoulder here, you got your head here. Potentially, you don't have the shoulder yet, but if you get a little bit more of a bounce.
Dude. Come on, look at the weekly.
Well, yeah, if you look at a 10-year chart, it's not going to look like a head shoulders either, right?
That's the pattern right there. That's a bearish pattern right there. And if you guys don't know what that is,
could just say it's at support too. Like it's a huge support zone for it. But yeah, it's like you just got to pick your time frame. You don't change time frames till you get a chart that you like. On the daily chart, it's starting to set up a head and shoulders here. It's got to have a couple little days happen here as well, right?
Looking to see
show up in the middle of the chart.
What is really creating the lift in the SPY right now? Like, what do you guys see that's creating this lift? Because right now I'm not seeing any of the big majors moving up.
Head and shoulders doesn't show up in the middle of the chart, guys.
Yeah,
you can't
show up right at the bottom right here. There's no rule that says you can't.
What's that leaderboard showing now, Mitch? What's the leaderboard? You got a nice move there on Microsoft.
You have to go back over a year.
The book if you want. I'll pull out the book. I'll pull out the book if you want.
Grab it.
All right.
Grab it and say that you have to go. What if you go back?
Head and shoulders year and a half show up at the top of trends, and inverse head and shoulders patterns show up at the bottom of trends.
And we have been downtrending for 9 months now. Is that not enough of a trend for you?
The top is 120.
You're right. So we are in a massive drawdown.
Inverse. The smiley face.
We're in the middle. Look at this chart. Where's the middle? You're at the bottom of the chart. Yes, if you scroll back far enough, every chart there's no chart that's at the bottom ever then. The
That
S&P
actually looks
500
almost
is
like a triple
never at
bottom.
a bottom.
There's some charts that are at the top.
Bottom chart.
Yeah, but then you would never have an inverse head and shoulders unless it's at an all-time low. You're saying inverse head and shoulders can only happen at all-time lows? Show me that in the book. Because that means the SPY can never have an inverse head and shoulders ever again for the rest of history. And we'll never talk about an inverse head and shoulders on the S&P 500 ever. Frank Capillari is very mad because he draws inverse head and shoulders all the time. But yeah, so just say, because this is definitely we don't know if it's a bottom of the trend till after the fact, but you have a 30% drawdown, a large bear market that's occurred. That's a downtrend. It's happened over like 5-6 months. That's a downtrend, taking a look, going back and looking at the systems here, up $87 right now. SPY getting closer to that green, only down 0.4%. RSP holding up 0.25% here as well. Yeah, across the board, things are looking good today. Question is, do they hold? And then, like we were talking about, after the close, we've got Trump. We've got all of these FOMC jerks, right? They start at 5, 7:30, 8. These are all my times. So just movement hour. So these guys don't have lives or like wives they want to hang out with. They all want to sit around after the close and talk economics to try to be famous.
Yeah.
So good for them, but they'll spice things up for sure. So yeah, that perplexity again that I chatted about. So here's a bunch, right? So this is what it came back with. Again, I asked, find me a whole bunch of equal cap ETFs like the RSP. So it found an EQUL. That's a new one. I'll look at that. That's S&P 100. So your top 100 names. It found all of these. So this is energy, healthcare, industrials, consumer staples, consumer technologies, utilities, and ESG screened. Does ESG still exist? I thought we were well over that. Equal weight, ALPS. So that, yeah, you can just find, this is the easiest way to make a watch list. So if you don't have an equal weight watch list, I recommend it because you'll get a better idea of what's happening in the overall market if you're looking at the equal weight than if you're someone who just always just looks at Mag 7, which is going to line up really, really well with the SPY because the SPY is like 30% the Mag 7. Just going through these lists just to try to figure out which ones are doing well and which ones are doing poorly. MOS is kind of a little bit of the laggard here. Adobe is the winner when it comes to P&L. DAL not moving really at all. But yeah, Adobe's really, really taken off here. And then MOS looks nice. This is something, if I was a discretionary trader, I'd kind of look at this bull flag and maybe take a shot at. Oh, SMMR or SWMR, the swimmer guy. That's probably what we're talking about.
We got the SPY fading a little bit here off of the top.
Yeah, she's coming in. So is that a pullback for a larger move, or is that a rug pull?
Right now, the bigger volume is still down at 651.28. If we pull it back, that's just since open. Let's see we might see that we have a bit of a bounce here.
Ooh.
Tightening up my stop. There we go.
Wow. Yeah.
All right, so reading from the book here, wrong and right on both of the answers there. So we'll give Talk the point in the chat here, as the book states that essentially head and shoulders patterns and inverse head and shoulder patterns in the middle aren't, they don't have statistical significance.
Well, no head and shoulders pattern has statistical significance.
Well, they're saying that the ones that work are the ones at the top or the bottom.
Yeah. So, but do they mean, does it say all-time lows has to be the bottom?
It just says, so it says often seen at the top or the bottom, the one that work. That's
all right. So,
but let me get to the more the consolidations part here. The head and shoulders pattern, it can be occurred within a consolidation rather than at the end of a trend, but such occurrences are rare and more likely a series of triangle or rectangle with a false downward break at the head. So
Right.
kind
So
of
I
what I
guess
was pointing to on the weekly and what you were pointing to on the daily, I guess.
yeah, because I look at a 30% 9-month downtrend as a downtrend, and this would be right now the bottom of the downtrend. I don't know if it's going to be. No one's going to know it's going to be until months later, but that's a pretty epic downtrend, right? It's existed for, you could have had a child if you conceived it at the top of the downtrend. The child would be coming out right now at the bottom of it. So if you can make a human in the length of time that the trend persists, I'm like, that's a pretty good trend, right? A lot of time. We both been there. Those things don't come super quick. Right. So I just look at that and say, well, if it holds, it's holding in a great spot. I don't know why our charts are like this. Hold on. I don't know if it did a special dividend or something, but right. So if you zoom out, you could look at that as a potential huge amount of support going back like 2-3 years. So if we're going to see some sort of inverse head and shoulders kind of action, and it happens right there, that would make a lot of technicians a very happy camper, because you're buying at demand. You're buying at a place where people have bought, what, 1, 2, 3, 4, 5, 6, 7, 8 times before, give or take, right? These are going to be rough, and this isn't a dividend adjusted chart. Also, another thing that's interesting that usually confirms head and shoulders, look at the volume spike down here in comparison to what volume normally was, right? They're really...
That was option expiration, right?
Well, no, I'm just looking. This is like months, right? So for months, volume's been very accelerated here.
Yeah, I mean, all the money managers are loading in software. If you want to jump in that party, you're with them, right? That's what the money managers are doing. I can see them.
And also the insiders. Let me get this. Did you see this?
CNBC.
Insider purchasing in the S&P 500 or in the NASDAQ. Let's see if I can find this. I just have like
loading the boat, saying that AI is not going to disrupt them. Question is, will it?
Well, and yeah, it's like who is the people that are the most in the know, right? Is it, I think it'd probably be like CFOs. I think someone did a study, and when the CFO buys, it's way more impactful than when the CEO buys.
Right.
They know the
Which makes sense.
Like,
they know the numbers.
Because the CEO is not watching the numbers like the CFO.
Yeah, he's watching.
So yeah, this chart.
He's not watching numbers. So
here, so this is from Sentiment Trader, and this is the just amount of. It's just a guy made a little indicator of the amount of buys and sells of insiders within the NDX, so the NASDAQ 100, and you can see sells or buys usually pop in near bottoms, sells usually come near tops, but again, sells are weird to me, because sometimes this is the only way the person gets paid is by like vesting RSUs and things like that. But insider buys are pretty much as high as they've been since, this would probably be the 2022, 2023 bottom. So this isn't just software. This is the NASDAQ 100. So this would include, right, all of your Metas and your all that kind of stuff too. But the guys who own the companies, buys, and I've talked with this before, buys to me are more interesting because they're a sell. Again, you could sell your stock for a million reasons, but if you're buying it, that means you're just taking like after-tax revenue and you're putting it into your company. They're not going to have a crystal ball like no one else does, but it's a huge idea of, hey, this thing is, the CEO has confidence in it. They're taking money out of their pocket that they don't have to. They could buy things with, and they're putting it into their stock. So, it's a vote of confidence anyway. The guy could be insane and wrong, but at least it's a vote of confidence from the guy who owns the company.
For sure. All right, guys. Well, I'm excited to see what's going to happen with the leaderboard. Pulling for you, Mitch. I hope that Microsoft screams higher and BATL rips higher too.
There is no.
Yeah, you need like a battle buyout at like $30 a share.
Yeah, there is no pull. Yeah, no, it's Path. It's really Path. It's not even Microsoft. Path is what's destroyed.
Okay, Path. All right, Path. All right, sounds good.
Unless they come out with a new Agent AI in the next 5 minutes.
Probably eliminated from. We'll be on the sidelines, you and I, Michael.
We'll talk our SPAC. It'll be fun. Have a good
Yeah.
one.
Yay. All right, BZAI also ripping to the moon. If you want to take a look at that one, there's some high flying penny stocks: EEIQ, BZAI, some names out there just ripping.
XLF TAC is talking about another one not doing anything, right? So we're down here since kind of the beginning of the month, and now we're just chopping about, right? This isn't
Yep.
like with anything, like like with our head and shoulders talk and all of these different things. None of this, a head and shoulders, not a head and shoulders until the neckline breaks, and like this is not a bull flag or a bear flag or anything until the pattern's confirmed. And that's one of the big takeaways I always like to give for people who are new to technical analysts. A lot of trying to predict patterns before the pattern triggers, right? Like, some people could look at this and say it is a bear flag. It's not a bear flag until it breaks, right? Because you don't know what's going to
It's
develop.
in
while
a
the
bear
pattern
flag,
develops.
though. It's in a bear flag. To say
Yeah,
that
but
it wouldn't be in a bear flag would be wrong too. It just hasn't confirmed direction. It hasn't done a breakdown or a breakout, but it isn't a bear flag.
and it's all about how nitpicky you want to get with the pattern, because I think the flag has to be a certain length of time compared to the pole. And again, it's why I'm not a big pattern guy, because I've never seen a back test that proves these things actually make anyone any money. I think it's more of like anything, it's a context involved with anything. It's why I like kind of rounded tops and rounded bottoms, because they take a lot of the BS out of trying to like actually like move the lines in a way. It's, show me the guy who just trades pure technical patterns and makes a ton of money. I'll be interested to talk to him, because I haven't met him. It's always been some combination of patterns as, support and resistance combined with some sort of system of an indicator or trend following or something to that degree, right? It's why a lot of the richest technicians, like that Richard Dennis guy and all this stuff, are, they'll use patterns in a way, but it's mostly in a way that they can kind of test and confirm. So, senior Iranian official: diplomacy has not stopped, and if realism prevails in Washington, a path forward shall be found. And that guy talks like a Shakespearean idea, right? Like, geez, relax, bud.
Some people in the world, they're actually educated a little bit on language.
I don't know if I hear someone
versus our
use "shall"
president.
too much in the
Versus
real
our
world.
president.
Oh yeah, well,
you know what I mean? Like, dude,
like your guys, yeah, that's
top
expected.
notch, top notch. My
Tiger.
toddler.
I want to look at a tiger. I know Steve liked this one for a while. Oh, probably not anymore. No, I'm looking at this a while.
Tiger.
See, this is
Isn't that isn't that China? Isn't that a China brokerage?
I think so. It's like a China fintech. I think it is.
Is that the one that owns Mumu, or is that that's a different one?
I don't know.
I
But
don't know. This seems China.
and just like this, and it's not to call anyone out, but this is the kind of language that as soon as I read, I kind of heavily disregard for as a trading, is that like Tiger will rebound. It's like, no, you don't know that. No one knows that. It may rebound. Maybe you think there's a high probability it will rebound, but doesn't have to, right? So just make sure. And it's kind of like too when it's like self-talk, right? Without getting all woo-woo with everything. If you start saying things in absolutes, then you
no going
probably
back.
internalize them.
Right? It's certainty talk.
Right. Instead of saying, "Oh, this looks nice here." You'll see that a lot. Traders will talk like that. This looks good, because they're giving themselves already an out of, I'm gonna buy this thing here. It looks good, and then 10 minutes later, it may not look good anymore, and they go, right, the way I go. And isn't it at support? Well, yeah, there's some support here, but then there was also support up there, which it cracked through. There's support right there, which it sold through, and there's support right there, right? It's one of this is another Brian Shannonism that I love, is that you only know that it's support after it's bounced. Until then, it is potential support, right? It is you could draw a line, But when a stock hasn't moved its entire existence, you could draw a line through the chart anywhere and you'll probably find a level of support. So it's not something that like really sticks out to me. Like this is a huge support zone. It bounced once right here. And then, a little bit below it, it bounced there as well. But support doesn't have to hold, just like resistance doesn't have to hold. Just because at support doesn't mean something will happen. You could say, okay, there's it's oversold. There's a probability that everything oversold puts in at least a dead cat bounce. You could then also say, okay, it's at some support that could add to your probability. You could do a weight of the evidence approach, but there is nothing in the world you can do to know what the price of any stock is going to do. It just, you can't do it. And there's nothing you can do to ever change that, right? The best strategies in the world are like 50-50. Like you're flipping a coin on every trade you make. And as soon as you internalize that and use that in your language, that will help, right? The wake up in the morning and just go, no one knows anything. I don't know anything. No one else knows anything. Now let me build a system and just take my bets based off what I'm seeing in the market. IVG, good relative strength here.
Yeah, it's just a bounce back trade, dude. I don't think that will hold. It might hold for a day, but there's still a lot of concern in software. I know I wouldn't want to be caught dead swinging software right now. But that's just how it is right now, guys. It's always the intraday bounce back and then the end of the day sell off. Like it's like a repeated pattern, right? It's not like it's changed. It's the same thing. This is why overnight trading has been pretty much the only way, or fading the rip, right? So you got the rip. Do you just fade it here, right? That's the hard part.
If I had only traded my strategy this year that just bought incredibly oversold stocks, it would be a much better year. That's been the one that's been. Now, of course, you don't know that until after the fact, right? You have to trade them all. You don't have a crystal ball that the market is going to do absolutely nothing in a range like this. I mean, no one knew that this war was going to break out, but that's why you have multiple strategies. Thankfully, I'm doing well because the strategies that are underperforming are getting shadowed by this one that's really kind of outperforming, and that's eventually it will change. We'll become a ripper of a market again at some point. I don't know if it's next month, next year, 10 years from now, 100 years from now. At some point, the market will go up again, right?
At some point, there will be euphoria again.
Always is.
That's why I was calling it a bubble, and the bubble went poof. Now it's kind of questioning where do we find the bottom now?
We've gotten in a lot of arguments today, so I won't start another one. But I do not believe a 6% down move in the S&P 500 is a bubble popping. It's like I'm an old enough man to remember.
Has AI concern come in?
Of course it has, but is concern come in a bubble pop? Like, let's go back to the year 2000 and give some people some.
We had ourselves a nice rally since 3.5 year in the SPY, 97.68%.
It's about right.
That's a pretty good that's a pretty good bull market, right? I mean,
I would say the dot-com bubble was a bubble pop in which the market fell down like 37, 38%. I would say 2008 was probably a financial bubble popping where the market was down like half at one point. I don't think a 5% pullback. We're in bubble territory yet, right? So if we were in bubble territory,
that's the question that we talked about earlier in the week. Are we stage 3, stage 4, right? I know you don't really believe in stage analysis too much, but this looks like stage 3 shifting to stage 4.
Well, for us, we'd have to at least take out the highs of the last bear market for it to be a bubble, and that's all the way down to like 490. That's a long way away. Other than that, we're just hanging out after, like you mentioned, a nice run. We had a really nice run, and now we're just chilling. Right? You can see. I don't think it surprised anyone that the last pullback, right, came right to the high of the prior. And if you go back in time, this is kind of how it works. You have a bear market, it goes back down to whatever the prior cycle high is. So our prior cycle high is still sitting below 500. So it'd be a huge. Yeah, I wouldn't say we've had like a bubble causes a recession. It causes, a lot of things to occur.
I think we're leading towards it, right? At least for the time being, unless things can change, right? The economics are proving to be troublesome right now. Whether you look at the economics or not, right? You guys can see the inflation that's coming in now, where everyone's talking about stagflation, recession, um, job loss. I mean, there's just a lot of things that are coming to roost. The question is, will it? I mean, you never know that the bubble burst until it's like literally like you're looking at the corner and there's panic everywhere in the streets, right? It's one of those things where, yeah, it's another thing where you can talk about it after the fact, right? So,
Yeah,
is it leading
and you have
towards
to at
it
least be
right now?
threatening a bear market. Like we're not even anywhere close. We're like one fifth of a bear
Yeah,
market at this
yeah. I
point.
mean,
We
it's all
haven't
about
even hit correction territory. And
yeah.
every year, this is why I always tell people not to panic. If you look in history, pretty much every year, it's like I think 80% of years the market pulls back around 10% at some point. We haven't even gotten that yet. We're not even down in correction territory. Right? Most years, I think it's well over half. I'll get the exact number for you guys, but you have some sort of correction. We haven't even gotten that yet. Market's down like 4% or 5% from all-time highs. Let me get the exact number. What's our actual drawdown here? So it's all-time highs. Yeah, we're down like 5.5. So correction, again, wherever they came from these numbers, who knows? But correction is technically 10% drawdown, so that'd be twice as much as we're down right now
We
from
we
peak to
gotta knock
trough.
that. We gotta knock that out of the books, right? I think the percentage readings have to adjust in this generation. But that
Well,
would
that would
put
be
more.
amazing. That would just mean the market doesn't pull back as much as it used to. As soon as they adjust those ratings, let me know. That's probably when we'll actually have a bear market. As soon as they say, you know what, a bear market's a 10% pullback now instead of 20%. Like, okay,
No, I
now
think
we're
it should
going
be.
down
I
30,
think what we
40%.
should. No, I think what we should do is even push it further. That 20% is still just a pullback, right? It's the volatility is increased in the market. I think we're gonna have 20% pullbacks all the time now. I don't think it's going to be a unnormal thing to have a 20% pullback in the SPY moving forward. And as you've seen on the long-term chart, right? Because you have to really go back in the SPY to kind of see this. What has happened since pretty much, let's say, 2010, right? Increased volatility when we do actually get these down moves, right? Increased volatility, and they're faster every single time. Since maybe,
Well, and I think,
.com era, it took like what, 3 years to come down, right? And then
oh, yeah.
for us, the recent one that I would really call a bear market, that April one, is more just like, you know, just headline risk, right? That just kind of kept coming in with the tariffs. But in this case, like, the pandemic, we actually had economic things break, right? Like, so I would say that would be kind of where you got, 2021 to 2023. But what was that? That was what, 1 year. That's how long it lasted, right? So I think we're seeing faster and faster bear markets, and that's part of the volatility in the markets.
well, and news digests faster, right? Like, so the
Yeah.
2022, 2023-ish, that was kind of the longest one, but we didn't really see any, wide breadth of huge layoffs and people without jobs and all of that. Like, we kind of
We just took the fluff out the market,
did through it.
really. Let's
And
think
this is
about it, right? We took the
the
fluff.
argument. Well, a lot of economists are basically just making the argument now, and again, I don't, you guys know what I think of economists, but this one I kind of makes sense to me is that the economy now is so large that getting ubiquitous bad news is going to be much harder. You're going to have pockets of like a real estate recession or, an automotive recession or, a tech recession or whatever. But the fact that the economy is so much larger and multifaceted that getting this whole like 2008 collapse that like this was again, I'm old enough. I'm an old man. I was there. People were literally worried about the end of the world. Like, and it was on the precipice of is capitalism as a whole going to completely collapse? I have never felt anything like that since, except 2020. That kind of felt like that, but that was right. This a world huge changing. The world will never be the same after this moment. That was again for me. I'm not old enough for the year 2000, but it was 2008. I was working in the hedge fund space, and 2020. Everything else just feels like a pullback. 2022, 2023 just felt like a pullback in an annoying market. I'm not worried that the market's going to do another 2008. I think it's going to be more annoying for everyone if it does another 2022, 2023, in which if you look at the depth of that pullback, it wasn't insane, but it was annoying because it would do these sharp rallies back up and just come back down. And this to me probably bankrupted more traders than in 2008, because in 2008 people just shorted, made a ton of money on the way down. This you couldn't do either, because it had these there's just this churn action. It becomes very, very hard for trend traders, which is why you shorten time horizons and you day trade a bit, right?
Yeah, it's tough. It's tough, and it's just how it goes, right? What I think it's more tough is on the investors, right? Traders can get in, out. That's one of our best abilities, right? And one of our skills that we can do. Investors have to hold on and just bite down their teeth when they get these kind of turns. Turn off the news for sure if you're a long-term investor, because that's the easy way to get wrecked as a long-term investor. What's going on, Josh? Josh, how we doing out there, my friend? What's
Doing good, bro.
happening?
Doing it's been you
The
get
penny
you grow
stock
yesterday.
madness day.
Yeah. Dude, what's up?
Penny stock madness day, right?
Yeah. You had to go with market madness, March madness. You get penny stock madness here. So yeah, you
Penny
get
stock madness is here.
it's fun. Yeah, it's kind of fun when you get yesterday and you grow. You know the next morning you're gonna be looking at like 10 different tickers. So it was awesome.
And what
to
it like
see.
wakes up the degen spirit. They're all like, oh,
Yes. True.
Animal spirits, right? And that's how it works, right, Josh?
let's do
Next
something
thing you
real
know,
bad.
it's like the Wild West, and pew, 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 they're firing guns off left and right, and it's just it's all gung ho.
The tweets,
It would
let's be
be-
honest, right? The tweets start to get the buzz
Oh.
going out there, right? You
know-
saw all the tweets on YouGrow.
We
And
always
this-
used to joke at Trade Ideas, because we sold scanning software to find this stuff, that you would get like 2 week to a month like between each of these, and we just always joked it's people like refilling their accounts after the last one. They need a couple paychecks to come in, then they can move some money into an account, and then they can YOLO it on one of these, and then you'd get one of these and we'd get a whole bunch of cancels, right? Because there's nothing, it's a high churn industry we're in, right? So you would get a U-Grow or something crazy, and everyone would come and they'd want to buy a new scanner, and then blow up immediately, and then all cancel, and then they'd be like, okay, you'll be back. I'll see you guys in a bit, right? Because once the next crazy thing happens. But yeah, it's the wackos, it's the wild children that come in, and I hope they do great. They might not, but I hope they make a ton of money and then just fade off into obscurity kind of after that. But what are you watching today anyway? What are you looking at?
Yeah, I don't really trust anything. It's the thing. It's right now. I liked EEIQ was the first thing I was looking at, but it's just what you have a lot of the time when you get the perfect storm, which was yesterday. We were sleeping yesterday in pre-market into the first hour of the day for the most part. It literally was nothing going on, and then that's when you have that. That gives all the chance in the world for any play to run. Well, yesterday it was you grow, and then you don't expect it to do the continuation in power hour as it did, and then it did that. And so when you get that, the next day, at least as long as I have long been doing this, the next day it's gonna be you're gonna have like that. It's gonna wake up all those what oh, here we go to the moon tomorrow, and you start getting that aspect. I'm like, no. And this is what happens, I would say, at least half the time, if not more than half the time, when it's been slower as it has been. It hasn't been as hot as it was in January in the TCGLs of the world. So you get that slowdown, and you get one big mega runner, and everyone thinks here we go, we're going again. We're getting more TCGLs, we're getting more QMs. I'm like, no, we got a perfect storm yesterday. You know about perfect winter storm. You know how storm, whatever, rain, right? So it's like I always could think of us as meteorologists a lot of time, because we got to have all these things that kind of have to come together for that setup, right? For that storm to happen. And so sometimes I'll be analyzing stuff. I'm like, man, I'm like, guys, I'm sorry. I feel like I'm a meteorologist here. I'm geeking out into this, but this is what's really building up, and yesterday was it for UGRO. And then today, when you get too many tickers running, you get the mob shifting where you go from EEIQ to FCHL to GLND, then UGRO does halt back up. And then you're just moving from one ticker to the next, and no one can really gain traction. And it's just like a 1,000 horsepower vehicle that has skinnies on the back, and they just can't get any traction. It's just like sitting there spinning out and doing donuts. You can't get anywhere. because you're just going from one ticker to the next. So yeah, it's one of those days where I just sit back and wait. I'm going to see who wants the mob, who is going to get the mob, and who's going to actually stay up and that I can trust. Because right now it's almost just an alert show of, well, this is moving. Oh, now it's dumping. Well, this is moving, and now it's dumping. And you can't trust anything, at least as of now.
Yeah, and that's it's a concept that you guys talked about that I never thought of before, because this isn't really my world, of just the fact that these people are going to have short attention spans, right? They're going to buy something. If it doesn't work for them pretty quickly, they're going to sell it. They're going to move on to another one that was moving that day. And just, you get this, and it's funny because we talk about rotation all the time in like a more macro, broad sense of, okay, now they like, technology, and now they like financials, and now they like healthcare and all of this. And then you're talking about it's basically happening like intra-candle with all of these different ones. Like, oh, now they like this monkey named company, and now now they want the bear named company, and now they're like, and you'd see it in crypto too, where it's like you have this big this coin. What was it? On the weekend I saw up like 1,000%. It was sperm whale coin, I think, or something like that. And then they jumped to another one and another one and another one, and it's the same thing. So trying to predict, it's why I think Kevin's hangover idea works so well, is because he's the guy who's not watching TikTok. He's watching like documentaries on YouTube instead. When everyone's forgotten about their TikTok brain has forgotten about this stock, he's like, well, I'll short it and it'll drift back down. Yeah. And it's not as fun as the guy who's getting the dopamine stream right to his dome all the time. But most things, if it's not fun, it probably does well, right?
Yeah. Oh, 100%. Yeah. It's crazy how that's 100%. You just named I would say but very much, pretty much every small cap, micro cap trader, 90% of them you just described, I would say, or I don't know what percentage is. It seems like a high percentage of them, but yeah. And it's the thing. I mean, it's just one of those things you have to learn to get through. If you can just sit back and try to be systematic, like, and have something that you can do every day and not have to be plugged into and that's how it was at first. What are they doing? What's he doing? How did I learn this? Oh my God, how do you do? Oh, I'm going to do, and you're just all over the place, versus let's just settle down the process. Let's see what's working. Let's back test. And if you're actually going to learn this, and most don't want to do that. Most, even when I, do my one-on-ones, that's one question I have. I always feel like I'm a doctor, and I'm asking them when they come in for the yearly physical. All right, how many drinks do you have a week? And you can tell they're always like, I ask them, do you track and journal? They're always like,
But yeah, they're like, I know I should. I'm like, yes, you should. Like, exactly. I hope, as somebody who wants like as many traders to make as much money as possible, like I want success for everyone. I really hope the fact that, like, and I've been ranting about this on stream a lot, is you have no excuse anymore. You take the Excel spreadsheet and you dump it into AI, and you do that once a day. And you just throw it into like a Claude thread, and it can do things like, okay, now let's put it all together into a spreadsheet. You don't need to learn Excel. You don't need to learn to code. You don't need to pay for a, external journaling software anymore. Just take and that's what I'm talking about with this. So I built a new bot that's just trading opening range breaks, and I built it with Claude. And it was interesting. I gave Claude the task of, this is what I want to do. Let's beat the trade the pool account. And now the same thread is, okay, every night I'm going to dump the trades into you, and you are going to learn from it. And then you can just like go for a walk. Just take the dogs for a walk, put them in your ear, and say, okay, let's talk about what we were trading last week. And it will pull this data out, where before I could see, yes, it was a bit of cumbersome of, you're building a spreadsheet, you have to type in your trades and all this kind of stuff. But now you don't. Once a day, you download. Like I showed you guys, this is how from Trader Evolution, you just right click, and you click export, and then click this check all button. So everything's there. And then you just export the file, and you have the file on your computer, and you're done. And then you do that once a day. You upload it to GPT, Claude, Perplexity, Grok, I don't know, whoever your friend is with the AIs, and you're done. And then it will just get the data for you, and it will transform it however you want. It's just, I hope, because we both know that as soon as people start journaling, their trading increases just exponentially. It is the one thing that I've noticed will turn someone's trading career on a dime, and whether or not they're recording and they're they're doing this kind of introspective, like backwards look at how well they did. There's nothing else.
Yeah, I would say that what's funny, the two things we talk about, we're big on, and I've heard the most feedback on more than like whether I was going live and someone just pops in, man, thank you, AK, for telling, would be, I got more feedback and thanks for, hey, thank you for telling me to do this, from yes, journaling, tracking, backtesting, whatever you want to word it, and getting rid of my P&L. I was like, I told
Yes. Yeah. Well, and we'll talk with that setup here too. So these are all the trades I have on. They're always in this corner right here. But you see I have quantity, just because I want to know if it went insane. I have opening price and current price. I don't have the P&L here, because you're right. It is, I used to, and I talk about this all the time as the old man, if you looked at my computer at my trading terminal when it was off, there was just tape and post-it notes all over it. And people would ask why. And it's like, because when I open my platform in the morning, all the windows align so that the tape is covering anything that could show me P&L, because it was barbaric times and you couldn't actually just hide it. And yeah, because like you should be trading the chart, you should be trading the setup, the level 2, however you trade. It doesn't matter whether you're up or down money. That's irrelevant. You're trading your setup, and then you hope over the long run that the money comes. But yeah, this new setup, day 2, still working. Day 1 was working, day 2. So but yeah, Shaw's saying that's the yeah, and the free version of these AIs, he's saying that he doesn't have the money to pay for journaling software. I don't think you're ever gonna. I think that's, sadly, I know some of the people at like Trade Review and things like that, and there is benefits to using those. Like you can go to each trade and it will show you your entry and exit on a chart, things like that. There is benefits to paying for them, but if you don't have the money or you don't want to go through the hassle of uploading them every day, I don't think you have to. I think you just have to take a Excel spreadsheet and upload it to, again, Claude is because I pay for the max plan or whatever of Claude, but whatever it is, Perplexity, ChatGPT, Google's, Grok's, they're all the same anyway.
Yep. Yeah, I was like you, old school times where you had to, you had post-it notes this, that, or the other, whatever, whatever it may be, to hide stuff, or I wrote everything down. I was just big on me journaling, and I just, like school, I still didn't I didn't use a laptop. I wanted to always write down, old school, my notes, and so all right. So yeah, I was just old school. I wrote everything down and have to go back at the end of the day and look at the chart where, blah, 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 blah. So it was, one of those things where I didn't have AI, I didn't have TradeZella, Trade Review, whatever all those things are that can kind of show you the chart and here's your statistics for the week. Or I had to do it all myself and just write it down and do all my work. So I can do it back in the day, writing everything down all day, every day. I know you guys have it, like I said, today, this day and age, we have it handed to us. So there's no reason not to.
Yeah, as technology has gotten easier and easier, like I used to, I just feel like an old man saying, back in my day, no, we'd actually print off the blotter with the trades and like you mentioned, write them down. And it's funny you say you always like to write things down. I have the fancy iPad, the pencil on it, and it's because there is a benefit to handwriting when it comes to memory. They've studied that quite a bit. All right. Oh, I got some echo there, so I just turned off the backstage, just FYI. But yeah, so it's, you're onto something. Actually, physically writing things on paper has been proven to be more beneficial in retention and recall than.
Yeah, I've told you that for years. Yeah, I've said that. That's awesome. So, yay, Mr. Nas, another time you back me up with something. And I'm like, I've been teaching this for years. I'm like, yay, I am right.
To me, that's the best kind of science, when they take something that exists from personal experience, and then there's now evidence behind it. You read all these studies about how strength training and resisting training is good for longevity. It's yeah, and you used to see the old men who would at the beach doing pull-ups every morning, and they're just looking jacked at 70, and you're like, okay, so we saw that it happened, but at least now we know why, and there's the evidence, whatever, to support. Same with things like meditation, being very good for depression, anxiety, all these kind of things. It's you knew it. Those monks always seemed happy for a reason. Now we know why. You can see the output of it before we know the mechanics behind it.
Yeah, that's it though. I'm glad. That's. I don't know that most will do that, but a lot of the people that I teach in the one-on-ones, that's the one thing. Like, guys, if you just do the extra work and write it down, you're going to retain it quicker, faster, and you're going to progress quicker in your trading journey. And most do that, but then the other ones, want to pay for a system, or then they may use AI. So it's a round table of what. I mean, that's the thing. Again, like with your trading style, you got to find what works for you. What is working, that you are learning something and retaining it, and then putting it back out. Again, like, just think about school. I mean, back to class. Well, that's what we're trying to do every day. Monday through Friday, we had the homework. That's the reason we had quizzes or tests. What are you retaining? What are you remembering from what I was teaching you? Right.
Well, and why not both? So the way I do it too is that all of the data, like the hard data of entries, exits, stop loss, all this stuff, that's done by computers. A, because I trade so much, and B, because there's a benefit to that. But when it comes to more cerebral things, I think, like quick ideas and things like that I do when I put that on paper, or with the iPad and the pencil, the same kind of like physical note taking, as opposed to digital. So yeah, just because you prefer one to another doesn't mean that there's not some area for both of them to exist.
100%, man.
Looks like we got that rip, and then a little bit of some hangout time. So we're going to our education time here, guys. Should have been able to fix the audio issue there, so you guys shouldn't get the double audio. And we'll go into a little bit of an older presentation I have. So I will note that I did this presentation on Thursday, March 12th. So it's a little bit, doesn't include the latest, like Apollo and Eris mentions in private credit. So that just further shows the issues in private credit. So I will say that is missing. And it actually makes me think that even further damage is in the private credit system. So let's get to that action. I'll start the podcast here and share the slides here with you. Let's get to it.
Usually when we talk about an investment or even just a basic bank account, there is this fundamental expectation of flow.
Right, like water.
Exactly, like a water faucet in your kitchen. You turn the handle and your money just flows right out into your hands.
Yeah, it's immediate. I mean, it's liquid. We take that utility completely for granted until, well, the moment the plumbing backs up.
But then you step into the world of alternative investments, specifically these high-yield private funds, and suddenly you turn that handle and it is bone dry.
Completely frozen.
Yeah. We are looking at a $2 trillion financial landscape right now in early 2026 that is rapidly freezing up. And that faucet is suddenly getting shut off for a lot of people.
It is the absolute definition of a liquidity trap. Yeah. And it is catching a massive amount of very smart money completely off guard.
Okay, let's unpack this. Our mission for you today is to understand how a seemingly obscure corner of Wall Street connects artificial intelligence, legacy software, and, everyday retail investors. And exactly why this $2 trillion private credit reckoning is happening right now. Because since the post-2008 regulatory crackdown pushed traditional banks out of middle market lending, these alternative asset giants have had a near monopoly on this space.
Oh, for sure. I mean, they raised trillions to lend directly to companies at these high floating interest rates.
But that era of easy money is over.
It really is. And that frozen faucet isn't a sudden accident, though. It's a structural flaw built right into the plumbing of these loans. Mm-hmm. To really grasp the stakes for you as an investor, we have to look past the jargon. To see why this market was essentially engineered to fail under stress, you have to look at what's called the liquidity illusion.
The liquidity illusion. Let's break down how that illusion actually works. Because private credit funds take investor money and lend it to middle market companies for typically 5 to 7 years.
Yeah, those loans are highly illiquid.
Right. You cannot just jump onto a brokerage app and sell a private loan to a mid-sized plumbing company the way you can instantly sell, like, a share of Apple stock. Your money is locked inside that plumbing company's daily operations.
Exactly.
Yeah.
But the asset managers who ran these funds, they wanted to grow their total assets under management massively.
Of course they did.
Right. And to do that, they couldn't just rely on institutional money. They needed to tap into the retirement accounts of everyday retail investors. So they created these structures called business development companies, or BDCs.
And here's the catch. To get retail investors to buy in, These BDCs promised a feature called semi-liquidity.
Which is an oxymoron, really.
It totally is. They essentially told investors, hey, you can withdraw up to 5% of your money every quarter if you want to.
Right.
It immediately makes me think of a crowded movie theater. The asset managers basically sold tickets to this theater by promising everyone that there was a massive set of double doors they could use to exit whenever they wanted.
I love that analogy.
But in reality, the underlying illiquid assets mean the exit door is actually the size of a mail slot.
Yeah, and it works perfectly fine when just one or two people want to leave early to beat the traffic, right?
Mm-hmm.
Yep.
But the second someone yells fire and everyone rushes the exit at the exact same time, the door jams.
This
It's
is the
a
same thing
structural
that's happening in
impossibility.
Apollo
You
and
simply
Eris
cannot
that
promise
started
liquid
with
withdrawals
Owl.
when they are backed by illiquid 7-year business loans.
And that brings us to the second mechanism that built this bomb, which is known as the PI time bomb. PI stands for payment in kind. And I have to say, this concept completely blew my mind when you look at how widely it's being used.
What's fascinating here is that to understand PIK, you really have to look at the lending environment between 2021 and 2023.
The zero interest rate boom.
Exactly. There was an ocean of cash looking for
That's
yield,
what's causing
meaning you
the
had way
problems
too much money
right
chasing
now.
too few viable deals. Because competition among lenders was so fierce, they started issuing these covenant-light loans.
Meaning, the lenders just stripped away the strict financial rules and tripwires that borrowers historically had to follow to prove they were healthy.
Exactly. They gave up their protections just to win the business. Fast forward to the last couple of years, and interest rates stayed higher for longer.
Right.
Suddenly, these mid-sized companies realized they couldn't actually afford the massive cash interest payments on their floating rate debt. But instead of declaring a formal default, the lenders allowed them to use PI.
Okay, so payment in kind.
Right. Payment in kind means the company pays its monthly interest by simply taking that interest amount and adding it to the principal balance of the original loan.
Wait. I really want to make sure the mechanics of this are clear.
Sure.
So they are essentially paying off a credit card with another credit card. A company owes $1 million in interest,
Essentially.
can't pay it, so the lender just says, no problem, we'll just say your total loan is now larger, and they wipe their hands. How does that not immediately trigger alarms?
I know, it sounds
Just
crazy, but
wipe
that is
the hands.
exactly what happens. And the reason it doesn't trigger massive regulatory alarms across the board is that technically, on paper, it isn't a default.
Wow.
Yeah. The loan is still marked as performing because an agreement was reached between the two parties. This practice artificially kept the headline default rate for private credit incredibly clean. I mean, hovering under 2% for years. It looked like a miracle of modern finance.
But it's just a mirage hiding compounding debt. I mean, if you have a $100 million loan at a 12% interest rate and the company PIs for a few years, that debt burden silently explodes to $125 million, then $140 million behind the scenes.
Right.
The foundation is rotting while the paint job looks brand new.
It really is a giant bomb of illiquid assets masquerading as liquid, filled with this hidden, exponentially compounding debt.
But a bomb still needs a spark to go off. Before we get into the crash, we have to understand the spark. And in early 2026, it came from a place nobody in private credit was seriously hedging against.
Artificial intelligence.
Artificial intelligence. Specifically, the disruption of enterprise software, or SaaS.
The sauce belgalos.
The Sockbox, right. Because during the boom years, private credit lenders completely fell in love with lending to software companies.
Oh, they couldn't get enough of them.
Roughly 20 to 25% of all private credit loans went straight into the SaaS sector. They were so obsessed with the sticky recurring revenue of software subscriptions that they abandoned traditional lending metrics.
Which is wild.
It is. Instead of lending based on cash flow or physical collateral like a normal bank, they started underwriting massive loans based purely on a multiple of annual recurring revenue, or ARR.
Yeah, they treated those software subscriptions as if they were a permanent utility bill. Like a company would never stop paying for its CRM.
Right.
But then the AI disruption hit in 2025 and 2026. Enterprise clients across the globe looked at their shrinking budgets and started aggressively canceling their $150 a month per seat legacy software subscriptions.
Because they could just replace them with AI native tools and cheaper custom internal models.
Exactly.
And when those massive enterprise contracts get canceled, that annual recurring revenue completely plummets.
It evaporates.
Right, it evaporates. Because those massive loans were underwritten under the assumption that the ARR would never drop, The sudden cancellation wave triggered immediate debt covenant breaches across the sector.
The fundamental rot at the core of the panic was finally exposed.
Here's where it gets really interesting. Let's look at what happens when a traditional manufacturing company defaults on a loan.
Okay.
The bank steps in and takes their physical assets. They seize the tractors, the warehouses, the real estate. They liquidate them, and maybe they recover 60 or 70 cents on the dollar. It hurts, but it's not a total wipeout.
Right, there is a physical floor.
But if a software company defaults,
Yeah.
what exactly do you seize? The office ping pong tables? The espresso machines?
Yeah, this is the exact terror keeping credit managers awake at night right now,
Yeah.
is the zero recovery nightmare. With a SaaS company, there are no tangible assets to seize and sell to a competitor. There is only obsolete code that nobody wants, and specialized employees who are already fleeing to other jobs.
Wow.
If these traditional SaaS companies fail to pivot to AI, the recovery rates on those defaulted loans won't be 70 cents on the dollar. They will be historically abysmal.
No.
We are talking pennies, if
Yeah.
anything.
Which causes catastrophic write-downs for the funds holding the bag. I mean, UBS recently put out a warning that in a severe AI disruption scenario, private credit defaults could spike all the way to 15%.
Yeah, which is massive.
Going from an artificial 2% default rate to 15% with zero physical recovery, that is a systemic shock.
It absolutely is. And as those software companies started breaching their covenants, the panic logically spread upward to the people who actually funded the loans.
The retail investors.
Right, the retail investors. This is where the structural flaws of those BDCs collide with reality.
So if you want to see what this looks like in real time, look at Blue Owl, ticker symbol OWL. They were essentially the poster child for the zero interest rate boom, and they aggressively championed that strategy of lending heavily to SaaS companies.
They really did.
When retail investors got spooked by the massive software exposure, they rushed those mail slot exits to get their money out. Blue Owl had to completely halt traditional redemptions on one of its major funds.
They gated them.
Exactly. They effectively trapped or gated their investors. To survive the liquidity crunch, they had to sell off $1.4 billion in loans, and their stock plunged nearly 60% from its 2025 peak.
It's brutal. And, you know, it's easy to look at that and assume it's just emotional panic, like retail investors reading scary headlines and mashing the sell button.
Is it not?
Well, a huge driver of this sell-off is purely mechanical. We have to look at Blackstone ticker BX and its massive $82 billion BCR-RED fund to see this in action.
Oh, right. Let's talk about the denominator effect, because this completely shifts how you view the sell-off.
Go for it.
Say your retirement portfolio is strictly rules-based. Your financial plan requires private credit to be exactly 20% of your total holdings and public stocks to be 60%. As public stocks dropped heavily due to broader market fears in 2025, the overall size of your portfolio shrank.
Right, the pie gets smaller.
Exactly. So even if your private credit fund didn't lose a single dollar of value, suddenly that private credit allocation might represent 30% of your new smaller pie.
Just because the stock portion shrank.
Right. So financial advisors and institutional allocators are then forced to sell the private credit allocations, not out of panic, but simply to mechanically rebalance the portfolio back down to that target 20% rule.
It's a fiduciary mandate. I mean, they're legally obligated to rebalance. So even if the underlying loans in a specific fund are perfectly healthy, you still have this immense wave of forced selling hitting the system.
And when forced selling meets an illiquid market, you uncover the cockroaches.
The cockroaches.
Yeah, that references the old Jamie Dimon quote, you know, when you see one cockroach, there are probably more. We saw this in late 2024 and 2025 with high-profile
Cockroaches are showing
collapses
out there,
of
guys.
companies like Tricolor and First Brands.
Right.
They collapsed due to hidden debt and incredibly sloppy lending standards.
PIMCO contextualized this perfectly. They said the current crisis is the direct result of really bad underwriting from that hyper-competitive 2021 to 2023 period.
When everyone was just throwing money around.
Exactly. Lenders simply
Trying
dropped their
all they
standards to
could.
get capital out the door. Now that the economic cycle has turned, those poorly underwritten, overleveraged companies are breaking first.
And the
Which
SPY
creates
is
a
heading
terrifying
down here.
feedback
Just a
loop in the
heads up,
secondary
guys. We're
market.
setting, like we
Let's
talked
unpack
about
the
early,
mark-to-market
top and then
contagion.
This
drop.
is crucial.
Because
Yeah,
funds
we
are
got
forced
Trump
to
out
raise
there
cash
giving
to
a-
pay
giving a
back those fleeing
cabinet
retail investors,
presentation
they
or
have to
whatever.
sell their illiquid private loans to other investors.
It's the
But if
obvious
you have to
top and
sell a
drop,
highly
right?
illiquid asset in 3 days,
Yeah,
you
he's
cannot
out there
demand full
ranting
price.
about the
No,
wall.
you have to take a haircut.
Right. You might have to sell a $100 million loan for 90 cents on the dollar just to get the cash immediately.
But the danger isn't just that one specific fund taking a 10% loss.
Yeah.
It's the contagion effect.
Because it creates a new public price tag, right?
Precisely. If a major fund admits on the open market that a specific software loan is only worth 90 cents, well, every
where it's gonna
single
get
other fund
interesting.
on Wall Street that is holding that exact
we're getting
same
closer
loan
towards
is
this
suddenly
moment.
pressured by their auditors.
Oh, wow.
Yeah. The auditors point to that public sale and force all the other funds to mark down their own portfolios to 90 cents. That process instantly destroys the illusion of stable valuations across the entire $2 trillion sector.
The mirage vanishes. But, you know, as painful as this is, the market is aggressively segregating the weak from the strong based on structural moats. Blue Owl is getting crushed, but others are surviving or even thriving because their business models were built for this.
Let's look at the diversified giants, starting with Apollo Global Management, ticker APO. Apollo's underwriters are notoriously ruthless. They actually saw this sauce-apocalypse coming and pivoted heavily toward asset-backed finance, or ABF.
So unlike the Fed's lending against intangible software, Canine, Apollo prefers to lend against hard, seizable assets. We are talking about commercial aircraft, massive vehicle fleets, specialized manufacturing equipment.
And the mechanics of recovery there are night and day. If an Apollo borrower defaults, Apollo can simply seize a fleet of Boeing aircraft.
Because there's an actual market for those?
Right. There is a global liquid market for commercial planes. They sell the planes to another airline and recover their capital. There is a tangible, physical floor to their risk that simply does not exist with SaaS.
All right, I'm going to pause there really quickly to give an update because this didn't have it when I did this report. So, of course, we've recently had Apollo also do the same thing that Owl did, and Aris do the same thing that Owl did. These were the least exposed companies. They had high resilience to this issue. And if they're falling on this issue, that is a real telling sign that there's bigger issues to be had here in private credit. So it's not just the SaaS that's affecting these companies, because Apollo changed and adjusted from that and diversified from that risk. So the risk is just increasing here as Apollo is also showing you that the redemptions are coming in. And another thing is that mail-sized door, right, is not working because everyone wants out and they're pushing for the door. And what did they do? They locked them out. They said, no, you can no longer get your redemptions that you thought you were going to get.
Apollo also has a massive structural shield on the funding side. They rely heavily on permanent capital through their ownership of Athene, which is a massive life insurance and annuity provider.
This is such a huge advantage for them.
It is. Think about how annuities work. Retirees give Athene cash, and that cash gets legally locked up for decades via
Bitcoin
insurance
also selling
contracts.
off with this
Apollo
sell-off.
manages that money. Because that capital is legally locked and heavily penalized for early withdrawal, Apollo is virtually immune to the kind of retail bank run we saw with those BDCs.
Ares Management is another giant in the space that has built a similar
The worst
fortress.
part is the report
The
like
vast
comes in
majority of
here
their
and
capital
tries to
comes from sovereign
defend
wealth
these
funds,
two,
state
Apollo and
pension
Ares.
systems, and
And the
university
truth is,
endowments.
Big
there's-
institutional
we
money.
Yeah,
saw what
exactly.
happened.
These
right?
institutions sign strict
They're
7 to
showing
10-year
weakness,
lockup
right?
agreements.
I'm going to
Suddenly
fast
need to
forward
make
a little
rent
bit
by
here so that
Friday.
we can
That's a
get to
great
the
way to
end,
put it.
guys.
Desperate funds are forced to sell perfectly good, performing loans at 80 cents on the dollar just to raise liquidity to pay off their retail investors. BlackRock swoops in, buys them at that massive discount, waits for the loan to mature, and collects the full 100 cents from the borrower.
And critically, BlackRock is taking strictly senior secured risk.
Meaning they get paid first.
Exactly. That means in the event of a bankruptcy, they are at the absolute front of the line to get paid back before anyone else. They're buying the safest part of the debt at distressed prices, capturing a massive equity-like return.
Wow.
If we connect this to the bigger picture, it highlights something really important. The true winners in a credit crunch aren't necessarily the ones who make the smartest original loans.
Really?
Yeah, often the winners are simply the firms with the structural liquidity to act as the buyer of last resort.
Nope.
But
Come
the
in and
reality
put a
is
backstop.
stark, right? The 20 cents of profit BlackRock makes on that trade doesn't just appear out of thin air. That is exactly the 20 cents of realized loss that a trapped retail investor in a gated BDC fund is forced to eat.
Yes.
The scavengers are capitalizing directly on the structural forced selling of everyday portfolios.
It's a zero-sum game in that moment.
So what does this all mean? If you're listening to this right now and your retirement isn't heavily allocated to private credit and you don't run a legacy SaaS company, why should you care about any of this?
Because we are actively watching the credit cycle transition into the highly destructive repair phase. The private credit market is the engine of the middle market economy.
Right.
If this market freezes, thousands of mid-sized businesses, logistics companies, regional healthcare providers, manufacturers, they simply cannot refinance their daily operational debt.
Nope.
Private equity firms cannot buy or sell companies to generate returns.
The gears basically grind to a halt.
Exactly. When that happens, corporate bankruptcies inevitably spike. And when corporate defaults spike, the collateral damage drags down public equities in sympathy.
Meaning the stock market.
Yes. That affects the mutual funds and index funds in your 401k. Furthermore, Wall Street is aggressively repricing these massive alternative asset managers. For years, they were valued like high-growth tech stocks. Now, their valuation multiples are permanently contracting back to traditional cyclical bank levels.
So the perpetual growth story is over.
It is. The end of this gold rush fundamentally shifts the architecture of the broader market.
It is a massive macro domino effect. Thank you for walking us.
All right, guys, that's going to do it for us. And like I've mentioned, there is some kind of the coming to roost, right? When you do all that loan and lending and you expect at some point the rates to start coming down, but then now rates aren't coming down. If anything, looking like inflation might spike up and rates go up higher, this creates more and more pressure in private credit, and we're seeing it show up in a lot of different areas of the market. So doesn't look good here for private credit. I will go ahead and give you guys those kind of links, of course, to kind of look into. But hey, guys, we'll see what happens there in private credit. What you guys think about that? Josh, I'll go to you, and then we'll go to Michael.
Good stuff, honestly. I'm watching you grow. It just came live now, so I'm looking to get a trade in. But yeah, that stuff right there, a lot of people don't think about, honestly, when it kind of goes over the head for a lot of people. But yeah, it's stuff that I don't even look into that often. But yeah, it kind of opens my eyes a little bit there, bro.
Yeah, and it could put a little bit of some fear in you, realizing that these banks are just leveraging themselves into danger, right? So what do you think about that, Michael?
So yeah, I looked at it because I didn't, because interesting topic, but for me, I always go, okay, well, how big is this, right? Is this just, how big is this sector? And as of the end of 2024, is roughly $2 trillion. So I know that anything trillion is like a lot of money. But then I look at it and I say, I like how they kind of mentioned Blackstone and everything as a backstop, because
Yes.
they could get their hands on enough to buy that out, especially if say it gets cut in half. It's only worth $1 trillion now. Man, Apple could just come and kind of swoop that up. So just, keep an eye on how much is appropriate fear and how big the issue actually is. So yeah, if you're in private sector stocks or private debt stocks right now, probably having a bad time. But it's just like, will this bleed over and actually crush anything in the economy? It's got to get way over $1 trillion or $2 trillion before I get worried about it being like an actual economic impact.
Yeah, the question is, it's like what always has a tendency of happening in the financial space is over leveraging in one area and expecting that area not to change. No one expected software multiples to come down this fast. And I think that's what's also weighed in on these asset management companies is that they thought maybe, yes, software can come down, but they didn't expect this kind of wreckage. And it hasn't even really completely broken, right? And that's the scary part. Things can get a lot worse here in the IGV and software. So if you want to know if this is going to expand, I think you continue to watch that software trade because if it continues to break down, it's going to put more and more pressure on these private credit companies. And another thing is, this starts to bring you questions not only about private credit, it starts to bring you questions about the whole credit cycle. And are we going into more of that contraction? And I think that this is just more proving that fact. This is why I feel like the markets are really struggling underneath the hood. It's the underlying economics for the market and the cycle that we're in. Right now, it doesn't seem to me like we're just in this boom cycle anymore. It seems like the boom has broken, but it's all going to be told by the price action. That's going to do it at least on that educational conversation today.
Yeah, and just one right before we dip here, just Trump is
Yep.
still talking, and now he's actually directly referencing the stock market. Trump on the stock market. I thought it would have gone down more. So take that for what you
Thanks.
will.
Thanks,
Uh,
bud.
yeah, thanks, man. Oil prices and stock drop have not been that severe, right? So
It's
he's just
just
so you know, he's there, and he's. I just like looked at the video for a second. He's surrounded by all of his, I don't know, best friends, and they're like drinking tea, talking to press. So
the ones that get the inside trades, the ones
yeah,
that bought the futures on Sunday night.
yeah, that magic $1 billion future buy. But yeah, Operation Iran will end soon. He's talking about like this is all the stuff that we care
It's
about
an
right now, and he's just
operation. You
ranting
saw he
about it.
didn't label it a
So,
war there. He said it's an
yeah,
operation. It's just
so
something quick, guys.
well, and that's what. So it's again, none of this matters in the real world, but it'll matter if the president of the United States is referencing the stock market. You have to take a look there, and if you look at the SPY, when he started to talk about the war, that's when we had that kind of 15-minute or so down spike, and now we're bouncing a bit more. RSP is still flat on the day, so the average stock is doing just fine. Big cap tech is the thing getting hit, but just know, I don't know how long he rants, how long this cabinet meeting thing goes on for, but if I was actively trading the rest of the day, I'd probably be watching to see when he shuts up and leaves, and then look at the price action after that, because he's, one word we're going to spike up, next word we're going to tank, and just know he's out there ranting.
He's ranting, and what are you going to see? It's kind of what we talked about in the morning. Pretty much no real range established this morning. It's kind of like a little bit of some chop in between the overnight action, right? At the end of the day, the overnight action let us down. We really haven't reversed that, and we're just chopping in between here. So we could let go, we could come back. There's really no guaranteed path. And that's been the hardest part of trading during this time right now. If you're trading in these like higher quality names that don't, get uncorrelated with the SPY during this time, that's where the trouble has been. A lot of chop there in the trading. So you got to sell the rip really quickly, then buy the dip again, then sell the rip again. And that sounds like more like day traders are the only ability there to keep flipping that fast, because swing traders don't flip that fast, right? They're trying to position in, and the same thing for position traders. It seems to me like the only way you can swing trade and position trade right now is sticking towards those high flyers like SanDisk or names that can just continue to go up higher. Whether you're talking about, maybe it's your VRT trade or something like that, right? And even then, those keep turning around and going down. Today we have SanDisk, another day down, right? MU, another day down, right? So even the leaders are starting to break. That's what troubles me about the market. That's going to do it for us, at least, and for myself. We will continue going. We'll kick it over now to Josh to take over here. But it was a tough day. The chop continues. So stay safe out there, traders.
Yes, sir. Eminem out. Look at this double bottom on the SPY. So I was kind of I was looking through the large caps here. Just so I always love looking at them. Still trade them. Like yesterday was a great call on Microsoft. I had that for some continuation on down out of the bell there, and of course it has had great movement over the last, I would say, well, good spike at the bell today. I wanted more down movement from it, but I am short on this from the 390 mark. But this was a good short yesterday out of the bell. So I like looking at them, just looking at the charts, trade the charts. But boy, SPY, that was definitely nice to see there. Double bottom so far. But yeah, it's just trading the bottoms. It seems like to me if you're going to trade, the tops and the bottoms end up being the best. You find the top, you find the bottom, and then it ends up being a good range that's built in. Now, haven't really day traded large caps in a few months. Really about this time last year is where the day trade started to come down a little bit more so, where I would find myself trading them day in, day out with small caps. Late 22 into 20, all of 24. So 23, 24, it was the end of 22 is when I got into really trading them and watching them and got into options and doing shares as well. But nice floor down here for the SPY. What's this at 5, almost 60 or 551? I think this still over time, in my opinion, it finds its way back down to where we just came from, and we go back however many days here, in 10 days, 5 days, doesn't really matter, but we go back here just a little bit. Let's go back here. Get out of this here. Go zooming out. Get my little Cajun voice there from Louisiana in. I think we go lower than this. Steve and I talked about it. Was it yesterday on the lunch recap? I think it was. I'm here every day now, which is awesome with you guys. Monday and Wednesday now, lunch recap with Steve. Tuesday, Thursday, of course, the usual Tuesday, Thursday. Here we are again at Thursday. Call-in show in just a bit. Used to be with miss my man Kevin. Got a little something about Kevin, though, we can tease. And now Steve joined me. Steve will be joining me here in about, 55 minutes for the call-in show. Today's topic on the call-in show, please call in. Why to trade prop firms and why to or not risk your own capital, right? Big topic right here, of course, trade the pool. Got my hat here, always sitting here. Got my book down here as well. So that'll be a good topic today. And of course, this is why this will be great for trade the pool. I love TTP for that. And then my little tease back to Kevin. Friday nights, we need to come up with a name for it. If you're listening, Tack, Crow, Mike out there, and these guys that are listening Monday, now I'm here Monday through Thursday with you guys. Now we're going to include Friday. We know about the late night call-in show on Friday that I do with you guys, or Kevin may host, or I may host. It's stuck in now. Why? Because every Friday night we're going to do that here, where you can join us. I know we called it Traders Anonymous. I don't know what we're going to for surely call it. I'm pretty sure it's starting tomorrow. From now on the TTP stream here, I won't be hosting. It won't be Kevin hosting on our YouTubes. We're hosting right here on Trade the Pool Friday night, so you guys can come in if you want to, just like usual, and join us. So it'll just be the every average ordinary trader, right? Your average Joes. Going back to dodgeball, the average Joes and the average Janes of the world, okay? You guys can come. Speaking of Airplane Jane, come on. Where you at? Get maybe Nas on every once in a while. Maybe we'll get Money Mitch. I know the kids come into play with those people. But come on, Kevin's got kids too. Guess his are a little younger. You put them to bed when they're younger. But you guys, Mike joins sometimes. I know Tack, I don't think Crow, you joined yet. Joe, maybe joined for half a minute one night when he was out. But you guys can join. We'll send, just like the call-in show that we do here in about an hour from now, where you guys will send the link out where you can join. We'll be the same thing Friday night, tomorrow night. We got to come up with the time. We'll figure that out. I know we'll have that stapled in, but staple it in, pin it in. Not only Monday, Tuesday, Wednesday, Thursday here with Trade the Pool, but now, we're never live on Friday, but we will be now. And on Friday night, for you guys to join us for a week recap, it'll be some good times. What's up, Joe? Joe, hey, I like the name. Yeah, I like Traders Anonymous. It's just my brain, it's definitely can come up with stuff out of nowhere. Sometimes not so great, but sometimes I come up with some really good stuff out of nowhere. But yes, back to Lisa. Thank you for joining. Tack, Smoke, Tuna, everyone. Larry Boyd from earlier. And I wanted going back to, let's just go back to Ugro here. If I can find my mouse. Where did my mouse go? There he is. I've got screens all over the place and only one mouse to look at. Ugro, I wanted this a little lower. Oh, it did not quite get down to my line. We'll go back to that smaller time frame here. I like the 3 minute at this point in the day, not the 2 year. Not the 2 year. Let's not do the 2 year. Let's go back to that 3 minute time frame if we could there. There we go. That's the 4 hour. Where'd my 3 minute time frame go? Is that not it? Where's my 3 minute at? I know I have a 3 minute time frame. Why is it not popping up? Well, whatever. We're gonna go to the 1 minute time frame for now. We'll do the 1 minute. Little maybe too much information from some traders. I get it. I can break it down though for us. I wanted this back down here. This is that dip and rip I wanted. I want it back down to around 31, this little juncture, where we open up, consolidate before we crack back, and the crackback's really nice. Then we come up and fail off of it. Then when we break out of it, we break out really good. This is going to be a retracement area, but the traders got a little too greedy and didn't let it come down to 31. I wanted 31 for the dip. That's why I put that line in there while the boys were giving a good presentation there. Mitch, good job on the presentation. And, of course, Nas, a little out of my league for what I look at. I'm really not looking at that kind of stuff, but on a day-in, day-out basis. But that's very key, and I don't think when I looked into that, I'm like, yeah, that definitely could maybe be making an economic impact. And it's just some of the stuff that you think about, too, and they definitely are. I've already known that about the being, over-leveraged. And it's just the world we live in anymore, especially boy, oh boy. I mean, there for a while just handing out. I just go back to like when I went to college, you go back to early 2000s to 2010, you go to like orientation or whatever for your college, and boy, there'd be all those booths like Visa, MasterCard, all these credit card companies, and they're wanting you to they're just giving you. They're just like, hey, take it. Take our money. Go blow the account up essentially, so then you owe us even more. And all the interest, right? Or did I say blow the account because I'm thinking of trade, I'm thinking of stock trading, but go max out your card right away, and then you don't pay it, then you owe us interest on interest, and of course they're making tons of money, but it just kind of reminds me of that. What's up, Joe? Though, yes, Mike, how we doing? So got an eye on RBNE and Turb. Yeah, those are slow and steady Eddie kind of plays. Turb here, you know, these are your slow and steady plays. This kind of reminds me of AIFF, which I know Joe brought up earlier. Let's go back to my small cap list right here. Oh, that's not the default list. I want the small cap list. I want that small cap list. AIF, this is what it does. Joe brought this up earlier about trying to short it. Joe, this is what AIFF does, though. You know that. You go back and look at AIFF over the past few weeks. It'll pop up. It creates a high. It creates a low. And this thing won't break out of this or crack whatever you'd say the rest of the day. It won't break 240, or we'll call it 250, and it will not crack below $2 for the rest of the day. Watch. I'll put a prop bet on this one for sure out in Vegas. $2 bottoms, 250 tops. We'll see this minimum at least through lunch hours of the next couple hours, right? Especially as that volume has completely died off now. And that volume profile, I know heavy at 2, 5, and 2 sticks it in that area. But geez, this then just sticks in that area. We've had so many of these, but it makes it easier for newer traders that are trying to trade small caps, which of course, you know, again, how many people I do one-on-ones with a lot. And this is what they struggle with. They struggle with days where it's really busy out and they can't decide which stock they want to trade. Today, even for myself, I'm not a fan of that movement. You know, you got this move, and then we have this move, and then this dumps, and then that one dumps, and this one now pops, and now this one drops, right? And so, like, you know, Nas was saying earlier, I mean, it was literally like one candle, like, you know, switching. You're switching from one candle to the next, essentially, and who's gathering the, as I call the MA, right? Majority of buyers. And I don't like that. I hate when I come in and I see a lot of good spikes, but then we've seen drops, and then, you know, and then you see the moves back on up. Like EEIQ is a great example of that, where I in my morning alerts, and I know, Joe, we talked about EEIQ in my morning alerts. I go back and look at this, and I said in my morning alerts, you know, as far down low as it got, and what all we had to look at today, I said I very highly doubt it gets back up to pre-market high. Well, sure enough, not only does it do it, I'm like, boy, oh boy. And I thought this massive upper shadow and pullback, I was like, okay, this is probably going to be some wickier-ish head and shoulder, head. Here comes the shoulder. I'm thinking we're about to crack back. I'm going to get filled at 650 for a pop-up to like 7. Get one more bounce down low, but then that still then cools over and then kills over right and goes down. And go, what? No, we create this massive bull flag that does squeeze, and I mean, obviously squeeze-a-roni here, just to come back and then create one of these Arby hats. Hopefully you guys have... remember the old school Arby hats? You know, if you remember Arby's from back in the day, and they had like that big old 10-gallon bucket hat as their, I know Joe remembers the 10-gallon bucket hats. Crow, hopefully you're there with me. Maybe Tack, you guys are all old enough and remember the 10-gallon bucket hat Arby signs, you know, out in front of the Arby's. I mean, that's a 10-gallon bucket hat. That's a Head and Shoulders right there, bro. I mean, I'll call those 10-gallon buckets, not, you know, bucket hats versus a Head and Shoulders. But it looks like it's going to complete the Head and Shoulders here and come on down and die out. No, here we go. Now we're rolling up this uptrend channel here. So you go in, bottom bounce with the higher low pattern. It's a wacky higher low pattern because generally speaking, when you get a higher low pattern, it looks very similar to just something like that, maybe. So, you know, where you have the bottom area, you have the top area, and you're just rocking through it. No, we have this massive move up that completes it all the way back down. Now we're trying to escape out of this. And so EEIQ, this is moving a little bit better now. And I like this for a dip. I like 820, and then I love 690. Now that it's been identified first earlier, now second, and now third. Moving back up, back into over pre-market high. This is like a forever line. And I'll talk about these on Thursdays a lot, or even Tuesdays when I have this extra now hour when Kevin's not around. So I do more yapping and more talking and more lesson-like, you know, explanations. This is something I would say, hey, I'm leaving this in. It's going to be smaller shares just in case if I do get filled. Maybe I am not right. I can walk away from this, though. This happened. Actually, I talked about this over at B-Fly. I'm going to give a bounce lesson. I'll put that out. I'll maybe try to do a shortened one for Trade the Pool. And I know Trade the Pool likes lessons, so I'll see if maybe they want to share it. And, of course, I'll tag them as collaborators and, you know, whatever across the board from, you know, X, Instagram, etc. When I do a bounce play lesson, I've been doing bounce plays forever. And especially over the last few months, I've got a plethora of them. And going back to, again, my AKNR, my in-person seminars, okay, AKNR, go by AK47. But my column, essentially my in-person seminars, my in-live trading and learning events that I do, I was in a bounce play. Truly, well, I didn't know it yet, but I put in orders. And hey, I love B-Fly. Had a great area that I felt we could come back for a bounce play if it came down to it. it was lunch. It was slower. That was when February, when things really slowed down in earnings. And we saw that even into this month. For the most part, you can tell, of course, until recently, but it's been really slower. We haven't had those crazy supernova movers. Really more sideways consolidation plays, spikes and slow and steady bounce plays that have worked. But go back to B-Fly, and again, I want to pull up the chart, but it was a great bounce play. Point being, I went out to the pool. I had this place had a pool. I'm out in the pool. I'm chilling. I'm relaxing. I get out at lunch, about to come in for my afternoon session of, trading or say what learning or whatever, and oh, whoa, filled. Okay, wow. And I'm already up, came right down to my area. I got filled. I'm instantaneously, and that's how I love my bounce plays. I find areas, and generally speaking, it very rarely goes below. It hits my bounce and goes straight on up, or at least we sit even for a while, if anything, a high percentage of the time. You go back, I can go through a plethora of them. This will be a great example if we get one here today. We've seen a lot of them. I'm sure you guys have seen a lot of them here on the live stream that I've taken, or at least a few of them. And so here I am filled in the pool and don't even know it. But these are what I'm talking about. Oh, yeah, I'm feeling cool. Come back in, scale it out. A little that play went all the way back up into the closing bell, and I got liquidated at the 50 after mark. I was scaling out along the way. I think I was still in really just small shares, but it was cool to hold that into the closing bell as you get liquidated. And it was a bounce play kind of like this, where it came down, bounced, and just kept, boom, filled right on up and just kept going. And this would be, it reminds me at least of the move it made, where I got filled and it goes up and I get liquidated. It was about a 60. This is a way bigger move, but it was about a 60, 70 cent bounce. Overall, in the end, it was a slow mover. These earnings plays typically are in small caps. Earnings plays, if you see them pop and move, it's not an EEIQ type of movement. Yep, 650 was what I actually called out on my live stream earlier for that fair value gap, 50% retracement kind of move when you go from 5s up to around 820, 850, whatever you want to call it. I said, this is probably going to be the bounce area. I don't think we're going to go to the low end. I think we're going to go to the top end, if anything, halfway through it in the middle part. And I was yapping about Ugrow or something, and sure enough, it bounced and immediately literally, we'll call it essentially about a 2-minute move from 650 to 850, 875. And then, yes, I like this area. So if you want to go lower, Paul, at 650, you can. This just has more touches at 690. This would be this would be when you could just walk away. Put in smaller shares, just walk away. I think I did 750 shares, which was it's a little bigger, I know, for some, but I walked away for B-Fly. 750 shares. It was a slow mover. It went from around 350 up to 5+ on the day. Not a huge mover. Was coming back off the 5 resistance. 420, 415 was my bounce area. Bounced at 415, 420, ran back up to about 470. 480, something like that. So slower up, but 750, I just walked away. It was something where I knew if it was going to hit it, it would bounce. And one of those things I did forget about. Of course, I'm getting in the pool, enjoying life right at the AKNR. One of those things that slipped my mind, and I remember coming in and wall field. Oh yeah, I forgot. Oh yeah, duh. Forgot those were in. Heck yeah, baby. Give me some Arby's. We have the meats. Oh yeah, we have the meats. Yeah, that's it's some good stuff. I love some Arby's. Some curly fries are good. I'm a big curly fry fan, of course, especially the Jamocha shake. Avery, I'm not a big coffee person. Avery is. She got her introduced to the Jamocha shake. She never even heard of it before. I was like, oh my god, you haven't heard of the Jamocha shake, baby girl? You missing out. So one coffee kind of thing I do like. You put me on coffee team. Let me tell you something right now. It won't probably be a good thing. You'll see me like just a million miles an hour. All right, come on here. Boom. All right. It trend lines in for me right now. Here's your overextended uptrend channel. So I know it's a little too much on the lines here. We're getting over lineage on the uptrends. But what I want to see is two things. The bottom area, I love 697. Secondly, yes, are we going to hold the original uptrend channel, or is this a fake out breakout? Right? And we're faking out this first area. You know how many traders went long here on the breakout? Some took profit. They probably scalped it. I know a lot did. There are a lot of traders still long going, no, oh no, oh. Not waiting for a bounce play. They're just jumping in, going for continuation. Here we go to the moon, right? So again, 825 area down to around $8. This is going to be your first dip opportunity if we can get it. So what I'm leaving these lines in for are two things, like I said. Do we stay up above that line and stay essentially in this consolidation channel that we've been in? We aren't. So I'm going to leave that line in. And B, do we hold this overextended uptrend channel, and I put my money on it not? And coming right back down below this small, nice, good continuation for the past 30, 45 minutes, stopping and we just get back into this nice good rhythm, which then this bounce play around 820, down to 8, leads us back up to around 875 into the consolidation zone of 9 to 15. So it gives you good profitability zone, gives you good movement. So I'm always looking for in trades. Not only a good entry price, but I need profit to go with it. I don't want to get into a play that looks good. Well, if it looks good, but it's got to, that usually my eyes are already coming in there. It looks good because it has a chart set up, it has a pattern for me to trade, but then on top of the fact it has profitability for me to take. It's not just going to be a dead, in the fish water kind of thing. Larry, here with you, AK-47 on the E. They love it. I hit the 6% on the EIQ in one day. So there you go. Good job, bro. Love it. Love it. Yeah, this is the you're gonna get this. And unfortunately, I know today's been a little bit hodgepodgey as far as going back and forth and what looked good. Like, let's just go through. I say the ringer, but we had FCHL earlier in the day. Oh, and of course you can't. I think that's the one that on TTP they're not letting us trade that, which is fine. There's plenty other to pick from. We had GLND, which I know I saw Crow and some guys talking about earlier. You get this, and then you get what is it? Battle even to try to come back to life today. So some people probably may be looking at Battle there. It's crazy to think Mr. Kevin killing that on the long term, on the challenge that we're doing, the market madness. You got Ugro here coming back to life. Of course, EEIQ. What else did we have this morning? I know we had a couple other runners this morning. What else did we have today? We had PGen. That was one that traders were asking about. That was also running this morning. So we had PGen. So that's running this morning and popping up. So we'll go to PGen. Yes, PGen. Let's put it in. There it goes. Why is that not popping up? PGen. There we go. PGen. That popped up this morning. We also had LNEI. Did y'all see this play? Look at this play this morning. We'll just go back to a 5-minute time frame now that we're getting a little bit later in the. Look at that. Look at that nastiness. We're talking 40 cents up to $1. Racing over 100% and essentially giving every bit of it back. So you get that on days like today. What else? COD was one that kind of trying to do a little bit of a Ugro type of move, right? Essentially kind of ish, right? Trying to get that 20 to 30 push pop. It had a little flare coming out of nowhere there this morning. What was the other one? I thought we had one more this morning possibly that I alerted. I maybe had it alerted something. I can't remember all of them. I'm looking at the top gainer board right now. But then you find then and that's what I say. Then you get your one runner where everyone runs to essentially in the end and sticks with, and it's going to be EEIQ for now. I think Ugro has that chance to still go, but that today I think for Ugro we'll go back to it, and I talked about this on the post that I think I would imagine TTP has probably put out by now or will at some point today. Which is stocks to watch, right? Your hot stocks and tickers for the day. We'll go back a little bit further in time here. I love that 15-minute time frame. So let's go back to the 15-minute time frame. Zoom out a little bit here. Zoom out a little bit here. And you can see, we'll go to manual or auto. So you can see where this play came from with news. So we had first spike, right? We go from $2 area in pre-market, spike right from the twos. By end of day, we're hitting it flat. And what did it do yesterday? Let's read patterns here, right? So we have essentially nothing all day in this beautiful U shape here. Beautiful U shape. We squeeze where pretty close to power hour. And then again here in after hours. Wow, right? We lull out, don't really do a lot, sit around on day 2. Then day 3, we go banana Joes. And then on day 3, what do? Well, kind of similar just earlier in the day, but the main thing is similar is what? That power hour-ish close to move. It starts a little bit before power hour, and then you get, oh my good gosh, crazy movement up. And I'll go into this with you guys where I traded it. We'll go back into a little bit smaller time frame. But did you see how we pop in close to power hour? Same thing here. This one's bigger than this one, right? So you can see how huge this is compared to this guy. And then same with after hours. After hours, we get a pop. And then in after hours, we get another pop. After hours, we pop to new highs. After hours, which we can see here as we go back to a 5-minute time frame. See the trend from yesterday? Literally, look at the trend. Look at this. I mean, look how similar this is where we pop in pre-market, lull out. Pop in pre-market, double out, right? Double out right there. And then this one sits around for longer and doesn't have but one pop until later, where this has a double popper, right? So we have the first pop that sits into a flag very similar to this one, and then squeezes for more in after hours, which then looks similar to this, where we squeeze up and then squeeze for more in after hours. Then go back to yesterday just to take a look at it. The gap halt strategy. This is what TCGL turned into, which you guys got to watch, most of you, on live for, 2 months ago, almost on the dot, 2 months ago to pretty much today, when I traded TCGL on the long. Barn burner, right? You'll get those barn burner plays, but the thing is catching them low. And it doesn't look low at the time. but it is overall in these moves that have seen them over and over and over. These plays that can start skipping $5 at a time once they run through 30, and we know my 35 to 50 rule. I've talked about that on this live stream many a times. So what I'm seeing here is when I'm watching this in Power Hour, or close to it, right at it, right? Break this downtrend in the consolidation and squeeze to a halt up. Okay, you squeeze, you halt it up. Sweet. What do you do from there? Well, we only gap up about $1.20. We go from 15, the close right there is 15.22. The open right there is 16.20, right? Or open is 16.20. I thought it was 6. No, it's low. Open is 16.47. Yeah, open top left-hand corner, Josh, if I can read right. AK-47. It's 16.47. That's a $1.20 pop. So this is exactly how I traded TCGO. So when it runs into another halt up number 2, I'm going to wait. I'm good with halts. I know when they're about to halt, I'm going to jump in. And I jumped in right before it halted up. Only went 100 shares. Just I don't trust it. We haven't seen these plays since Ridley TCGO. We haven't seen it about 2 months. For another gap up. The first one's $1.20. The second one's going to be about 60 cents. And this one on the dot, it halts up at 18.10. That's where I get in at. We open up at 18.66. A 56-cent gap up. I mean, essentially 60 cents. My goal was for it to race into another halt up. It almost did. And then that's where I'm selling some anyway, of course, because I'm thinking we're about to halt up. We don't. And now we're what? Look and see what we're forming. If I scroll back and you only see that, if I could make it perfect where you could only see that one doji candle, which I can't, but whatever. And you only see this right here. I'm sure most of you and anyone probably on the live stream would agree with me. Yeah, just go ahead and cut it. You got a dub. Be careful. This thing could knife back on down. Well, no, what's it do? It squeezed right in exactly what this candle originally looked like. It literally originally looked like this candle. Look where it opened. Look where it opened. Look at the low. I mean, it looked identical. Of course, I try to get out. You're like, you gotta be kidding me. You look weak with the Space Needle, and then you immediately form the candle that you were and halt up on me. You son of a gun. But then look, this is exactly what I'm looking for. I was hoping we'd get this because usually generally run into another halt up, and you gap up one last time. So that was kind of my goal. And then 22, I mean, of course, $4. That's a great move. And then this is where you can really, I've said this for years, over 20 is where you get gap ups that get even bigger. And you can see how big the gap up was here. And now I'm in a one-on-one. I'm in a one-on-one and we're going over his trades and going, of course, that's what I love, the tracking, the journaling. I always talk about that. We got to go over what you're good at, what, blah, blah, blah. Got to figure that out. We're going to figure this out together. Well, I'm going, man, we got to trade this because we're getting all these gap ups. The first halt down is leading to a gap down. No ifs, ands, or buts. We're getting a gap down out of the first halt down. It's happening. So as soon as I wait for it and I know we're about to halt down, I get in. And he did too. At first, the LULD was reading 24 right here, right where we halted up at. And I'm like, boy, if we open up there and crack below this halt strategy, we're going down for more. This could be a banger. I didn't get this, but boy, I'm about to get this. Nope. Changes, finally comes up. It still opens at, mid 25s. So you still get $3 out of this. I mean, that's $3 that you didn't have to watch. Like I said, you don't have to get in at 28.75 and then watch it get 28.50, 28.30. Bounces back up to 28.70. Oh, now we're at 28. Oh, we're in the 20s. You don't have to wait for all that. Free. I'll call it free instant money. These are, if you can trade them with confidence like I do, I'm telling you, if you learn to trade them, which is not hard, as you can see, it's just the gap halt strategy, halt gap strategy. Anyway, so beautiful move here on the way up, then on the way down yesterday, just in this area where to trade it. I wish I would have held this original one longer, obviously, but that Space Needle freaked me out. So I wait for it to just go. I'm in. I don't want to get it, even be an asset. Well, do you get in again? No. Nope. I should still be in here. I don't want to chase. Now I am chasing. I didn't feel like I was chasing here. I have this strategy. I have an edge. I know if I can still get in on second halt up, I'm going to see probably a third halt up. I'm minimum going to get a gap up and a spike. So minimum, I'm going to gap up and get a spike. So minimum, get $2 out of it, close to it. That's fine with me. $1 or $2 for free, give it to me. Was anticipating this, but whatevs. So then I still get 2 or 3 more points here. So you don't feel bad about, yes, there's a lot I missed, but I still got some out of it. And now here comes that trend crack and reversal, dumping on down. Merlin, I do not hear him dream much. He is a loud dreamer. And EEIQ is still the baby for me today. This is the one I like the most. Moving forward is going to be EEIQ. And this area we keep teasing with. So this is kind of that, are we going to squeeze? This looks squeezy to me here. Mike, what's up, though? What do we got? Larry Boyd. PGN been a good trade this morning. PGN was good. GLD, nice doji on the 15-minute. Yeah, I just think that it's going to stay down today. I mean, it could possibly pop back on up, but... And the main thing why to me on G, I can't remember if the float's got to be small. And then it's got that spread. And so when you have these plays that have a really low float and they have that spread to them, they can go. It does not take much to get them going. Hey, Merlin, you're dreaming. You're dreaming really loud. Merlin, hey, there you go. Good boy. Yeah, that's the thing about today, just going back and forth, from the different tickers there. But yeah, that Ugro trend short was really nice here. Even just, I know high of day 35 was money. I talked about 35 being strong resistance. And that just comes back to yesterday. This is what we first ran into at the closing bell, and before we did reverse back down hard, and then we had that move up in after hours. But I knew that area. We just know 35. 35 is strong resistance. Okay. I think that's my Google Calendar letting me know the call-in show starts in 30 minutes. You guys got the update too. And then on top of the fact, I know it's in the 3-minute time frame, but I love trying to find that time frame where my moving averages matches up with my VWAP. I don't think the VWAP's the biggest key all the time in a lot of stocks. Small caps and mid, I say this isn't a mid cap, but a play that moves into the $20 range. It seems to work a little more often than any play that costs $100+. Just throughout the years when I look at, a lot of people love the VWAP, but especially traders that are trading small caps, micro cap, 30 cent, 50 cent, $5, $2, $1, $10, $13, $12, $7, $3 plays, right? Probably looking at the VWAP a lot. I love when they line up together. Generally when they get really tight like that, now you're looking to take trades back and forth off of them. Not so tight earlier, but now that we've gotten tight, you can see we're trying to hold it there for a minute. We crack down for more. So I'd imagine when we move back into it, it's going to be resistance now. Lever Boy back in a half hour. Yep. In the call-in show today, Mr. Steve will be joining me. It is my first time getting the call-in show up myself. So I, bear with me as when Steve gets on. Hopefully it doesn't take me too long to get the call-in show up, rocking and rolling. Once he gets here, I'll let him do some talking and maybe going over some charts or something, and I can work in the background and get that live stream up, or the trade the pool, get the call-in show going. Got to get the Google Meet up and put it in the background of EV Mux. Shouldn't take too long. Shouldn't take me too long there. And then yes, topic today. And again, it goes great with Trade the Pool here. Why we are at Trade the Pool and what we're of course trying to aim for, which is what? Getting out of worrying about trading your own money, your own equity. And then on top of the fact too, when you have to be at a prop firm when you're over at a broker, and a trader like me that now I know I'm not doing as much shorting as I was. That's true. You go back to 2022, 2023, into 3 straight years, 22 to 24, into early last year. I would say I was an 80 to 85% shorter, and then the other percent was long. So I was just nothing but shorts for the most part. Small cap sector, there wasn't a lot of good breakouts. 22, 23, 24, there were times to go long, but for the most part, plays would pop up. Didn't matter what the news was. And again, I know we talked about this Paula in chat. I don't know what year that was, Paula. It was one of the years, though. I think it was in 23 or 24 because I know I was hitting my stride because that was one of those days I remember coming in because I had to come in every day, 8 a.m. Eastern. It was Shorts Anonymous. I mean, it just nonstop. You just talk about it here and then there. I mean, it was like every day I'd have probably at least, I would say, averaged about 2 trades in pre-market a day because plays would pop up on news and drop. But the point being the one Paula was talking about, you're sure, blah, 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 Josh Short, it had something news with NVDA, had some kind of news with NVDA. And I said, no, I don't care. This is what's been happening in the trend, right? And sure enough, trend crack, reversal, essentially kind of like what we're seeing right here on Ugro. It was up in the morning on pre-market for whatever news, up. Beautiful touches on the trend line. Candlestick confirmation would always be perfect. You get in right here at 31.50 and just watch this play die out. Take profit here at around 29.70. Take profit here right around 28.40. Take profit here. Again at 28.620. then maybe holding on for small shares for movement down. It just with every day, all day long, you know, from, well, I say all day, but from pre-market to about right now, and I'd call it a day. Right now is usually done. This was I'd trade for about 3.5 hours at most, and then, like I do now, get into one-on-ones or do a lunch recap or whatever it may have been. But it was nonstop shorting. So when you have back then, if I didn't, you know, if I trade the pool, gosh, just not have to worry about locates, you know. So don't have to worry about locate fees is so cool. It's just the fact that I don't have to worry about locating. I can just go. I mean, I hadn't thought about it in so long. It's kind of crazy because for the longest time you had to go, well, how much are locates? Hey, AK. Josh, well, how much are locates? What's this broker? What are they? You know, how much are they here? How much are they there? That gets annoying to have to worry about that over and 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 every day. You're worrying about how much locates are going to cost. You know, so that is again why I brought that up. It was just one of those things on the spur of the moment this morning. I forgot. Joe asked me yesterday. I just get so busy. Once I say busy, but once the day's over from my stock trading, like in the afternoon. I get to walk. It's the same thing. Monday through Thursday. Like today will be the same thing. Get done going live for doing whatever, doing one-on-one. So essentially 4 p.m. Central, 5 p.m. Eastern, we'll just call it 5 p.m. Eastern. Boom, done for the day. Literally like right 9 to 5, which it's more like an 8 to 5, with some breaks in between. And then I'm done with the computer. Done. I'll come back intermittently and check on stuff. You know, especially yesterday. You know, if Grow, Ugrow's doing something, whatever, what have you. But that's my time to shut the brain off. You know, I've done my homework. I've charted. I've journaled. I tracked. I've journaled. I've done everything. I've done it all. Done. Time to cut it off. I need away time. I don't want to be glued to this. I need to learn to be disciplined. That I don't always have to be in here. That I'm not missing something. And I love it because I don't like. But then my phone goes down. I'm off my phone. I'm done with social. I mean, I try to get posts in every day, like whether it's a lesson, videos, Instagram stuff, stories, adding to my, hey, here's what I'm doing. Check my life out right. Got to try to be some kind of social media star, so to speak, and grow the brand, and especially with Trade the Pool and help them grow, which I love so much. But I'm straight to every day. It's get done with office work, walk the dogs, and then I get on the Peloton and work out after that. Like weight restriction or whatever it might be, or whatever anyway. And then feed the pack. And then after feeding the pack, that's break time for about an hour for me and Avery. We shower, relax, chill, whatever we're watching. You know, that's when we always have Big Bang Theory on in the afternoon. I think it's MTV or whatever it's on there. Whatever. You know, just chill time for about an hour and a half. Then we get to cooking, dinner time. You know, what are we cooking for dinner? French wraps, French fries, whatever it might be. Then it's dinner time. And then it's watch something, chill, and then pass out. But Joe last night he messaged me. He was like, "Hey, topic for tomorrow," and I didn't even get back to him. I felt so bad this morning. They're like, "Hey, if you can get in the meeting this morning that we have, which I'm so busy every morning," and I was like, "Oh crap, the meeting! Yes, let me get in on my phone." And I was like, "Yeah, call and show topic. Sorry, yes, you know, so we can promote it." And I was like, 1, 3, 2, and I did that. And I was like, out of nowhere, I was like, "How about why to trade prop firms and why to trade your own capital?" He's been on the call-in show. Of course, Steve's got the afternoon. You know, so if anything, you know, you know, you'll see him in the afternoon. But yeah, Steve's been on the call-in show. Of course, the lunch recaps we're doing now. Don't forget about that. Monday had a few more people on. Not as many yesterday. I think some of you guys forget, but stay around. Monday and Wednesday we're doing those lunch recaps, which start at 1 p.m. Eastern. Right at 1 p.m., 12 Central, 11 Mountain Time, 10 West Coast. Join us. We recap the day, what we've seen, what our trades were, why we're trading it, all that good stuff. Boom. Those would be your main resistance and support lines right now. I'd put even one in right here, possibly. You know, where I was talking about taking profit earlier. Didn't really bounce on it. We'll see if we resist there. Kind of out of the gate we are so far. Trying to break this real overall strong downtrend. You can see it's real overextended. So these usually typically, this huge sell-off won't continue. It's going to break, especially a play like Ugrow and consolidate. I still like my favorite play is going to be EEIQ back down at that $7 area. So EEIQ, $7 is the play for me. Waiting for that. Otherwise, it's just a slower play. Oh, here is if I can say AIFF starting to push here. I'm not a big fan of shorting the top, especially a triple top. Could squeeze from there. This is in consolidation zone. Let me pull this back up on my Think or Swim over here if I could. and see the upper band to see what's this upper VWAP band doing, and really not moving up much. Has gone from 248 to 250, and I would say most likely we're going to see some sort of a pullback here, because usually that upper VWAP band will start to show me a little bit of leniency as far as moving up. Okay, I'm going to give this guy a little bit of a break and start to move up. It's really not doing it right now, so I would say watch for this to possibly pull back for even more. Or again, I guess we could say. What's up, Mike? How we doing? Yeah, thank you there, Paula. You got Phil. No, Paula, Paula, I'm going to sit back. So I'm not a big fan. I mean, I like the 810, 815 mark, Paula. If you want to trade it good, I'm going to go down here. I'm going to go in the safe area, 690 to 7. If I'm going to trade here this late in the day, Paula, usually I'm done at this point. If it's a Monday through Friday, most days of the week, I am done at this point. I don't really care to really look to get in trades. I'm usually done. My edge is gone. Volume's dying off, a lot of the time. So I find the safe area for the dip and not try to get into something that's maybe consolidating and losing a little bit of volume, maybe losing some traders, losing a bit of interest, and just find that area that I can trust the most. 2 would be it. I actually said this earlier on my live stream, that, and of course the morning alerts if you get them. The support for AIFF. This 215 area, which was built in pre-market as resistance, has really shown up beautiful in market, down to 205. Beautiful bounce, that's the dogs barking out there. So those would be the 2 areas the two like, hey, I'm gonna leave these orders in. I like this area. My dog's out there barking. It would be 215 to 205. 215 to 205. Or the 790 or 690, 685 area close to 7. We'll go to EEIQ. All right. I keep looking at my left-hand side because I'm also used to streaming that you're seeing my live stream. So this area right here, and I'll zoom out just a little bit, you can see this old resistance, new support area right here. Oh no, let's go to AIFF. Josh, quit switching back and forth. You were on AIFF. So here we go. This old resistance then's become new support. I've got a forever line in at 205 that I've had in since November of last year. So that would be the bounce area. I like 215 into 205. That would be one you could leave in all day long in EEIQ. Just the moves down. I love this area. Absolutely love this area. So this will be the other one you could leave in all day. And my area is still working. Not that I liked it as much, again, at this time of the day, but this is done. We can see we were not going to hold that. I knew that was not going to hold. And what's really trying to hold is this uptrend channel right through here. If you took the 810 bounce, your goal, and I talked about this, 860 to 875 is your target number 1. 810 or 850 to 865 is target number 1. Take a little profit there. Slower movement. What level did you say for EIQ? 690, 685, 690, 685, 690, 685. So like right now, this is where if I was in this play, I would be trimming some of this, trimming a little bit into this area right through here. Anything in through here, I'm trimming. Seeing the reversal from earlier at 875. We know the 875, we'll talk about it a lot. Then we see we're bouncing off of that, not for long, but just enough to say, hey, I got to take some profit here into this 860s, 870 mark. Big move, no, but again, overall, taking in for the volume that you have, some of the smallest candles of the day, anyone should be happy with the 40 to 50 cent, 60 cent, wherever you got filled bounce right there. Not taking all of it, save some. I would say, stop loss entry somewhere in that area, let it run. Stop loss somewhere in that area, maybe keep it back down low at even at the 785 mark. Give it a little room to run here. It's going to have some trouble for a minute and just maybe even start to channel around. I'm telling you right now, this is that I always call this pre-lunch. We're entering the pre-lunch time. This is where plays start to lose volume. Traders lose interest. They move away. Go look at EEIQ yesterday even. If you go, or not EEIQ, but go to you grow from yesterday, right? It had times where it wasn't just going banana Joes. And that really started right around this time, right around 1050 yesterday is when it started sitting sideways in the 14s and 15s and then just consolidated into that lunch recap that we had yesterday where even T-Web and a lot of traders were saying, hey, it's holding 12 or 13. Hey, it's holding 13. This, I would say coming up in the next 15 minutes around noon Eastern for the 2 hours after that, from noon to 2 Eastern, from 12 to 2 Eastern, usually the deadest, slowest time in the day for the most part, for the small caps. Taquito, haven't seen you in a minute, brother. How we doing? Yeah, battle on its way. It's trying to battle its way back on up. You want it to get back up to 280. Okay, so gotcha. It's like, I thought you were already in or something there. I got you. You want them to those levels. I got it. Love it. What's up, brother? How you been? Hadn't seen you in a while. Used to have your own lobby. What have you been since you left? What have you been doing the last 2 or 3 years since I've seen you last? Glad people are still finding me, which is really cool. I love that people are still finding me wherever I'm at, doing my own thing here on Trade the Pool, Monday through Friday. Now, don't forget, call-in show coming up here in about 15 minutes. Today's topic, why to trade prop firms, especially trade prop firms and go over to prop firms like Trade the Pool, and why to trade with your own equity. What's the difference there? This is a good topic for the day. This is a great topic, actually. Steve will be joining me for the call-in show today, and not only for the call-in show, Friday nights, baby. Yeah, there we go, Trade the Pool. Call-in show, why trade prop firms and why risk your own capital? Why? Well, there are things to risk your own capital, and we'll talk about those things for sure. But AIFF hit new high of day right here. AIFF hit new high of day, but Friday, don't forget the call-in show today, but Friday, me and Kevin back, and that's where they can't keep us apart. They can't hold us down. Well, every Friday night here on the TTP stream. That's right. It won't be live at work. And I know, Gil, if you're listening, I don't know if my beautiful bestie's listening over in Israel. If you are, I know you teased us going live on Friday. I'd love to figure that out, as in having a Friday stream, as in me and Kevin or someone goes live on a Friday. We'll love to figure that out. We need to get that going. I'll message you this weekend, Gil, and we'll try to brainstorm that. Anyone else listening, over in Israel at home base and headquarters, I think that there's something to be had there and some value there for sure. We need to figure something out. We'll brainstorm essentially on the Friday stream. But for now, which I love, we will start Friday nights together. Me and Kevin have been doing Friday nights for at least we started this year. He was doing them last year. And took a little break from the holidays. I'm like, we got to get these going again. What happened to them? So we kind of vowed to ourselves that each week, every other week, I would host or he would host, and we'd go back and forth between who was hosting, my YouTube or his YouTube. And we kept going back and forth. And we started that this year, and we've been going back and forth. I think we took about maybe a 2-week break because I had the AKNR and I couldn't do it. Of course, anyway. I think we took it, and the next one, but we're back at it. And now we pitched it, or Kevin did, and then now they're all go. And so let's do it. So Friday nights we will be live for at least an hour, if not longer. We'll have a set time, probably either 8 or 9 Eastern, 8 or 9 or 9 or 10, I should say, 9 or 10. So either be 9 Eastern starting time or 10 p.m. We'll figure it out. We're ready to rock and roll. What name should? Yeah, all right, yeah. And anyone out there? Taquito, Aussie Chick, Mike, if you're listening, Mr. D. Ryder, Smoked Tuna, Larry. I think everyone's taking a break to the call-in show. Tack better get his butt back over here in the crow. But, yeah, think of it. What could the Friday night show be called? I love this. This is my dad's old show, Joe, if you're listening. Anyone else there? All the guys over and listening that are helping out and Trade the Pool. Carlo. All the guys that are listening. Gil. Ayush, if I say that right. Ayush? Is that right? Ayush? That's got to be right or close to it. Anyone that could be listening over there. Of course, Cats, if you're listening. My dad's old radio show was a great one. He loved Seinfeld, and that was the show about nothing, right? His radio call-in, it's not around anymore. They've renamed it since he retired. How about the show we'll start off with the show with no name. I loved it. I was like, that's such a good name because everyone's got a call-in show. Drive Time Sports with or whatever. Everyone's got a call-in show everyone's got a show like on radio, sports show. Like it's labeled something, like Sports Center or First Take. All the show. Every show's named something. Their show, they're his. From 6 to 10 in the morning. The morning show host, the show with no name. So we could start off with the show with no name. What do y'all think about that? Yeah, Friday Night Live would be good. FNL, Friday Night Live. I like it. That's a good one. FNL. Come join us, FNL. Because you got Thursday night football. You've got Sunday night football. You've got Monday Night Raw. You've got all these like labeled names. Friday Night Live, baby. Because what they have here in Arkansas, like their show High school football is huge in the South. It's huge in a lot of states, I know. But high school football is huge, but it's called Friday Night Lights, right? I think that was a freaking movie, whatever. But Friday Night Lights, right? Boom shakalaka. Friday Night Live, baby. Battles. Literally, Takeda was talking about it. Those two plays now. AIFF is getting that reversal back on down, but Battle's trying to make that continuation on move up here. It's going to have a little resistance though at this 680 mark. I do like Battle back down for a bounce play if anyone's interested at the 630 to 620 mark. So somewhere around this 640 to 630, 640 to 630. Back off this 50. Beautiful bounce potential right there for Battle. I think, in my opinion, after yesterday's low at 4, whatever, almost in the right around 5, I'm going to say that's probably the bottom, and this play moves back up through tomorrow, does Battle, in my opinion. Merlin, you were just sleeping. You get your booty over there. I'll let you out again in a minute. No. Oh, everything's dumping right now. I say dumping, but I say Microsoft, major pullback here. Oh, man, but the one that I called out this morning was Meta. I said Meta, oh my gosh. I know SNDK's down a ton today. Check out Meta. Meta just had no chart to hold this up. I should be short on Meta. Oh, I should be short on Meta. Oh, I should, oh my gosh. It just hasn't been here in months. You go back to 6 months, you go back to a year. We have not been under this mark in forever. And I said, if we get back under this 580 mark, she has dump sauce written all over her. And boy, oh, today has been a blood bath. Wow, Meta, no. This is the exact chart I was talking about in my morning alerts. Joe, if you get these, I know you do. I don't know if you do, Paula. I think you did. I can't remember if you still. Anyway, but I've been talking about Meta. Getting these charts back into areas we haven't been in for a while. I want all these large cap takers or sectors, whatever. I want everything down. I'm pulling back on down. Get into a chart you haven't been in for a while, because then you can staircase down. You get the pullback out of the gate. Then you get the bottom bear flag, you crack the bear flag. You form another bear flag, you form another bear flag, and now we're about bear flag cracked out. But gosh darn it, this is absolutely beautiful. And what I love to see, and I miss these days, where you could just, it's not like what we have on Microsoft did this yesterday. Straight down, right? A lot of what we've seen here recently is just right out of the gate, just dump a Ruski, right on down. And then it just kind of chops around. Sometimes makes a red to green move a little bit-ish, but mostly dump and then just chops, just does nothing. I love these days more. These days, these plays can go down more. You get more trades out of them too. Gosh, I love, this is gorgeous. This is absolutely stupid pretty right here. Man, oh man, oh man, oh. I wanted to go back to my plays I looked at this morning. That lower VWAP band just continuing to cave down now. The lower VWAP band in the 554 area. This play has, this has written all over it. It's going to go down for more. Whiskey, Wicks, and Watchlist. Oh, there we go. And then we're all drunk. Just like a bunch of drunk Irishmen. Hey, matey. What you got there, ya? I'm drunk. I've got the Scottish Scot. And then we're just talking accents. Yeah, there we go. And this is what we call Drunks Anonymous. Now I've got to actually somewhat not drink, okay? Usually I would have a cocktail. I'm sure TTP will allow a cocktail. That might be it. I want to be... Because there have been some of these Friday nights where I'll join Kevin's, because Kevin's hosting it. And listen, it's late. And I may have had a couple too many drinks. Let's see. Anna could be in one squeeze in today. So, Anna's still on watch. Yeah, Anna, I don't know if it does it today, but it's a back burner play for me. Anna, 100% back burner play. Back burner play. The after hour degenerates. Yes, the AHD gens. Well, I'll tell you it's real. You know, that whole... I know you get to a point if you get to that successful part of being a stock trader, which I know everyone, I just want to get to that part where you want to be consistent. You want to be able to come in and not have that overthought process. You're not sweating all that. You're starting to get it. But I'm just saying at first though, everyone is just, oh my gosh, we're all degens. I mean, we are all just. What's Gil saying to me now? What's Gilly saying? Oh, thumbnail for Friday. Ooh, got the thumbnail for Friday here. Ooh. Yeah, Friday Night Live. Love it. Yeah, I did, but there we go. There we go. There we go. There we go. Like it. What do we got here? Thumbnail for Friday Night Live. Woohoo! What traders talk about after dark. All right, there we go. Friday Night Live. There we go. Looking pretty good. Looking pretty good. Let's see if we can get that my camera to focus in on that there a little bit. There we go. Oh, it's a little glary. There we go. Look at that. Look at those beautiful men. Good job, Gil, Ayush, anyone over there? There it is. Once they calm down a little bit. Boom. Love it. Beautiful. Get ready. Tomorrow night, it's on. Like Donkey Kong. I can't wait. And like I said, we'll try to get something going on Friday, even here, during the day. Whether it's we'll figure it out. I would love to do like a something like 2 to 3 hours here, and then I don't know. We'll figure something out. We'll have to figure something, spitball, brainstorm, get something going for Friday during the day as well. That'd be cool. EEIQ maybe offering tomorrow. Yeah, well, anytime it could be an offering on any of these plays. I mean, you grow. I said this yesterday. That's when these plays get scary. Who is that, Mr. Huey, or who is that? Double H. I'll call you Double H, not Triple H, but Double H. Huiki almost looks like Luigi with a Y, but starting with an H. Speaking of, new Mario movie. I don't know. I just don't know about the storyline on this one. Looking like we went a little too much on this new Mario movie coming out. Don't go see movies as much as I used to. I love that first Mario movie they did. We're doing too much to the Marvel. Like, it's like, hey, we're going to make a whole, whatever it's called, universe. I don't want a Mario universe. I just stick with the video game. The characters you had to work with. Anyway, call out competitions and the winner gets a free. Oh, there we go. There we go. Well, I will say taquito. That would be a good idea for on Thursday or Friday. For Friday, that'd be good for Friday. Honestly, like during the day, right? Like once a month. Like for we just do. Why don't we do it every Friday? It would be cool every Friday if they let us give one out every Friday. A 5K eval for whoever would win. But yeah, that would be. Got to come up with something cool like that for sure. I mean, people even back to, God, who was it? Was it Larry Boyd? Someone in chat was like, I don't know if it's Larry. I haven't heard from a couple of guys in a couple of weeks that would call in. Who's the? Anyway, me. They want to hear me, or at least they say me, but someone do like a sports. Where I know we got Meta here, cracking on down for more lower VWAP band at 5450 right now. This play looks like, as I just said, wants to come down more, and we do have a little bit of this 560, and you call it like a game, or if someone's actually trading right and break down the market like it's that would be which I guess we could find that the sport I don't know what we'd call it, couldn't the sports recap because it's then people think it's sports, but with sportscaster Josh Smith, I mean, but people have that's cool. Oh, I'd love to hear that. Where it was like, because we did this at the Money Show where it was a trading competition. I stood in between both the guys with the mic, to kind of get their thought process, and they traded against one another for 3 minutes. Downset, Hut, 1, 2, 3, go, and they had 3 minutes timer. Michael Katz had it. He had them. All right, go, and they got 3 minutes to trade. All right, you got 2 minutes left, minute left, 30 seconds left, right. And they had 3 minutes to take trades, whether they want to just get in something, go hung it, or whatever. And whatever. But all right, we got Tim here. Tim, where are you from? All right, Tim, what are you usually doing? And I'm breaking it down, like I'm kind of all right. We got Tim here from Orlando. He's actually down, going up to RSO, going short on Tesla, going in 5,000 shares, going in mega. And then I'm calling it like it's a game, right? So I'm sitting back and forth, watching the screens, what they're trading, talking about, they got this. He's down this much. Oh, 30 seconds left. Oh, we've got Tim down $4,000 over here to win. Whatever it was. So it was really fun. I would have loved to have had that. I have the video from it. I need to go back and try to get someone to edit that up for me and get a post out of it because it was fun to do that, you know, and then looking in the camera like, oh, this is crazy, because there were a couple that were, you would go down to the wire and you're like, who's gonna get it right? So it was fun to do that. I love doing that too. I mean, of course there, but then even before, of course I knew I'd love it. I think I would, but then at the Money Show where I'm like, hey, I'm gonna host it. Money Mitch unfortunately kind of came down with, you know, a few people did start that wasn't feeling as good, and so it was just me to host it. It was me and only me. Michael Nas tried to get in for a minute, but he knew, like, this guy's got it under control. Like, I'm just gonna step back. He even said that too. Like, I was gonna step in, but you had it under control, and it really just needed one anyway, where you just one in the middle, kind of go back and forth. It's such a beautiful, cool setup there at the Money Show that we had. I don't know if you guys saw that. I'll have to show this off real quick. Where is Steve coming in? Where's my man Steve? Steve's got to be coming up soon. My man Steve, the Achieve. So let's see if I can't find that real quickly. Such a cool setup. Gil, what was it? Michael Katz, you guys absolutely killed that setup. I mean, everyone kept saying that. Like, they were like, this is the best setup. This is by far, I don't know who, but everyone kept asking about that. So here we go. Here's a cool picture I got from Trade the Pool with these guys. So this was absolutely cool. Such a cool picture right here. So here we go. Get that pulled up. Look at this. Got Gil. And of course, then I was there. That was kind of right before the trading competition. But check out that. 2 monitors that come over, look at stocks while they were moving. You could trade, yada, yada, yada. Me pointing at the camera there. I think I had one of those Florida Joe taking that picture possibly. Boom. That setup in that booth. Because look how plain Jane, no offense, Jane, your beautiful name, but you get my point. Plain Jane, look at the other booths. I mean, look at our booth. It's lit up. Everyone's coming over to it. We're, just loud and just trading and having a good time. Look at the booth there. That booth. That's a booth among booths. I mean, it was funny, though, how many people were like, y'all's booth. Man, y'all's booth. I was like, it's a pretty cool booth, isn't it? It's a pretty cool booth. All right, call-in show, which I'll start getting that together here soon. I know we got to get Steve over here going to get it going. You can chat it up, too, with me for now if you want to. Just let me know why to trade prop firms, why to trade your own equity and your own capital, why to risk between the two. What? Okay, cool. I'll start setting it up then. Cool. Sounds good. Joe, wasn't that fun, though? Like, I want to do Money Show every year. I know. I want to do Money Show every year. Yes, brother, that was me taking the photo. That's what I thought it was. That was fun. We need to take the booth to call. Oh, Joe. Yeah, 100%. 100%, Joe. 100%. Let's go over here. My calendar. She's my calendar girl. Oh no, I'm going to have to create my own. So we may need Kevin to come in real quickly, or someone to accept me into the because this happened before. So I have to be accepted into the Google Meet. So if you're listening, Ayush, you're good, yeah. Like, hey, can I come in? Can I get into this meeting? So we're waiting on that, and then I'll put that over on get that rocking and rolling for us here. Here comes Steve. There he is. Dun dun dun. Dun. What's up, brother?
There I am.
There
How
I am.
you doing, brother?
Rocking like a hurricane.
Love it. We're cooking here. This is a fun day. So sorry I was a few minutes late there. I was had too many programs open. I was monitoring the situation on all my screens here. What are you up to here?
Yeah, I'm gonna get the Google Meet going up and going. I'm gonna get this the call-in show going here. If you want to get, I'm waiting for Kevin to let me into the Google Meet. So
let me in. All right, I'll get in there too.
Yeah. If you wanted to, you can. I just have it on Meta for now. It was a great dump today, but I'm just waiting on him to let me into the meeting.
Yeah, sure thing. All right, I'm waiting there as well, so I'm going to go ahead and let you know what I'm seeing real quick here on SPY, just because I'm in a short. So I'm in a short on SPY. I'm seeing just weakness, weakness. I'll pull my screen up too if you like.
Yeah, go ahead. Yeah.
Awesome. And if I give it one of these, no, then it's like a little person next to us.
Quick, how to operate and manage the.
There we go.
Awesome. Look at that production value. Thank you so much. All right, so guys, what I wanted to show you here is this is the bear flag we were watching yesterday. I know messy chart, but bear with me. This bear flag broke down after hours. We got a back test of our hourly trigger, the stair step, and that's where we were. That's where we flipped short. We took a little bit of a long in the morning, and I think that we're starting to break down here and digest some really important levels. So flip into SPX real quick, just because this is where the important level shows. Here we go. So we are now through this 0 gamma, this big yellow level here, this 65.50 in particular. So I'll move it right around there. As long as it can't break above this, we can really air out here. This is a very sketchy structure, and I'm pretty sure we're headed down to fill this SPX gap to 6508, call it 6500. All right, that's my community service. Don't get long. That's what I got there. Really looking like a flat bottom breakdown here. Like if we inverse this chart, and this looks like it wants to break out, right? So for me, I'm sticking short. I'll trim a little bit into this low though. So 6525 on SPX.
So I was getting everything going here, brother.
Oh, no worries, no worries. Oh, it's been a good day. It's been a good day. You know, when those days when you just look over at your broker and you're just up a little bit more than last time? Feels good. Another interesting play, we're seeing these war premium plays continue to just thrive. So next, we've been in and out of this one. Added some yesterday, I believe. Was it 2 days ago? I forget. But that one's really cooking. And on the daily, these things can just keep on screaming. So we got the breakout. It was actually faster than I was hoping for here. And I think next level is to fill this low volume node up back to $10 here. That's what I'm holding for. Sinister Steve. Crow, is that my new name? Dang. I think I'm a nice guy. Josh, am I sinister?
Oh, you were not at all.
I gotta check. I gotta check. Maybe I'm missing something. But I think if anything, I'm silly Steve. I'm silly Steve. I'm feeling silly. Or what about Steve-O Suave? Because I got a haircut. How about that? We're gonna find something. So going around the horn here, let me show you what I'm seeing until we get this underway. ARM. I'm wondering, is this a short? These two top wicks have me wondering if we can short this back into this hole, or at least 150. Thinking that's a decent setup. Still watching the space plays. I bought some today. I don't know if I'm silly. I don't know if I'm being silly Steve here, but we have the SpaceX IPO coming up, and I just have a feeling that all of these names can just move really, really fast. It might be an obvious trade, but I think the risk's there, or risk reward is there. Have the small cap space names been going crazy too there, Josh? Oh no, did I lose sound? I apologize. Howdy. All right, I think we might have lost Josh there for just a sec, so I'm going to go solo here. We're going to do a little bit of play casting until we get this going, but don't go anywhere, guys. We will be right on back with some really good talks with traders. I believe the topic today is going to be, when is it time to trade your own cash, and when is it time to use that prop account? What is the best time to actually put your own money on the table, and when is it time to use that leverage that these prop firms can give you? So that's what's on tap there. Meanwhile, SPY just digesting here. I think it wants to break down. I'm still in my short. My stop is where this alert is. So over this swing, over this wick, it's a manual stop. So I got this setting here. If it wicks and closes below, I may consider holding, just like I did this time on this middle big candle here. But a candle close over that, probably going to get cooked. VWAP is a little bit above, so that's the one area where I could get stopped out. It could hit that and reject. In general, I think that we're just heavy still. I am open to the possibility of us catching a little bit here. If I, look at bookmap on my other screen. Looking like no real support. Yeah, till that 60. Got to lean way in. 6580 level on ES, which would be roughly, I do believe, under the pre-market lows here. Right about 650. There you go. That makes sense. Aligns with 650. So that's the big magnet that I'm seeing on my screens, and I can't get long until we get the sweep out there, until we really wipe that out. So that's where my head's at. A few other charts that I think are really compelling here. Because here's the thing, I'm bearish, but I still want to deploy some cash. I got a lot of cash. Where should I put it? I'm thinking about Moderna. This is setting up really nicely. Really tight flag off these moving averages. If we get one more day tomorrow where it comes back in, I'm going to zoom in for you. Where it comes back in to the 9-day. So that's going to be roughly $53. If it wicks back in there and shows strength, shows that buyers are stepping in on a higher low, I think it's time to get involved, and maybe 1 or 2 more days of that before we try to break out. I would be trimming the 58 handle into my monthly trigger there. And I think that that is a pretty decent setup there. So this is going to be something that can move independent of the market because it is healthcare, it's bio or pharma, I should say. Yeah. And essentially, this can act as kind of a ballast or a barbell in your port to some of these tech-heavy names. A few other names that are on my list. AMD having a rough day today, but I want to see if it holds this gap, and this is potentially a really nice entry on a very strong chart. The unfortunate part is that when you have such a nice setup in such bearish tape, you could get a unicorn that just doesn't care about SPY, right? Just does its own thing. You could get a really nice setup that gets stuffed by things outside of its own control with market heaviness in general. So just something to keep on your radar. Meanwhile, we're going to bounce back to that 1 minute here because I see SPY having a hard time. No audio. Oh, okay. I apologize. Is this coming through now, guys? I'm so sorry there. I appreciate you. It sounds like, my levels are looking for some look because I hope that this is working. And what we're doing here is we're short SPY. We're looking for a breakdown through this bearish 651 first target into that 650. Hello, howdy, John. How you doing, man? Can you hear me?
There we go. We're on the call-in show now. But can you hear me?
I can hear you. Can you hear me?
I can hear you.
So we can hear each other. This is progress. I love it.
Yeah, I can hear you for sure. Yeah. Oh, and I just emailed you the link to the new link for the Google Meet. So join the new link. Okay, yeah, there's another one. So join that one, and when you get in here, we'll go from there.
Perfect. Un momento. Oops. There we go. All right, SPY playing footsies with a big drop, guys. Be careful. Under here, we could really roll. I see we got talk in the house.
Yeah.
What's up, baby?
No, you know when did you join yet? The meet?
Yeah, it says please wait until the host brings you in.
Oh my gosh, I don't know what's going on here.
Well, let me try again. I apologize.
There
Sometimes
should be there should be one that ends. You're good. There should be one I just sent. The call
this one's different.
Yes. Yeah. There you go. Here he comes.
The problem was between the keyboard and the chair.
Got it. Boom. All right. Sweet.
So I just muted in the new call here, so I think that should be good. Let me know if there's anything
Mute
like
the well. What you'll want to mute EV Mux, so that way, because what I have is I want stay on because that way we want to hear you on the Google Meet, because that's where people will call in, so they won't be able to hear you unless you're on the Google. So mute EV Mux. Okay, here now this is where things come into play here that get a little iffy for me. Yeah, he's on the Meet, but that's the thing is where.
Okay, I'm sorry, Ayush. I'm having a little hard time hearing you.
I got you. Gotcha. Cool. Sounds good. So yeah, just mute the Google Meet. Good to rock and roll now. All right, sweet. All right, call-in show team. Like I said today, guys, good one. Because I'll ask you this. Really, you can start off. I'm sure I've heard it. I've blabbed enough about my journey, maybe possibly, and I haven't heard yours, regardless. So, what brokers were you with? You know, again, trade the pool versus your own capital. Tell about that in your journey and how you feel about it now versus maybe when you first started trading.
Let's see. You said trade the pool. Trading my own capital versus somebody else's money. There is correct.
Right. Yeah. I mean, because when
Yeah,
I first
okay.
started, there weren't prop firms. I mean, that was the thing. There was no prop firms when I first started. You know, and there was, especially for small caps, it was always futures, and so it's definitely been a switch of mindset for me now versus say like 7-8 years ago.
Well, you know, for me personally, I'm right there with you. I love scalping. That's my thing. And so my biggest issue as a trader, trading a relatively small account, you know, especially in the earlier days, is that I'd find myself running out of buying power before the real move was made on the day. You know, I'd take a stop or two, I'd maybe catch a scalp or two, but the
Right.
real meat of the day, it was waiting there and I wasn't ready for it. So for me, having a prop account where the buying power is, you know, I can just keep turning it as needed. This allows me the flexibility to wait for the really A plus setups in my cash account. And so I take those with the cash account and I take everything else that I think is worth trading, but maybe just not ticking every single box, you know? And that's what's really going to be where I'm taking the majority of my trades, right? You know, so I everybody wants to wait for the A plus, but sometimes you take the A's, sometimes you take the C's, you just put less risk on. So that's what I think prop trading is perfect for my system. Where does it fit in for you?
Well, definitely, I'd say for the most part that's huge because yeah, early on, I mean, I want to short small caps over and over and over, right? So if I want to short small caps, well, then you have to go to a broker, you know, that you got to pay locate fees, and that's a huge thing too. Just even the fact that you have to worry about locating, you know, that and how much does it cost? Just that process there, you know, for the most part. And there's the link too, guys. If you want to copy and paste that, the link for the call-in show for Google Meets, there it is. Just click on that or copy and paste it into your browser and come join us and be right on in the meeting with us. There we go. Thank you, Ayush. Yeah, I mean, I didn't care about it at first just because when I first started it was a little sketchy maybe back in 2017, 2018. You always heard of them being offshore, and you didn't really know what that meant when you're a new trader. You know,
Yeah.
oh, okay. Thank you for telling me what time it is. I mean, my watch, I guess, thought I asked it what time it was. Um, but yeah, it's one of those things where at first you don't think about it. You know, at least early on, 2017, 2018, there wasn't a lot of them, and it was sketchy is what you always thought of when it came to prop firms. And then I would get this as I became a little bit better trader, you know, into 21, maybe into 22, and I'm streaming live, and people are like, man, Josh, you should, maybe been into 23, but you should try futures with all these prop firms. And I'm like, I don't want to go to futures yet. It's just not my thing. You know, I'm doing really good. I always kind of analogize it to Nick Saban. You know, Nick Saban, the former football coach for Alabama. You know, he was great. He went to the pros. He wasn't that good. So what did he do? He went right back to the college ranks and he killed it. And so, hey, that's me. Like I don't care about going to futures if I'm killing it here. I'm comfortable here. My edge is working here all the time. Why would I go there when I'm just, you know, I'm doing just fine here? Well,
Absolutely.
and I always kept saying, well, let me know. I always said this. Well, let me know when there's a prop firm that lets me, you know, trade small caps and especially lets me short them. And sure enough, I said, I'm giving that speech one day. Someone's streaming live in another lobby, and I just would go in to join and just kind of shoot the crap or whatever. Or let me lay down. And I've said that. I said, hey, well, let me know when there's. And someone, oh, there actually is one. It's Trade the Pool. And this is summer of 2024. And I was like, oh, okay. I kind of looked into it, and I was like, all right, maybe. Well, then come January of last year, and I'm going live, and then I have traders that are in my own lobby. that were, successful using Trade the Pool and had been using them for a while. And good stuff about them and blah, blah, blah. I'm like, oh, what? Okay, so I remember someone said something about Trade the Pool last summer. Here we are 6 months later, and you guys are telling me it's legit, and I trust you guys. I got to look into it. And so February of last year, I, opened up my first, first I did the demo and then opened up my first eval, which at the time they had like the 2080 160, I want to say it was. And grew from there. But it's so nice to not have to locate short. That's such a process for me even early on where you go, oh gosh, how much is it going to cost? I got to look. And that's already time you're having to waste. And then sometimes with a lot of traders early on, they may not even then use those. So then you go to locate these shares and then you don't even use them. So you've lost right there out of the gate already because you've located them. And then anyway, so it's nice when it depends on who you are as in your journey and what you trade. Now, if you trade large caps and you've got a big lump sum of money that you've made over your journey in life, and you've got this 50,000 or 100,000 or 200, whatever it is to play with, that's fine. If you're going to trade, maybe mega cap, large caps, you're not looking to trade small caps, volatile stuff. Maybe you're looking to investing or swing trading. I think that's where using your own capital is fine. Or even if you are looking to invest, your IRAs of the world, like me and my Amazon or whatever it might be, that's where I think using your own capital is very wise. When it comes to very volatile movement, or you're a rookie, or you're trying to short things like in the small cap sector, there is nothing better in the world than Trade the Pool.
I mean, Josh, you bring up such a great point that was completely off my radar because all right. This is my confessional here. Josh, I have never located shares to short. I've never felt compelled to do this because every time I look at the stuff you play, it scares me. I'm not gonna lie. So you guys are completely just built different. But for those traders, this is a great way for me to get involved because otherwise it's just a headache that I don't feel like going through, to be completely honest. That's so outside of my usual system. But for a prop firm, I get to learn, especially, I mean, with all these free resources, I'm just absorbing your knowledge, Kevin's knowledge, Jane's knowledge, Michael, Mitch, the list just goes on and on, right? So, I mean, it's a really good way to take trades outside of your comfort zone. And how do you improve? You push limits, right? You got to test those comfort zones in a way that won't destroy you in your capital.
Yeah, bro. Yeah, that's definitely... I mean, you think about some of the stuff that we're looking at trading. You go to UGRO, which I know we talked about. What did I tell you yesterday? Keep your eye on you. Remember, I said that so many times in the lunch stream. Yesterday,
You sure did.
recap. I said UGRO, and sure enough. But having that with your own money early on, ooh, that's scary. That's risky biscuits, as I would call it. So
Absolutely. And with the UGRO, it's like, how do you even manage risk? It's so insanely volatile. I mean, without hard stops that you can. That's another thing with the prop firm. I'm blanking. Trader Evolution that we have, this system, it's so easy to just drag your stops and your take profits instantly. So there's no friction, and that's the biggest thing for these small caps. You gotta be able to pivot if you need to. If a big seller hits the tape, you gotta bail. You can't just pray and hope. So you gotta be able to have those hard levels and be able to pivot them quickly. And so can't do this in a Schwab account. Let's say that.
Yeah, right. Yeah. No, yeah. Yeah, and you're right. I mean, talking about how they can flip on a pin, and then unfortunately you do have the people that do hold and hope, and then they're down lots and lots and lots of these. And a lot of the time too, which we know, these plays will spike and they give back their gains and they never come back, and then they're up high on these plays, and they're just waiting and hoping that it does get back up there at some point. We always kind of jokingly say that about these plays. We've seen been reverse split 50 times, and it shows that they were up at one point, $47,000 or whatever, and you're like, yeah, right. And
if you say so, yeah.
Yeah.
Real quick, guys, I just feel compelled to update y'all. The SPY is doing the thing. So I just got filled on my first take profit into SPY 650 there. So just be careful, guys. This looks very rough. We are now in just free fall mode. We did not hold the 655, and our target is another... We're halfway to the next target on SPX, so I think the sell is half done. All right, guys, now back to the fun stuff.
Yeah, you're good. Yeah, because Meta, I don't even look at it because Meta talked about this going down for more. Right when you were joining, about to join, I said this looks like it wants to chase down into the 554s, and here it is at 554. Meta's chart today was reading it hasn't been in this area for a while, and I love that when tickers haven't been in a chart for a while, they can free for all. And you probably are loving your SPY from yesterday in the lunch, recap to today. I'm guessing you're still in your puts, weren't you in puts too? I think you're both, aren't you? Puts in calls?
Yeah, so I have a hedge. Basically, I'm just loving this volatility because on these big crazy 2% spikes on news, that I'm like, what? This is not real. This is a liquidity event. You know, it's like Trump's like, oh, we had some good talks. It's like, with who? You killed everybody. All right. Anyways, so for me, those are great opportunities to hedge, and I take puts on the pops because I like the the lower IV that I'm getting on those pops into key levels. So I'm shorting all the rips with options, and that's one area where, because I'm a big old bear, and so you know I'm pretty confident in that, and that allows me to also on these dips say, hey, well, I have this bucket of stocks that I think are actually holding up really nicely. And so I'm starting to DCA into shares on those dips here. So I'm not going to get left in the dust when this finally turns around. What'll happen is my last round of puts will die, and I'll be happy because my shares will start going up, and I can, you know, use that money there. So that's where I'm at. But
Yeah, that's what's funny. I'm looking at that now, and I'm looking at the puts today for Meta. Any of the puts I looked at earlier are up 2,000 to 3,000%.
insane. Yeah, the zeros go crazy. So that's the thing though, with the zeros, you can make a lot of money, but you can lose that money so fast. And I will tell you, I've seen so many traders post amazing options wins, and then I check in with them a month later, and they're like, "Yeah, I gave it all back, and then twice as many," because you know it primes something in your brain, and it's very deliberate. It primes something in your brain for that more, greedy, you know, and then you hold one candle too long, your option goes from up 200% to up 150%. You're like, well, that's no good. That's no good. So you hold it, then it goes red, and you're like, well, that's no good. There's so many ways to hurt yourself with short-term leverage like that is tied to times and deltas, Greeks. But that's where, I mean, dude, you could get a 0DT, or you could get 100 shares of, or, well, what, 33 shares of a triple X leveraged and have that same exposure, essentially, you know? And so you can do it in a safe way. And like if I had a 0DT put, which would be up a whole lot more today. But you know what? I sold it midday there, and I felt very good because, hey, we found a big bottom wick right into the opening area. Who's to say we don't double bottom there? And my premiums, they just got back there. They just put there, you know? So I didn't want to hold there for 2 hours. Meanwhile, I've made $200 in my futures account and my trade the pool account, 100 each. So that's easy money. That's no sweat, right?
Yeah.
That's what we're here for.
Right. That's the base hits, baby. Racking them up. Yeah, baby.
And yeah, it's great when you have. So I'm doing this in my swing prop account here with Trade the Pool, and so I've been in these shares for a day and a half now. You know, I'm big chilling now, and I can stagger my stops. I can I can have room to work with now and really milk this trade until it's done. And so that leeway, yeah, there you go. It's meet the parents, yes. Spies like,
Yes.
can you milk me? Yes, sir. So we are under the pre-market lows, by the way. This is not a good price action for bulls.
No,
But you
yeah,
know,
well, yeah. And some will step in the way here, and they're just going to get run over. You know, especially those newer. And I can't even imagine how, like you were even saying, the 0DTEs that are getting into this just for, let me just get a quick little 20-30 cent pop to just watch it squash you even for more, and they just lose so much money at. So I like it. Like I said yesterday, I'm in at that 420 mark for Microsoft. So go, dump away. I'm a bear with you as well. I mean, a bull with you as well. Or bear, my bad. I'm all back and forth there. I'm a bear with you as well, trust me. At least in this status. Yeah, where we're at now, give me bears. I'm a bear all over the place as far as when it comes to the market we're in now. It's definitely give me down movement.
there you go. I'll bear with you there, Josh. Absolutely.
He'll bear with me, he says. A different type of bear.
We brought it home. We landed the plane. Yeah, so oil is so strong. All right, guys, I'm just saying. You can trade USO in your futures account, or I'm sorry, in your trade the pool account. I'm sure not touching CL oil futures in my personal account. That's scary. Even options, it's like I don't want to get dragged either way, you know? So this is a way that you can capitalize on that and not have to just bear the burden of, if you're trading CL futures right now, that's such a big cash requirement to do that. You know, that's a big margin with this volatility. So this is a great way to get that exposure with just not exposing yourself to, man, I've seen so many blowups recently. It's scary out there. Josh, I think we have a crazy stat. It's the most intraday reversals in a period of time since 2015. We have literally every other day, just about 50% of the time for the past 3 months, given back all of the gains from the previous day and then went the other direction.
Wow.
It's been hellish, you know? If you're not a scalper, you're doing it wrong, unfortunately, or it's not your environment. So another reason to just be in these products where you can catch, we've had like 4 moves a day, 4 tradable moves a day. in the
Yeah.
indices, let alone small caps. So you gotta have that buying power ready.
Got to be ready to swing when the pitch comes to the plate, so to speak. Because you don't get like chances all day long. Essentially, it's you get the time to take advantage, and you got to take advantage of them.
Right. So I'm loving today. I'm loving today because it was just like that. We got the fat pitch in my book. You know, that pop up, that coiling. The 1 minute chart on SPY in the morning, it looked like the daily chart on SPY. It was like just bouncing. It wouldn't do anything. It tried to
Yeah.
break out and got smacked through VWAP, and that was enough for me to say, okay, now we get to do the big move. So yeah, this I don't know. I just love having multiple accounts because for me, trading is so mental. So it's like I can have a bad day on one account and just close it out of my mind. Gonna have a
Right.
bad day sometimes, and I'll just open the other one. And if I see another setup, I will take that. And if I have a green day, cool. It's that's flat, you know. If I have another red day, well, okay, 2 accounts down. Now I'm done trading for the day probably. But it's nice to not have all your eggs in one basket, you know.
Yeah.
That's what I
Yep.
will always say.
Yeah. I feel you right there, 100%. Sure. Do you have any actual brokers that you have and still use, or is it just all TTP?
So I do TTP. I have Fivers as well for futures.
Right.
I actually have another Fivers for CFDs just to mess around with.
Oh yeah.
In terms of live money, like my own personal funded stuff, not like a prop account that I passed. I'm doing Schwab for my broker for my Roth. So I do that through Thinkorswim, and then my fund account is Webull, and I'm about to open another fund account I think with Mumu, I think. So I just like having different. I call them starter ports. You know, I'll
Right.
have a good month. I'll just take the money out and just say, hey, I'm just gonna, you know, I'm just gonna sit on this, and when I see a good play, it's just ready to go in this account, and I'll just, I'll just try to double it and take the money out again. So that's kind of my strategy with those accounts. But that's the small stuff. You know, that's just having fun, really. The meat and potatoes of my trading, it has to be shares based, and I have to be able to scalp just for my system and my risk management rules, and really just for my own mental state. I know if I'm trading the most of my money in options, I'm gonna mess up at one point, and it only takes one wipeout to really hurt you. So I'd
Right.
rather not do that, and I'm stick with the shares, and that's what works best for me. But it's so personal, you know. I've noticed that some traders, they look at my system, they go, "What the? How do you do that?" Like, and I'm like, I don't know. How do you do that? You know, it takes two sides to make a market.
Oh man, I love it. Exactly though. But yeah, and that's why I've said that's one of the key things for me. Like I've always talked about, find who you are as a trader. Well, that's one of those things that is going to come along the way. What broker are you using? What prop firm are you using? Where are you using them? How are you using them? You got to find your system. Essentially, get your system down and be able to trade that day in day out. Very very key. Very very key. It's opening day, fam. We got baseball tack in the house.
Oh. Ooh, what? Geez, what sports ball team are we fans of here? I'm a Giants fan. I'm a not diehard, but
Come on, you can't be wearing no New York Yankees hat and then be a San Francisco Giants fan.
Come on, they were from New York. I'm just showing that I'm a real one. I'm an OG. I will say I'm the worst because if the Giants had the colors of the Yankees, I would always wear a Giants hat. But that's all it takes for me to be a bandwagoner
Oh
for the
man.
worst. Everybody hates New York, but nice looking hat.
Yeah, yeah, it is. Yeah, yeah. I mean, you got to think about that. How many even like girls that I've dated in the past have worn a New York Yankees hat just because it's like it's iconic and the lettering and the whatever. Yeah, exactly. Yeah. So the coloring, whatever it might be, goes with a lot of stuff. So
I
Joe,
feel a little called out, but that is accurate. No, you are right. I was accessing my inner feminine side there.
I love it.
I
I
like that a
wasn't
lot.
trying to go there with it, but I was just saying it
It's
is
like
popular to wear. People wear it. I've noticed that in the past. Just even if they didn't like the team, they like the
Yeah,
hat. And so
totally.
it's kind of like I'll notice that where like girl also again going back to girls because they will wear stuff even not being a fan, but guys do as well. You'll see, but I see girls like Avery will wear like there'll be old school T-shirts like Rolling Stones, or I mean she likes them, but you know what I mean. You don't even know name a Metallica song. They'll be wearing like one of those old school like Metallica T-shirts because it looks cool. And like, okay, name me 2 Metallica songs. One of them can't be Inner Sandman.
It's always Metallica and Nirvana. The
Yeah,
amount of
Nirvana,
people I've
yes,
seen wearing
Nirvana.
Nirvana, it's like you're like, oh, sick, love Nirvana, and they're just like, look at you, look right through you, just like, oh
Yeah,
man, I'm
literally. Like,
old. Josh, I'm old. It's happened. It's happened. We're not hip anymore. We're not.
It's cool.
Yeah.
Well, it's hey, at least we got to see the progression of time. You know, it's been cool to live the life and get older and see how things have changed. And like literally, I think we grew up in that last era where we could go out and your parents trust you. You could go out till till it was dark, or what you know. You got to
Yeah.
and it just, you know, you always were outside and yada. You just did that old school life without living maybe without a cell phone and just a little more freedom, I guess, so to speak, for kids and that world we lived in back then. It just seemed a little bit more. You know, of course, now it seems like that's all tarnished to where you can't. It's just not as safe as it used to be, I guess. You know, as you'd
it's
work. I mean,
Yeah, it's so interesting. Right? I call them like Calvin and Hobbes kids. Like I had a Calvin and Hobbes childhood. You know, like my dad would kick me out of the house, say, "Go play with the
right?
rock or something." You know,
Yes, yes.
go build some character." You know, and nowadays there's less of that, and it's so weird because it's actually the safest time to be alive. But here we are, all scared of everything because I think
Yeah,
we are aware of so much more. You know, with knowledge comes the spookies. You know, you don't want to get caught in all that stuff you hear on the news.
yeah.
But
No, 100%. Yeah, that's the thing. Just we know so much more than we used to because all the information's given out to us right away. You know, you don't have to wait till the next day and get into the newspaper or that night's news. You're getting it instantaneously. You know, through your phone, so or your computer if you're on your computer or tablet, whatever, all day long. So. Joe says Cleveland Indians. Yes, I said the original name. That's oh yeah, it's like the Washington Redskins. I can't say the Washington Commanders. That just sounds just goofy.
yeah,
Question is,
sorry. What's that?
he said question, and Crow says question is, do they really have Indians in Cleveland? I'm sure at one point they did. I don't know what kind of Indian or Native American it was, but oh yeah, for sure.
Yeah.
Some kind of Apache. I don't know. I don't know. It was up north. Maybe not because it is a little too maybe north and a little too cool for them, but. Anyway, yeah, I get you.
Just heads up, I closed my short, cover my short for now. I don't want to hyper focus on it. I got an alert set at 650. If we hit there and start rejecting again, I'll hop back in. But
Okay,
easy
all right,
peasy.
love it. Yeah, good. I mean, honestly, like you're talking about just having that's why I love that, like that. Just talking about prop firms. I think a lot of people underestimate the value overall of what could be had with having like a trade the pool or a Fivers account. You know, to not risking your own capital, especially for when you first start. Risking your own capital is absolutely, meh. You know, it's because so many people they blow their accounts up. They hold and hope. They don't do what they should do. And to me, it's much. I would much rather have had something like that. Now, luckily, there are some brokerages that have paper trading. I think that's kind of gone to the wayside, and that really doesn't seem to be a thing anymore for most people. They don't want to go paper trade, and they can't find emotional attachment to it, which I get, but I've definitely found emotional attachment to paper trading 100%. That was, I kept it real.
It's
And
fun.
mental.
Yeah. It's as serious as you make it. I'll say that.
Right, exactly, yeah. And hey, I was a kid at what they said go use your imagination. Well, you better believe I did. Dang it, I'd go out and I'd go talk to myself, and I'd just and I'd be I'd be like in there in the room and playing with my characters, action figures,
Oh
and
yeah.
and then having a whole full on battle.
The wars, yes, absolutely, between the dinosaurs and the GI Joes.
Yeah, yes,
It was good times. Yeah, absolutely. I think technology in some ways definitely inhibits that creativity, but I'm hoping that we get to a cool point where the technology that we're seeing is less strictly through lens of what's profitable and more like people like you and me going out vibe coding cool stuff and bringing back the creativity, because I think that there's a lot of tools that we can make to make learning so engaging and fun with the new technology. Like imagine, Josh, how cool would it be if we were in school and we had like VR goggles and we could go to the safari. We could go to all these places, the battle, the beaches of Normandy or whatever. That would be so much more. I would remember so much more,
yeah.
So I don't know. I think it's cool, but
Yeah. I mean, yeah, you're all over it. I mean, yeah, you got to think about some of those when you're a kid, and you think about you kind of have to get into some of that old history. You're not. A lot of kids aren't, or science. It's hard to get into that if you're not into it. But that would be a way to get them more into it. And yeah, like imagine all of a sudden everyone put your goggles on, and all of a sudden you're thrown back to December whatever, December whatever D-Day. Well, I think it was June. I think I'm going back to December is December 6th, 7th would be Pearl Harbor. D-Day I think is like June I can't remember what D-Day. Anyway, what's up? We got someone calling in. We got
Howdy.
Hudson Bradford. How we doing, Hudson?
oh, let's see. We're not getting you coming through here. So let's see, Josh. What's the protocol there for getting this sound to work?
All right,
Gotcha. Thank you.
but for let's see here. Let me go to this real quickly.
Okay.
Bam. Hudson, go ahead and talk. I can hear you. What'd you think? I am sharing my screen right now, so I should be good to go. It's on the layers behind everything. I hear him. Did you all hear him in chat? I hear Hudson. All right. So let's see. Let's do this again here. You're good, Hudson. You stay right there, brother. You ain't going nowhere. All right. I'll do this. Boom. We'll stop sharing real quickly. Boom. And then I'm going to share screen. And I want to share the. Go. We should be good. Let me know if you. Oh, go ahead. No, I'm good to go. Oh boy, now we're getting Echo City. There, now we're good. There. No. I think I'm good. So I think we have to mute them. I think I have to mute myself here. Yeah, there we go. Yeah, I think mute me. Yeah, mute me.
Wait, hold on a sec.
Of both. What? Tell me about your journey.
Yeah, so I've not. Is the echoing coming through Steve or through mine?
Are you playing the live stream too?
I am not playing the live stream.
Yeah, so I
think it's coming through Steve because the audio's it's showing his audio coming through his end. Yeah.
There we go. Steve,
oh, there we go. Yeah. All right, I think we're good. Yeah. So I made a trial account. I didn't get into it too much, but I definitely see the benefits, and I do want to start getting into that pretty soon. I'm actually just waiting for my account to turn positive for year to date. I was on negative, pay off the taxes, all that stuff, and then get rotated and some other things. But I think prop firms, what I can say, thinking about and looking into it for a while now, I think the benefit you can definitely see there, especially for me, what I was thinking about is when you have a situation on a low beta stock or something that just doesn't move a lot that you see as a good opportunity. One example for me that I was looking at recently is Waste Connections, or in the past, in around November, I was looking at Waste Management, which is an even better company in my opinion. And Waste Management was down, and I was thinking like I would really like to buy into the stock, but it doesn't move enough for my liking. But if I can use someone else's capital through a prop firm and be able to invest some of that into a position, and back in November in Waste Management, that would have been a very good way to benefit from that situation, or whatever, especially since you need to have good diversification and whatnot. So opportunities like that is a really good example, is when there's like a low beta stock that you're interested in, and whatnot. So that's one of the things I was thinking about. Yeah,
that's awesome. Yeah, it's one of those, again, just having when you have your own capital, you're like, yeah, nah, you kind of go, you do one of those, versus when you have someone else's, you go, sure, let's just give this a try.
Exactly. Yeah.
What's the worst that could happen?
Yeah, especially if it's low beta, then it's not much risk involved to begin with, unless it's in a bad situation. But
that says Hudson, in Hudson, sir, he hicks. It says classic Aliens 2. So I mean, everyone's loving your feedback there. So do you? Let's just go into this just while you're still on here. Good topic. Well, you haven't had the call-in show. At least I haven't seen your face before on the call-in show, right? So just talk about your trading journey overall. Where you started with? Were you with brokers, and where have you worked your way now to the prop firms, and how you're liking that change from and using both?
Yeah. And I do want to say, just right off the bat, there's very few prop firms out there that are focused specifically on stock trading. And from all the feedback I've heard over and over again, from research I've looked into online, it definitely seems to be that Trade the Pool is pretty much the best option I've seen and heard of. So I just want to say that. And I'm not sponsored or anything like that. I'm just another guy. In fact, I don't even have an open account with them right now. I'm just saying this is what I've observed. So I just want to put that out there.
Cool.
And then secondly, my trading journey began about 2 years ago. So around May 20th, 2024, that's when I started trading. I actually got into trading because of NVIDIA. So a few years before that, I was obsessed with NVIDIA, and I was like, I need to get my money in this. I knew nothing about the stock market or any of that. I just knew that NVIDIA was a very good company. Say what? Steve?
It was yeah, Steve. Steve, we're having the issue. Is fine. What it is when Steve turns his mic on Google, that's where the Google Meet. That's where we get the echo.
Oh, okay.
I think Steve was going to say something, but then it's like,
yeah,
the echo gets going again. So you're good. Go ahead, Hudson.
Yankee. Yeah, so I got into wanted to get NVIDIA. Now I wasn't able to because at the time my dad was handling my finances, and I didn't know I could even just open up my own brokerage account. I thought I had to do it through a financial advisor and stuff. So I missed out on a $300,000 gain there, but but it is what it is. You know, life moves on. You know what I'm saying? But because of that, I eventually got into the stock, made about 40% in a couple months because it went up from there. That was when it was around, I think it was around 90 or 110. Back around that time, went up to around 140, sold it around there. But no, that journey kind of got me into looking into other stuff. I was like, why don't I look into Walmart or McDonald's or whatever? And then it just kind of continued on from there. And then now I've been trading for 2 years. I'm pretty profitable, and been trying to develop my strategy over time and keep refining it. And I think refining your strategy and trying to be objective and looking over notes, going over tabs of what trades work and didn't work is like a absolute must have. Like if you're not doing that, you're pretty much getting like you gotta be addressing and refining stuff. You got it. If you're not getting better, you're getting worse. So.
I love that. Am I coming through here? Can you guys
Yes,
hear me?
you are.
Oh, beautiful. Well, Hudson, awesome. I'm so glad to have you on. Guys,
and then just right now with the situation, I think we have to be careful. It's easy to see dips in the market and just think, oh, I'm just going to buy the dip, right? And obviously there's a time and place for that, but you have to have a proper strategy and look at all factors considered.
Yep.
And whatnot.
So Steve, mute EV Mux, the bottom left-hand, like where it says mute that, but then also on the top where it says there's another microphone. So top left above your face, there's another mic. Mute both of those. Then unmute the Google Meet, and you should be good to go, and there's no echo. So totally mute EV Mux, both of them, and then unmute. Now let's try.
How are we sounding?
Amazing.
Wonderful. So now I can see your guys' reactions, but now okay. And now I think I got audio.
Yeah, you do. We're good to go.
Yes. We're here.
We're good.
I apologize for that, but Hudson, so good to see you here, man.
This
is a buddy from my community, and I'm really proud of his journey because he was a little bit of a gunslinger, and I'm seeing him tighten up, and I love what he's talking about refining his systems because it's a different story than a few months ago. Now he's posting stuff, and I'm like, oh, that's a good point. I didn't even think of that. So love to see it, man. Good to see you in here.
Good. Yeah, I thought there was some correlation. I'm like, hold on, this seems like y'all may know each other, and then you can't even talk to the guy you know.
Yeah, I know. I'm just stuck on mime mode here, but hopefully it was slightly entertaining, if nothing else.
It was good. And thank you for calling in, Hudson. You know, like I said, like I said, you're definitely the mindset. I can just tell the way you verbalize, the way you talk. You know, you've been through it. You're not like a newer trader. You know, you've been through the ringer, and now you're just. I can tell that with traders. Like I had one on a few weeks ago on my live stream on Friday, and just the way she talks now versus the way when I first did one-on-ones with her, I'm like, wow, you're a whole different person.
Yeah,
it's really wild. Yeah, it's great stuff.
Yeah,
that's what we do it for, right? I mean, that's what warms my heart the most, to see somebody improve. Because for me, this is like, I got into this because I thought trading was the only way for a lot of people like me to actually materially improve my conditions, my economic conditions.
Right.
And just giving that shovel to even one person makes it all worthwhile. Yeah. So I don't know, makes me happy. It's a good day.
I mean, it's like that old school saying, you know, teach a man to fish, you'll fit whatever that is. So I just feel like we're at the pier, and these guys keep showing up, and here's a different way to catch a fish. Oh, here's how you catch that. Hey, let me show you how to catch it with this lure. And then, then they start learning, and then the next thing you know, they're fishing beside you, and so, yeah, it's so cool to see that. And then they're catching bigger fish than you at times, and you're going, man, look at you over there. And so it's so cool to see that journey, 100%. That's, like you said, it's at first you get into it because you want to do this as to be a successful trader because you see all the money and the glitz and glory of it, what could happen. And, then you start to realize like, man, if you could just, the love and the passion I get from putting smiles on people's faces and those messages of like, hey, thank you so much. That I can't tell you how awesome that is. Like I always go back to like, man, I would have loved to have been an actor and make people laugh all the time. Right. Or just put joy, smile on their face.
Yeah.
That's the same thing here. So when you're helping some out, it's really seriously so cool to see people grow and then become successful 100%. So Hudson,
Yeah.
congratulations on the journey. And like you said, keep pushing. Like Kevin always says, you never make it. We're continuing to make it, right? So like you said, you got to keep pushing. And much as you just said it, I say it all the time. I know me and Nas always talk about journaling, tracking, back testing, going over your stuff.
Yeah.
Here's a prime example right here with Hudson team. So everyone listening right now, if you are not doing that, like Hudson just said, you're if anything, you're sitting sideways or getting worse because you're not going to be doing this for sure.
You got to be improving, advancing, learning more, trying new things. You can't just sit still and idle. You got to keep developing the strategy and your understanding. Absolutely.
I love it. Yeah. I liken it to like video games where most of them, if you're good enough, you'll get to here's one I've like mastered to where NCAA football, I'll put it on Heisman, the hardest mode, but you're recruiting good. It just becomes like, okay, I'm going to kill everybody by a ton. So you get done playing the computer, right? Why am I playing the computer? You're sitting there stalemate. I'm not getting any better doing this. So let me go play online against other people. And then you get torched by about 5 touchdowns online. And you go, maybe I might want to move my game here because playing the computer at Heisman mode ain't really doing too much. I'm sitting idle.
Ain't that the truth? Good stuff. Good stuff. Just a heads up, I did nibble back my short. I had a good cushion today. I saw it rejecting a little actually below the 650. I don't know if it follows through, but I'm just letting you guys know I'm in that with a stop over 650 now.
Good. Yeah. I like it. Yeah, I think we continue down for sure too as well. And by the way, Battle, BATL, I know Taquito Cheeto, he talked about that earlier. Battle here popping back on up. So that one's moving back up to the 730, 740 range. And AIFF, keep your eye on that too. That's another one moving up slowly but surely in the small cap sector. And the other one that I would say was EEIQ. So those are the three I'm watching just for go back to stocks.
EEIQ, did you say?
EEIQ. EEIQ.
Okay, that's fun. One more to put on people's radars. The natural gas exporting theme seems to be ripping and rolling here. NEXT, that's my way to play it right now.
Yeah, I mentioned that months back. Yeah.
You put it on. This is what I'm talking about. I wouldn't have found the stock. Hudson, you put it on my radar. Next thing you know, I'm up 150% on calls today because of this guy. So I appreciate that. Yeah. You put that money in my pocket.
And the reasoning there was I went on Quiver Quantitative, which is free, by the way, or at least for the broad access, and was looking around for different things. And there was a stock that had the highest inside buying for like whatever the day or whatever. And it was Next. And I looked into it. I liked the chart pattern. I liked the company. I liked the fact it was energy. So everything about it was in a very good position to hold. Now, I got impatient. And I sold. I should have held it. But it's a common theme, right? Repeats this a lesson. But right. Just, oh man.
But dude,
anyway, no, it's up a good bit, and it looks like it could definitely go higher. But you always got to balance everything too. You don't want to gamble all your money on oil and then.
Absolutely. Well, sorry to cut you off. I just think you're saying so many good things here. It's like, yes, it's working. So yeah, it's for me, and this is what I was saying in my server, like this is a great setup for defined risk. So you can buy monthly options for pretty darn cheap. And this is actually one of those times where I think it is a good way. If I didn't have that choice, I would be getting it in my prop account though, because I don't want to have all my eggs in the oil up, SPY down basket. But if I need that hedge, I need that hedge, So that couple $100 in those calls turned into a real nice bundle, which is, I don't even care what my shares are doing, So,
yeah.
Well, before we go, I loved having you on, Hudson. So anytime Steve's on from now on, I love having regular. So if you want to call in whatever your trade is of the week or something you're looking for, and again, back to that, I love building a team because you get that. You're looking here, and you can only look so far and so much into stocks, but then you have other great traders like yourself that then identify great setups for other traders to take, and that's what a team, a community is all about. So yeah, man, Hudson, last words here for the day for yourself. Any advice you'd give to traders out there? And then secondly, are there any hidden stocks that we may need to know about that you're liking here coming up soon?
Yeah. So ironically, in this environment right now, and this is just my take, we all have different strategies and stuff. So, someone's environment might not be someone else's environment, right? You know, someone's in the cold and they're in the heat and they're saying, I'm not going to trade this, and vice versa. Right. So for me in this current environment, actually, specifically like today and yesterday, I feel like my options of wanting to buy certain things has gone down. And now I pretty much don't want to buy anything right now. It's getting too messy from my perspective. And it's not just, you know, ooh, red scary. No, that's not what it is. I mean, I trade volatility and whatnot. So I've mostly been trading UVIX and SVIX, and that's where I've made my money this year. But for now, I'm just pretty cautious until stuff drops a lot more, or until there's some better structure to the upside. Just watching the midterm to longer term trends. That's the main thing right now. Just being mindful and careful and not getting too greedy just because something's red. You know, you got to have some more confirmation and the data and the statistics and stuff. Yeah.
Love it.
Man, I love it. I could not have said it better myself. Yeah. This is awesome.
Training stocks, and then Steven has been the more active one now over the last, I don't even know what, 6 months, a year or something. He's helped me a lot tremendously, and he's very active and participant. So I appreciate Steve and everything you do, man.
Good. That's very kind. I appreciate you as well, man. Yeah, thanks for calling in.
Yeah. All right.
Good stuff. Good stuff. Thank you again, Hudson, for calling in. I anticipate more of these, mister. So now that we got this down and Steve knows how to mute himself properly and with the echo.
So sorry.
Yeah, no, I did that at first, Steve. So I did the same exact thing where like the first couple, I'm like, I'm just muted until finally I'd be like, and then finally I figured it out just pressing buttons essentially.
Well, Josh, I was in the rip curl, right? I kept hearing the recursiveness, and then I heard Ayush, our wonderful producer, doing his best to help me, and my brain is like bouncing off all these noises. So thank you guys for bearing with me. Next week we'll go a lot smoother.
Good stuff.
All right, I'll see you guys.
Thanks, Hudson. Thanks, bub. Good stuff there from Hudson. Good call. Awesome. Good call right there. Yeah. And that's I was like, hold on, let me. I think because that's what I did was what I told you to do. I'm like, let me just tell him because I don't think he's done that yet. And I'm like, this should work. And yeah, I'm glad it worked right away.
The top left was the cheat code because I was going back and forth trying everything I could think of, and I was like, click. Yeah. Oh, no.
Yeah, and that's what did it. Yeah, that top left one. You're like, oh, okay, well, that does it. Yay, I am now being able to talk with my bud Hudson. And isn't that such a good feeling, you know, when you've done, you know, you do you, right? And then you've got and then to learn, and then now that you get that reciprocation because Avery, for the longest time, she hated it. So she hears this a lot of the time, or the people I'm doing one-on-ones with, and when you're doing this, and most times it's this. You don't get like hers, or she was a regional manager. So all day, every day, it's gripe about this, complain about that, you know, oh, moaning, bitching, or whatever it might be. And no one ever saying how good of a job she's doing. It's always the opposite, right? And then she's always hearing, oh, they always just tell you how good, thank you. But and I hated that for her. Because I mean, imagine that as you work for an employee, you have a 9 to 5, or you have your regional manager. So you got people above you, you know, but you got a lot of people below you, and then just people are barking at you from all directions and not telling you how good of a job you're doing. I can't tell you anyone else that does have a 9 to 5. I am so sorry if you ever went through that, and I've been through it. And if you are, you don't let those people tear you down. You are doing an amazing job, and you are an amazing person. But it's so cool though, and I know people want that. It's my point, because boy, oh, when I get that, it doesn't matter if it could happen every day, and it's still that same feeling heart of just like, you know, yay, you know. And so that's awesome for you and Hudson himself, of course.
You said it so well. This is why we play the game, baby. You know, this is what it's all about, because this is what people did for me, and I would be breaking my back, you know. I was picking up dead bodies for a morgue. I was like the most morbid. Yeah, I was like, I'd be doing that, and not as happy as I am now, hanging out with you, hanging out with Hudson. So this is what it's about. It's about securing your own financial independence and freedom, regardless of what's happening in the world, regardless of your circumstances. There's always a chance to bring yourself up, and it's not easy, but it's always worth trying your best. And this is a great way to try.
Always, brother. Good words right there. Exactly. I mean, we some of us, and hopefully most of us, can liken back to a time that we had a job that we clocked in, or whatever it might have been, and it was a job that we just wish, wow, it was not great, you know. And to push to this moment of where we're at, 100%, man. Couldn't have said it better myself. So, and Taquito Cheetos, he says, "Will I win a free sandwich?" Well, no, Taquito, though, if you would have called in today, we could maybe do a 5K eval, but he said earlier, do I win a sandwich? Good call, though, earlier, though, Taquito on the AIFF, and, of course, Battle move on up. Joe, Florida George taking care of Ayush in the background. We were doing all we could. We got it work. Now we know, though. So from now on, now you know when we get it pulled up. I know how to do my end now, because I was even struggling with my end at first, and so we'll have it better down next week.
I just had to hit y'all with the prayer hands. Just, you know, that's all I can do. ask for forgiveness. But it's been a lot of fun, Josh. This is a good time.
100%. Yeah. And of course, Monday and Wednesday, you have, of course, Steve and I at the what would we call it? The week the what am I trying? The lunch recap. I've got so many things. We got so many things going on now. So we got me and Steve Monday and Wednesday for the lunch recap at 1 p.m. Eastern. We've got the call-in show with me and Steve every Thursday at noon Eastern. Oh, hold on. Let's get rid of the call-in show. Hold on. We can just go back. Let's get rid of the call-in show. Yeah, there you go. And just go back to EV Mux. Boom shakalaka bam to bam. Unmute yourself on EV Mux now. We good? Do both of them, top and bottom.
All right, we are good. We're good.
Back.
We're good.
We're back. We're good, baby. So yeah. So now we know the
Sunday.
truth. Yeah. So a lot of extra, streaming time, with me and Steve coming up with. So we'll build that. We already have it. We have, which I love about, the stuff going on. We got the March Madness bracket going on there in the background. We're switching around. I'm seeing whatever we're doing there. The Market Madness, I should say. But yeah, so Monday, Wednesday, 1 p.m. Eastern, me and Steve, every Monday and Wednesday got the lunch recap. Of course, here on Thursday, you just saw the call-in show. That's every Thursday. And now on Friday, we'll have the Friday Night Live. I think that's what we're going to stick with for now. Friday Night Live. Come and join. Steve, you're more than welcome. We talked about that. So if you want to come join Kevin and I every Friday, anyone's more than welcome. But Kevin and I will be hosting that on Friday night. So a lot of extra streaming access coming here on TTP. Now I'll leave it at that. I'll leave it at that. Lots of us, lot more of these faces right here coming on up. So just get ready for it.
I just wanted to say I had some things coming up the past couple weeks, so I wasn't able to drop in, but I'm going to be there this Friday. I wouldn't miss it for the world, and it's going to be a lot of fun. So you guys should be too.
Can't wait. So yeah, man, can't wait. So we got a lot of good stuff. Well, we know where the small cap's at. We talked about AIFF. I think UGRO. Keep UGRO on watch. AIFF, I think, is a multi-day runner. We've been looking at it for a few weeks now. It's on watch until tomorrow and today. Battle, in my opinion, found its bottom. I said this on my live stream earlier. BATL Battle found its low yesterday and will be moving back up through tomorrow. That's to keep on watch. UGRO is going to be on high watch through tomorrow as well for more volume and validity movement. And EEIQ for at least the rest of the day is on watch. And I like a bounce play back down around 690 to 685. That's what I'll leave you with for small caps. Until tomorrow night on the Friday Night Live stream, I am done. My man, Money, I almost said Money Steve.
Money Steve. I'm Money Steve today, baby.
I know, right? I know you're killing it with Spy, but with Steve, he'll be back for Power Hour in about 2 hours from right now. And until you see Steve again, and Steve, until you talk again, what do you want to leave the traders with?
Trade safe, guys. You don't have to do anything right now. Wait and see how today's candle closes. I think that we just caught. I heard my ding. I think I got stopped out of my short. Yes, I did get stopped out of my short. I'm probably not going to take a long. I'm hanging out. Hang out, guys. Come hang out with me later in Power Hour.
Yes. Exactly. Love it. Well, brother, I'll see you tomorrow night. And of course, next week, more often with you, 3 days a week with you moving forward. So, man, it's been a blessing. I'm glad that we got together here on Trade the Pool and moving again. Why do trade prop firms? And he even said it best. Hudson's correct. If you want to trade equities and stocks, this is where it's at. Trade the Pool is the best place. There's not another one out there. So I'll see you guys tomorrow night. Steve, later this afternoon. We'll see you guys. Until then, scanners are coming up now.
Thanks, guys. Take care. Yo, what's up, guys? I'm 2 minutes late because I was on Trader TV Live. Thank you so much if you joined and watched. That was a lot of fun. Great to be back with the guys, Neil and the whole team, really. I really appreciate everything they're doing over there. So it's been a lot of fun, Neil and Sean over there. So, guys, we have had quite a day. My computer is acting much like Spy. It's not working, so I don't have access to my Trader Evolution today. We're on TradingView. We'll be back there tomorrow once I I don't know what I need to do. I think I need to buy more RAM. Speaking of which, Micron, these names are not acting right. Look at this selling all day long, and that's got to tell you something. So we are seeing a bit of a bid into the end. I am long a tiny bit of NAS 100, so essentially QQQs. I think that we could get a little bit of a dead cat mean reversion here, and mostly we just hit my target to the downside. So I wanted to run it a little bit. So guys, what are we seeing on some of the leaders here? Micron, big failed breakdown. Neither of my paths pathed. It went up and then it failed. And now it is looking very dire off the back of EWY. South Korean ETF is breaking down out of its bear flag. This is a beautiful, beautiful setup that we mentioned over the past week, saying, I don't know which way it's going to go, but if this thing fails, it can fail hard. And hey, here we go. Now, if we get a pop, a mean reversion in the next day or two, I want to get in. I want in because I think this thing drops to 100, at least 110. Hey, Snowman, you just watched me? I appreciate that so much. Thanks so much. It's so much fun being back there. It's wild being in front of all those people. Old Steve looking back at young Steve. Young Steve would have freaked the heck out, but new Steve is pretty excited. Hey, Paula, good to see you in here. Josh for EEIQ. Oh, this was 2 hours ago. I'm sorry. What am I talking about? Brody, welcome. Does the market dive even more into Power Hour? Let's take a deep look and dive in. I don't think so, but we can double check. So daily levels here on SPY. We got the big boy chart here. Daily chart. See these zones? Feel free to take a picture of these. These are worth noting. So we have this distribution range low. We are violating. We tried to reclaim. We rejected. What's up? Tampate Lugu. I don't know if I'm saying that right, but welcome. I love seeing all the new faces in here, guys. Guys, we lost this distribution range low, and that's pretty spooky. It's pretty spooky. The next one up, this big high volume node. I see this big high volume node. We are trading right above it, essentially. That's where we tapped in a couple days ago, and now we are going to be testing that over the next day or so. Looks like intraday here, SPY just rejected something. We're going to find out what. So we are expecting more downside. I thought that it was done for today, but if you get capitulation, it doesn't have to stop. This is going to stop me out of my longs here in just a second. I do believe SPY looking quite weak. And yeah, can't long this. I tried, and I'm getting stopped out. And that's the way she goes. You gotta stick with the trend if it's working. It's just that's my toxic trait, guys. It's my toxic trait. You give me a 2% down day on SPY, I'm gonna try to take a long somewhere. Is it wise? No, it doesn't usually work. It doesn't usually work. So yeah, I'm gonna tap out here down 20 bucks before it gets worse. I got in to one lot right there, roughly. You know, not this chart, but same basic chart. And could have booked profit over this swing. Wouldn't have been much to write home about. Probably should have just been looking for places to go short again. But at this point, trade's kind of been traded. You know, we caught the meat here. I'll show you the setup we took. Let's see. Can you hold meta put for tomorrow? How long do you have on it? How long do you have on it there? That's the question. So if it's a weekly, I can't tell you. You're gambling, you know? And I'm not saying don't gamble. Gambling's fun, but you got to know what you're doing. So we'll look at meta. What is the strike and what is the expiry? And then I can help you out. What I can say is this is ugly. And I'm looking to buy maybe at 500, maybe. So yeah, give me that information. Happy to help you out there. Going back to SPY real quick. It is just hammering. Looks like we're getting new lows of the day. Fine with me because I am sitting all cash or a little bit short, a little bit long, but nothing that I'm gonna be scared about and get scared out of. It's just something that I'll look at my port and get mad and go, I want more. It's too cheap. Give me that Microsoft at 300. So SPY digging into, you see this high volumes or high time frame zone. This is a high volume node. So this is where we can start finding some buyers. Doesn't mean it happens when we first tap into it. That would be really funny if that was the exact bottom. But no, this is just where the volume kind of starts building. All right, March 30, 550 strike there. Let's take a look. And actually, you know what? You know what we can do? Oh, all right. I'm going to flex on y'all a little bit. So I sold this put, this 652 put. I sold it for 100%. I did not hold it, but this is the page that I had when I bought it at 116. So let's refresh it and see how much it's worth now. 451. All right. Little 4-bagger if I had held. I'll take the one. It was a stress-free trade. Always more money in the banana stand, as they say. In this volatility, you will get plenty of moves. So here's what we're going to do. We're going to model your play right here. I'm going to show you how to do this, guys. It's really important to know how to do this. Not saying you don't, just we're going to walk through the process together. March 30, strike, 550. All right, so what does that tell us? First off, you have not too much time on expiry, and this is a relatively expensive contract. It's over $1,000. Your entry would help as well. If you're up big, I would close this at the end of the day. Personally, I would close it at the end of the day because I bet you're up a lot and you don't have much time. And if Meta goes up 1% tomorrow, that put's going to be cut in half, roughly. We'll see what it'll actually be. If Meta goes up 1% to 553 from here, tomorrow this contract would be worth 785. So about 30% lower. So personally, when the market gives me good money fast, I take it. I say, thank you, Mr. Market, for putting money in my pocket within an hour or two, and I do not stress about if it goes higher or lower. For example, I took leverage on Akamai. I don't know how to say it. I think Neil mogged me on stream there and said it correctly. I took this one at 110, right on this day. It already identified that it was a strong pennant trying to break out. I was trying to get in off the 5-day moving average, that light blue line. I'm zooming in for you to see. Light blue line right here. I was trying to get in right there off the 110. We saw it go under 110. It reclaimed 110. Slapped ask. Slapped ask. So we're in from there. But that was where I took the call, right? That's where I added the leverage. I just sold end of day. It would have doubled if I held 2 days. Do I feel bad about it? Not at all. And that was a May put, or I'm sorry, a May call. So guys, I strongly encourage you to take the money that they are giving you and don't worry if it goes lower because you just had a banger of a play there. That's what I say. That's my advice. I think it's so easy to give money back on options, and it's so nice when you catch that big move. So what I would do, we have an hour left. I mean, I'm right here with you. Let's hang out. Let's watch price action. If we see a strong catch, well, then get out. If you don't, hold till the close. Close then. That's what I would do. Not financial advice. Not financial advice. Just what I would do. What's up, Brody? Got another short paying on the cues. Let's go, baby. Let's go. I'm all traded out. I had 5 correct trades and 1 wrong trade, and that means, why would I mess that up? 5 out of 6. It's a good day. I'm not giving none of that back. Brody asking, do you think the market will continue to make new lows until the end? Until the end of the day? Here's what I'll say. Algorithm very likely is on and short until the 30-minute flip is what I would say. Especially if it loses this little 1 candle low that tried to catch. Doesn't look strong at all. Looks like it's going to eat lower in my book. So when I see this, I'm saying, all right, we have about 10 minutes to knife it here. 10 minutes to plunge this, and then we're going to see if in that half an hour flip we can start to see some containment. Often, after that 30 minutes hits, you'll get 1 more push lower in the next 5 minutes or so, and that will be the high or the low of the day. I don't know why, but my friend who now is he's a big boy quant for some bank, and he can't talk to me about finance stuff anymore because of NDAs, but he taught me that well, he back tested this and he just said, hey, look out for this. Look out for this half-hour algorithm. If you're in a trend day up, very likely the high of the day will be achieved right around that last half-hour point. I have no idea why. It has something to do with hedging, intraday hedging flows, but I haven't dug in that deep yet. Anyways, what's up, Larry? Good to see you, man. Good to see my regulars in the house, along with some new friends here. So nice to see you guys. I appreciate you joining. If you liked me yapping then, you got a lot in store. So let's go around the horn a little bit, talk about what we're seeing. So far, SPY just ain't nothing doing here. Ain't nothing doing here. I want to keep an eye on this meta put for you. Meta is showing relative strength. So here's the thing. If you're up a lot, you're now playing a game of, is Meta going to do some weird counter bid BS like Netflix did? They're rotating the mega caps to try to hold up the market, guys. The market started losing a major level. They started pumping the heck out of Netflix. We're going to see this rotation of mega cap names. They pumped Apple in the morning. Pumped Microsoft in the morning. What else do we care about? It's kind of the ones I care about. We can look at Goog. Look at the Goog. The Goog. So I love this. This is my favorite, probably my favorite company ever. But I don't hold any anymore. I'm all out of Goog. When it lost the 300, I was out. That was my big play from the tariffs. That was my big no-brainer slap ask on the, when we get the big bid stick and then just carry it all the way up. Google 160 to 320 for the core position there. Stopped out at 300. I think there's no meat on the bones. I think it's too damn good. Company's too good, guys. Where's it going to go from here? It already won AI. I'd rather be in a Meta or an Amazon going into next year. Let's see. Checking back in on that. I feel obligated to babysit this play a little bit. That is decent volume coming in. So now we're playing the game of, is Meta going to counterbid? Is SPY showing any reason to believe? No, see, SPY's still so weak, but why is Meta strong? They might do a silly pump. If they did, it could probably go to 550 is the logical place. Personally, for me, I'm ringing the register. What else? What else is up? What the heck is up, guys? We're going to go split screen here. Get some action going. Detach the symbols. There we go. Okay, we're going to keep SPY on our left. We got to watch the indices here. Meta, by the way. It is doing a curl up. Yeah, I'd be careful. Yeah, absolutely, dude. Happy to help. The thing about 0DTs, here's the thing. Not even I call weeklies 0DTs, and people are like, bro, I'm not a gambler. I don't have 0DT. I have till Friday. It's like, brother, you're a gambler. And me too, and I love it. I love you for it. But just remember, it's so much easier to catch the momentum and just sell into the momentum. Just sell into the momentum, capture that gamma pop. That gamma pop's where you make so much money. So don't wait for it to hit your level and then you get greedy and go, oh, maybe it's going to go up to the next level and then it drops. Because that's logical. That's what makes sense. Market goes up a little, goes down a little, right? The oscillations of every single day's action will kill your 0DTEs. You're there to capture the velocity. If you caught the velocity, look, your contract's probably down 10% from here. I hope you're out. You just play into the strength, I can't say it hard enough. I left so much money on the table today, and yet I have had zero stress today in a very stressful day for most of the market. Okay, now we look for a long. Doesn't mean we just hammer long. If you're a degen, fine, hammer long, stop under the low. This is a buy stick. This is a buy stick on SPY. We saw Meta leading it too. So we saw the leader. This is one that I'm looking for to buy the dip on. Not today, lower. But today, this looks like we failed an auction down, and we're probably going to be setting this as a low. 15 minutes left till the half-hour flip. We will see. We will see if it can push down once more. That is a possibility. Personally, I would be out of my shorts now. Does that mean... this is a good little teachable moment here. So I'm saying I would be out of my shorts. Does that mean I think it's not going lower? No, I do think it's going lower. I just don't know when. Does that mean that I think we should long and we're expecting a big move back? No, doesn't mean that either. It literally just means this pattern, bearish. This was a bearish response, a really nice bearish response, and then it stopped. Did we get a measured move? We got a measured move. 2 times the distance of the base that broke. That is all that this pattern needs to do. When this pattern happens at a major level, low of the day, I don't think that we have the juice to just plunge straight through. If we do, well then, okay, cool, capitulation. Let's go, baby. But I'm not seeing pure capitulation today. I'm seeing the start of panic on the tape. I think that capitulation happens when this continues overnight and into tomorrow. Will it happen? I don't know. I'm just spitballing here, guys. But look at MULL. That's the 2X MU, down 14%. Good golly, Miss Molly. That's a beat down. So MU, this has been what a trade. Guys, this is a great example of how risk management is king. You do not need to know what a chart is going to do to make money off of it. These were my 2 paths. So I bought right at open on this day because we reclaimed my moving average cluster. And because I forgot to buy this day, I didn't look at it until after market. I was like, oh my goodness, it's so strong. I'll buy it open. So buy it open off 395, and my path said up to sweep the highs, and then keep on cooking to 550. We swept the highs. I took my profit. I took half off the position because I'm a good boy. Because I have trust issues. Lo and behold, massive wipeout failure. We got stopped out at break even when it was closing right here, right at 395. I said, I liked buying it here at 395. Buying it here or holding it here at 395, I would not buy it here. So why am I holding it here? Why do I need it's like tying weights around your ankles and just hoping somebody doesn't push you into a pool. It's like if the market goes down, this will get flushed hard. So that is what up. So Brody, along here on Qs could go insane if your algorithm thing is right. I don't know about that. It's not always right, but it's a statistical outlier. We'll call it that. I always tell people, I'm not anything special for getting things right. I'm not a bad trader for getting something wrong. It's all probabilities. I'm going to be wrong multiple times every single day. Some days I'm even right multiple times. So, don't think about things in a fatalistic, outcome deterministic way. The way a pattern breaks has no impact on that pattern's validity the next time you see it appear. Know what I'm saying? It's about the context in which the pattern appears. So many people don't understand how patterns work in that regard. The thing about QQQ, just for indices, the thing is that usually if you have a trend day, you will see the high or the low of that trend day print in the last half hour. So this could be a trap. And we need one more flush out. I mean, we could just puke it. I don't know. To me, it just looks like this was a failed auction down, where it was a very strong move down, and then all of a sudden it stopped. It failed. And then buyers came in. And so now buyers have so much field to run this thing back. Qs are basically, they're on the 5-yard line already for intraday price action. I mean, let's look at it like this. If we go to a 5-minute chart, and I will slap on my pivots. All right. So this was our daily range based on yesterday's close. These were our downside targets, 582 on Qs. Upside targets were 590. We opened at our downside targets. We popped back to the pivot. We rejected the pivot. We expanded far down. We're having a 2 times ATR, 2 times average true range day. Average true range 183. We're at 379, so almost. So we're stretched. We're stretched intraday. There's no reason why things can't be saved and we can't go up a little bit. Does that mean it has to happen? Heck no. Definitely not. But I wouldn't go short here. Brody, you're scalping, right? You're scalping? Yeah, it looks like you're scalping calls. I mean, yeah, do you, brother? Personally, I'm hanging out. I made my money today. It was a good day. 11% on the DGen port. I think, let's see what the Roth's up. I gotta flex every once in a while, guys. I promise it won't be a normal thing. 2% day in the port, in the Roth. Heck yeah, and that's off the back of primarily Tesla Z and Who's. Let's talk about those. I'm short Tesla. I'm short Tesla, and I'm not sorry. I'm not sorry. This was the setup. This was one of our spotlight setups of the week, of my weekly newsletter. If you'd like to be a subscriber to my weekly newsletter, I would love you very much. You can find that in my, Twitter bio. My Twitter bio. It's right in there under the free Discord. So we have the free server. Welcome to come on in. If you pay for the newsletter, you also unlock a bunch of other stuff. We've got really cool bots we're working on, gamma exposure profile bot. We're working on a auto triggers signals. So every morning we get a report of potential setups based on a whole bunch of my systems that I'm feeding through a computer I've chained into my basement, Got my AI bot working overtime for us. So come on in, it's fun. Anyways, what we were looking for is, the setup was Tesla broke, major range. We see the breakaway gap here at 390. 390 was a major level of support for multiple weeks here. 390 right there. So the play is, if we get a wick back up here, it'll be filling the gap. That's a place it can reject. It'll be back testing the level. That's a place it can reject. It'll be back testing our downward trending moving averages. There we go. It would also be very close to a rejection of the 200-day from below and the falling trigger. This is a high confluence play. Oh, one more for good measure. That's point of control there as well. This is such a key zone that we just puked. So a back test, yeah, I'm in. I'm taking that short all day. I'll put a stop right here and pray. And I'll be right 75% of the time, roughly. So we take the 2x because we're degens. We get in a little bit over 390. Currently up about 10% there. Hey, Josh Smith in the house. VSA halted moving up. No news. Let's take a look. VSA. What does that stand for? Volatility. Smacking. I don't know. Volatility. Something, something. That's a big push. Yeehaw, yeehaw. Just riding these moving averages up on the 5 there, and I bet they're doing the same on the 1. Very strong trends usually do. Yeah, just holding the VWAP. VWAP's your guide, boys. VWAP's your guide on this guy. So no news here. Interesting move. This is really high volume, a beautiful P-shaped volume profile. I would expect this to push higher. Could you enter? Can't enter here in my book. 150 could be a resistance. We're trading above the big 128 resistance. I would like to see a retest of 128 to 114. It should not lose the point of control. What I would like to see, new high, fine. Come back down, test the moving averages, catch it first, sweep under them back to here at the worst, then start doing its rampy, whippy upwards action there. So basically what I want to see is that we swept a major level. If this thing is real, which it should be based on this, it'll come back and hold somewhere on the upper, like the upper meat of this mountain. See what I'm saying? You got the peak right here, and this is the upper pinnacle. I don't know what the heck to call it. It's a big shelf, guys. It's a big shelf. We popped it. Now we're going to back test it and hopefully catch it and rip. Catch and rip. SPY. Is the algo going to come true? Looks like no buyers yet. It's still faded. All right. So now we're playing the game of high or low. This could be a W pattern high or low if it catches right here. The way that this is failing after 3 bottom wicks trying the high or low there makes me think that they flush and keep going here. You got to check yours too, Talk. Yeah, I love it, man. I don't even know. Was this one we talked about? I forget if we talked about this, but I love when we're on the same page. That makes me feel good. That's a spooky feeling when you saunter up to the Power Hour chat and Talk's fading you. It does not feel good. I do not recommend it. Oh, ASTS. I bought a tester share today. I wanted to play the SpaceX name. I guess I'm 5 for 7 today, not 5 for 6. All right, I am down. I'm down $7 on one share. That's pretty crazy. Okay, I should have monitored this one. Big washout, and they're not gonna make it that easy for us. I thought they were gonna make it easy for us and just say, hey, SpaceX is gonna IPO. Why don't you go buy some rockets? Works for a day. Maybe that's the SpaceX IPO short that you take before the thing comes out. I don't know, man. Talking about shorting SpaceX before it comes out, look at VCX. Anybody been following this bad boy? This one makes me want to puke. This one makes me want to take a day off. Why? Because my friend brought it to my attention at 197, end of day here. And I said, oh, this is stupid. What is this? And he said, these guys hold Anthropic, SpaceX, some other scammy, not scammy, just high, what do you call that? High popularity future IPO. So these are all private equity holdings that they did an ETF thing on, and they're awarding smallest percentages of equity of those private equity holdings to people who buy the shares. It's been a 3-year lockup period. You can't even see it on the chart. It just unlocked. It jumped from $30. It was valued at 20. Their holdings were roughly valued at $20. That's 20. 20. No more zeros. 20. Come back 3 days later, it's 10x'd from that point. And my friend shows me this. I'm like, oh, that's stupid. It's probably going to double again, isn't it? And he said, yeah, we should buy it. I said, I can't buy it. I got to watch it like a carnival attraction. Oh, so 2 days later, he despair pings me. It did the thing. It hit 500. Worst part is we can't short it. There's no shares available to short. So what do you do? What do you do? You watch it and you laugh at the absurdity of a hyper-financialized market, and you realize that if this is close to a top, there were signs. The signs were that traders were willing to pay a 15x premium on the value of these holdings just to get in right now. There were signs. There were signs in 2021 or 2022, 2021, yeah. Ended, you know. There were signs each time. Oh, talk. He's still my beating heart. You're trying to short silver, and it looks really good. Oh, I love silver, though. Silver was my best long of the year. Do I do it? Do I do it, guys? Do I turn my back on my love? We'll find out. I might do it. My boy bringing up a great point. Remember, we got all year to make back these gains. Does that mean we're going to 8,000? I don't know. I don't think so. I think it's going to be a painful year. I think it's going to be choppy and very hard to invest. I think it's going to be great to trade. I think it's the time to be a trader. I think I'm going to be having more fun than my dad sitting in his Roth, not doing a damn thing. If I had to give a gun to my head, where are we going to be at the end of the year? A little bit lower, but not much. But I bet you we go lower than that and a lot higher and everywhere in between before we get there. They're not going to make it easy. Not going to make it easy. Let's look at a yearly real quick. Got the half-hour flip in a second, too, so we'll watch the 1 minute here for a few minutes. Ooh, pukey. All right. So there I go, fading my algorithm, saying, hey, I think this is a bottom. And hey, look, lo and behold, it's going to make a new bottom. New bottom in the last half hour of the day. There we go. So we will watch for that tick low, and then we'll see if buyers step in. Let's see, there are 40 trading weeks coming up. 40 left. We hope for 4 up, 1 down, or 3 up, 2 down. 2 steps forward, 1 step back. Sometimes you hit the big one, you do the 2-step, get an extra couple steps in there before you take a step back. And those are the big trades, right? Big wins, we love those, but we don't get them very often because we trade disciplined. Small wins, we love those too because they mean we're doing the right thing. Small losses, we love those too. We say we love them. We don't love them, but it's all part of it, you know? You don't get the big wins without the small losses. You just don't. So you got to love them too. And look at this, man. Every single buy stick's just getting smacked. Why? Well, we need to make a new low. Algo hasn't triggered yet, guys. All right. We're halfway through. Is this the start of something new? Is this the start of the end of the downtrend? If we get the tick low and it's a failed auction down, what is a failed auction down? Well, let me tell you. All right, we're going John Madden mode. We're getting out the brush. So we have a neckline. We have a tired dude who forgot what he was saying. We have a dude who's been streaming all day. What was I saying? What was I going to draw for you guys? A failed breakdown, a failed auction. There we go. Here's the neckline. We auction below. Then there is a resting buyer somewhere down here that sellers are not anticipating. We auction down. And you see us auctioning down. Right now we're auctioning down. It has not failed. There's the new low of the day, and it's a big one. Boom. Look for 645 potentially, and we're looking for in the next 5 minutes some bottoming out. Doesn't mean we're going to get it. I don't know. I don't know, guys. It's my day job. I don't know. It's above my pay grade. What a failed auction would look like. Big push down, into the resting support that surprises the bears. The bears they've been living good. Their steak's been too buttery. Their lobster's too juicy, you know? All of a sudden, they might run into a brick wall and not realize, and they've already deployed what they have to deploy for today. So if that happens, we get the big push up, then we get a big move up. Big push down, and that fails. It fails. Bears will try again, but they will not be able to make a higher or a lower low. Then, when they realize right here, oh, we messed up, guys. We're greedy little piggies. Then they start climbing over each other to get out. And those short closes, they work just the same as a long open. So I'm a long, I'm buying to open. They're a short, they're selling to, or they're buying to close. We're both buying. We're both going to pump this thing. That's how a failed auction takes place. It's my John Madden X's and O's for you there. Will we get it? Not yet, that's for sure. But high volume picking up. No buyers on Z-tape. Let's see what else we got. Oh, Talk's watching something that I'm watching. The Talk year bond is going to surpass 4.5. The 10-year bond is going to surpass 4.5. When did Trump taco the hardest? Talk knows. Talk, tell the people. What's the yield? It's a 10Y. US 10Y, is that how I get it? Yeah. $4.420. 4.420. Can we spike over 6 again? Is this the danger zone? Is this where the put wall is? Is this where the bonds put is? Is this where we have to actually start doing something to fix things? I don't know. Hey, Paul. Welcome. Awesome. So apparently there's our our music from the scanner is still going. I apologize. We can call it a vibe. I thought I turned it off. I'm looking at my music panel right here. Sorry to do this to you. I'm going to see if this turns it off. Now I hear it. I don't know. I have to investigate further, guys. I'm so sorry. I am a grandma, guys. You do not realize that I do not know how to use this stuff. I never streamed before this. I was just a boy with some charts, and they pulled me out. They pulled me up to the big leagues here. Now I got to figure out how to use computers. So, is this what we're looking for? I have no idea. Spy might be starting out. I have no idea, dude. I have no idea. You're asking me, is this the green candle that's going to change this whole trend? It's a zone of interest, and it's a time of interest, so we watch closely. That's all I can tell you, brother. I have no idea what's going to happen, but I can tell you that we can watch it as it develops. So for me, if I want a long, what I really want, this does look like it's going to try to do a failed auction, like we talked about. I wish I left those lines on. I think it was right here too. Okay, well, we'll see. So first step is they need to sweep this high. If they get a tick over this high, even if the candle doesn't close, it opens the door for a potential bottom. So this is what it would look like. Sweep high, tick. Bulls or bears come back out, and they catch a lower high. Then it surges up to this 50-minute. There's going to be sellers there. It needs to come back test these moving averages. If there's buyers there, then it can surge up to point of control. It's a checkpoint system, guys. Each of these levels that I mentioned has an algorithm, or probably many algorithms, trading off them. It's like Nietzsche's the power of wills. Every idea inside you, everything that you feel inside you, it's fighting to get out. It's fighting for enough pull to get you to actually act on it. Same thing with the market. All of these things are different forces acting upon the overall will of the market. And we are here to interpret these small movements to catch the larger movements. That sounded kind of smart, right? I did not know where I was going with that when I started it, but sometimes you just got to trust the process. What's up, Chris Main? Almost every city is opening day. Yeah, my Giants got smoked, like 7-0 or something. That was rough. We're going to say it starts today. They're still wrestling for the long. Yeah, they're not letting it go. They're not letting it go. But still, at the end of the day, we're still caught under the ribbon. Once this changes, then we can start talking. Then we can start talking. All right. Joe's on small cap watch. EIQQ. Testing VWAP. EIQQ. What's this, guys? Joe, what are you putting me on here? Is it EEIQ? No Muzak, you're doomed? Yeah, it's over. It's over, brother. What do we do? Oh, wow. Joe, the sniper. Joe straight sniping out here. He said, this thing's a VWAP. Buy it. Boom, $2. Boom, easy money. 15%. All right, where's your targets here, guys? You should know this. First stop, it's going to sweep this wick. There could be sellers there. We monetize on the tick higher because if it rejects, we don't want to get swung down in one of these. Ding. Ding. We lock profits as it goes, so we would be locking profits. Oh, so close. So close. Got to blow on it. Wrong way. All right, we'll work on it. We'll work on it. It'll get it. It'll get it. Just be patient. We won't look, and then it'll get it. All right, SPY wants it too. All right, we won't look, and then we'll get it. We got to go to something else, guys. This one looks like it's bottoming too. Poet. Reddit, strong push up. I think we're done selling, guys. ONDS, what a piece of trash. I own this in the long-term port. It's making me mad. All right, so maybe ONDS doesn't get to join the party today. Maybe they're done. Tampate Lugo, so we should buy SPY calls. What strike and expiry, brother? This is not financial advice. I'm not responsible for your zero-day gambles. All I can do is tell you what I see and let you know what I would do. What I would do? Nothing. I already made my money today. I don't know what we're doing yet. I don't know if we're going to keep falling. When I see the valid bottom, when I see the higher low, then I will look long. Right now, I'm not even if I saw it, I wouldn't take it. Even if I saw it, I wouldn't take it because we're at the end of the day. It's been a rough one. I don't know what we're going to do tomorrow. It's probably going to be wacky. We're probably going to get some weird movements. So what I would say is if you are bullish SPY, if you think that that enough is enough, would it kill you to buy some shares and chill? IV's high. You don't need to play calls. You don't need to play leverage. You can buy triple leverage calls. Or don't do that. Triple leverage shares. Triple leverage shares. TQQQ, for example. But what's so wrong about DCAing into some meta and waiting for the real bottom? I think we're going to see capitulation. I don't think we're in a rush here, guys. Paul, cooking and gush. Done nothing but winning. All right, we got to pull it up. We got to give you your flowers, brother, because that's a hell of a trade. Ye doggy. That'll put some hitch in your wagon. Woo! It's just squeezing up. And that's what happens when you have a boring, dull market forever, the oil market. And then all of a sudden you get a little bit of a, biggest worldwide bottleneck closure. A little bit of a 30% reduction in oil supply, a little bit of a no helium. Yeah, it messes things up. It's not great. Wow. All right, brother. Where you selling? That's the question. You're still in, so where are you selling? Why did I type oil? It's not crude. That's what I wanted. Imagine having a company named Oil, and you've done nothing while oil doubles. Womp womp. Snowman, remembering, hydration check. Go drink some water, guys. Take care of yourselves. Market ain't going to do it for you. I think this goes higher. I think this makes a lot of people mad. I also think nobody should have any right to be surprised or upset if this thing does not V-shape in the next week. This is not a good situation, guys. For the world. And I know I'm in a good mood because I was short. But big picture, this isn't good, you know? We want some resolution here. We want to all get along, guys. We got to learn how to be okay with our neighbors and stop bombing them. Otherwise, they're going to take our oil, and then it's a problem. So, you know. Brody's saying, market isn't done puking. Seems like lower highs over and over. Yeah, baby, so why fade it? Keep shorting the pops. It's been a blast. I think we got another 10, 15 bucks left to do that for. Still no buy pressure. Still no buy pressure. No touching. Selling it into strength and letting your runners run. Paul knows what's up. Paul knows what's up. Yeah, rig's amazing. I traded this a long time ago, and I sold it really early. Let's look at it. This is another one that's just like ratcheting up. I was watching it this whole time thinking, it's going to fail, right? This is a piece of crap. This thing sucks. For a long time, it sucked. Sorry, it might be a little noise here for a sec. Got a big old dog heading outside. All right, there we go. So we got rig absolutely powerhousing. This is a 5, 6, 7 week flag, just pushing up, and it's just, this is so constructive. See this stair step in blue line? That's the daily trigger. And they're just buying every single tap. Every single tap. These things are incredible. I mean, this was one of our plays, this and Bohr, as well as Halliburton for the Venezuela debacle. You guys remember that one? Seems like a long time ago now, doesn't it? Don't you wish we were just picking on those countries we can get in and out overnight? Yeah, we picked the wrong fight. We puke? What, now? Are you inciting panic in my chat? Doesn't look like a buyer, that's for sure. I really should have held those puts, huh? All right, pain check. Pain check, where are they? 600? It wasn't a 550. Oh, it won't let me check a 0 day anymore. Oh, that's because I'm not on SPY. Pain check, pain check. If I held my 652 put, would have been a 6-bagger. Way she goes, boys, way she goes. Thing is, if I can get one of those setups every day, I can't, but you know, I can get a 100% move every single day. If I can find it, there's a 100% move on options every single day. Or more realistically, there is a nice, juicy 10 to 15 point move on ES or on SPY with your leveraged shares in a much more safe way. Don't be a gambler like me, guys. Down goes Frazier. You pain check too, Brody. You're only allowed to do it if you have a good attitude about it. If you're not gonna, there's no crying in the market. You know, we're pushing all our own buttons. No crying allowed. Only if you're gonna laugh at it. Gotta laugh at it. Let's see. Brody's saying my biggest problem is letting one of my cons run and selling one for profit. I usually buy two. Hey, me too. In the gamble account, I usually buy two of whatever I'm doing, and once I'm like, hey, this feels pretty good, and I'm not sure it's going to keep going straight in my favor, I'm going to take one off. Problem is, I'm confused though. What's the problem? It's letting one of your cons run and selling one for profit. So you're saying you let the other one go all the way back, take your profit back? Let's see what else we got going on here. Don't add stocks in revenge. You want to buy right now. You want to buy right now. Because that price is low. Where is it? Where is it? That price is low. So you want to buy. Chill, brother. There's more buyers lower. If this is the exact bottom, well, then none of us would have known, and it's not showing any reason to buy it. So don't buy it. Easy. Easy. Paul saying the biggest thing that helped me become profitable is narrowing down to a handful of trades rather than being in too many. Absolutely. The amount of money I give back, not being able to manage multiple trades, it's hard because I run a a trading server, I run a newsletter, I do stock signals for trades. People want I got to give the people what they want. I'm looking at all these different plays. I trade my best when I sit down with a SPY chart and a VIX chart. That's it. That's when I make the most money, me, you know? So I know my lane. I know when to stay in it usually. But everybody likes having fun. So you got to play the little thematic ones every once in a while. You just got to budget for it in case they don't work. Like the amount of times I've made good money on a SPY scalp and then said, I'm going to believe in a company that I like the fundamentals of. And then I give that back on a 3-month call that does nothing. It evaporates. If I had a nickel, then I could buy another useless ONDS call. If I had a nickel for every time I did that. All right, guys. What else we got? We got 3 minutes till the mock stick. Brody wants a pain check. He's requesting a pain check on aisle 3. Can you check the pain on my QQQ contract from earlier? Mr. Brody bought a 585 put at 249 per contract. Let's twist the knife. You're one of us now. That means you're one of us. If we can mess with you, then you're one of us. Welcome. 685 put. Yee doggy. I'm assuming a 0. Yeah, 4-bagger from here. We're in the same boat. We had similar entries, you and me. Nice look, brother. Where'd you take it? Where'd you take it off? I sold for 100%. And that was when SPY did this. And I really wanted to wait for this flush and to wait for this big move, but I recognize they can take their sweet darn time, and I have a 0 DT, and I bought this early because I was long. I scalped this right around here. It was nice off of 650 and change. It didn't get the full 650, but I saw the strength there. Got in probably around 651.10, 651.20, and I'm scalping this thing. I'm feeling good. I didn't even have time to call it out. It happened so fast. I felt bad. But then we get here and I get a top wick and I go, am I going to get yeehawed? Because my bias is down. I want it to drop anyway. It's now 15 minutes into the market. That's my prime time window where I start looking for a reversal. So I slapped a put on. And because I didn't want to sell my call yet. Thought we still had potentially some room, but I wasn't sure. So we got one more push up, then a little red. I probably sold the call here, somewhere like that. I didn't get like the top tick. It was not like the cleanest trade of the day. I was kind of stressing a little bit. But then let's look at the 1 minute here, because this is where I added short. So this was my good entry. This is what I should have waited for. If I wasn't in the long, I wouldn't have taken the short. Just kind of arbitrarily right here. But it ended up, look, when I go over here, it ended up being the exact same. I was like literally break even when I added. It was funny. Really, really, really nice setup here where it just had that scallop top rolling, where everybody and their mom wants this to be a bull flag. But if you zoom out of the context, we're freaking bearish, and we just come back to where we closed the pre-market. So this is just like a binary point. We come back to the low of the yesterday. Why is everybody so bullish when we're just tapping into the low of yesterday and we cannot find any traction? We're below the 200-day. We're below all major moving averages. Nothing looks that good. Why are we assuming this breaks up? So I was eagle eye waiting for it to fail. We got the wick up, and I was like, candles up here. I'm going, are you kidding me? I'm laughing with my buddy Neko in the server, like, no freaking way. They're going to squeeze it? Really? This piece of crap? They're going to squeeze it? And then by the time we were done typing that, we're going, yo, because the candle closes way down here, and then we're hammering shorts. Hammering shorts, having a party, trimming a little bit of VWAP just in case we're wrong and it whips back up. But pretty sure that it wouldn't because of this. So small trim, knock it on down, big trim right into this wick when we first see. I won't pretend like I got it right here. But I was ready to sell at any point after this candle because we're back into point of control. We got to have a bounce at some point, and I want to capture that straight gamma from the knife where everybody thinks it's just going to go to hell, you know, straight to hell. So I want to capture that premium where they're pricing in a move to Hades, you know. So yeah, got the bottom wick when it reclaimed that last candle right there, the point of control. I just tapped out. So it went like 120%, got like 95, I think, something like that. Real nice trade there. And then up here, I was like, I'm running a little low on options buying power. I don't really feel like giving back this money I just made. How about I slap some futures on? So this is where I put futures on and put my trade the pool account to work and just rode the short on down. I added here, the second one here. I saw it try to squeeze. Saw it try again and fail. So that's a lower high continuation. Easy peasy. All right. Let me catch up on some comments here. Well, we should watch what SPY's actually doing right now. No bullish path. Out of here. Okay, hold on. Oh, Brody, by the way, yeah, the website I was using, optionstrat.com. Optionstrat, S-T-R-A-T, totally free. I don't know, they probably have some paid feature. You don't need it. Totally free, very useful. If you're a 0-day trader, always have that tab open. You get in a call, you need to know the exact amount of money that your call is going to be worth when it hits your target. And if you know what, you're wrong and it needs to take another 20 minutes to hit your target, well, you got to go consult your chart and you got to adjust that. So when you get the move to your level, you want to sell it right into that thing to capture that gamma pop. You want that limit order in. You want that limit order in. You do not want to do this manually. If you do it manually, you're going to psych yourself out. It's going to go over the level. You should be selling into that gamma. You're going to wait 30 seconds because it's over your level. What if it just keeps straight going? It won't. They never do. Sell into the strength. And know exactly where that level will be with that option strat. All right, all right, all right. Brody's saying he took that short off really early, those puts off really early, and no worries. Green is green. You didn't know what it was going to do. No worries there. You have such an issue. Brody's saying, I have such an issue when to add onto a position even if the sentiment and trend is strong. Any tips with that? Absolutely, yeah. So pyramiding orders, very important skill to learn, and it's hard. It's not just you, Brody, it's hard. This goes against our psychology to a large degree. You like to think that the average person's like an ape and they just, oh, buy. Oh, it's going up, buy more. Not really, actually. Most people are very scared when their stock goes up. They get nervous. They're like, if I don't sell, then this could just disappear. Remember all those other times those gains disappeared? But so often they will find themselves cutting the flowers to water the weeds. They'll be taken off exposure on a trade that's working, and they'll be adding it to their losers in their port. I'm sitting here going, dude, that thing's not working. This thing's working. Other way around. Get rid of that stuff. Throw it into something that's working. You know what I'm saying? So in terms of how to actually do it, nice roll here. SPY is ugly, guys. This is so bad. This is like, we're going to have a big sell here. We could have like a big candle here. I got to pull up Bookmap and see what's shaking. This is a gnarly look. I should have just held my shorts the whole darn day. That's what I get for practicing risk management. All right, let's check the Bookmap real quick. I want to see where the resting liquidity is. We just knifed a decent high volume level. All right, yeah. All right, I'm going to pull this into this tab. Here we go. So this is the Bookmap. Oh, a stream of the Bookmap. We just tagged into a big level, and we might see that failed auction lower here. They are finding buyers here for now. They've filled 112 orders there, and we are trying to start to push off that. So we're going to watch price action here. That being said, we cleared the level. If we get a small pop and then reject, and this level will not hold going forward. So we either squeeze up here or we pop and then roll further. This is the time to decide. They're trying to save a capitulation move here. This looks like it wants to really ramp, and I can actually show you that with a cool little thing. Where is it? The curve. Can I inverse this? Hold on. Yeah, if I do it like this, I think. Yeah. So see that, how it wants to just like ramp? Hold on, it's getting all wonky. It's getting wonky on me. Something like that, where it's just wants to ramp and then spike. But see this? This is a failed auction. See the high volume? They tapped into a buyer. They tapped into a buyer. They saved it. So let's look at Bookmap and see how that response looks on that Bookmap. See, so it gets swept out. These are buy orders, long orders that got filled. And then as price starts migrating up away from those, because sellers start getting out because they realize they're running into a wall and they're not getting progress anymore, So they're locking in their profits. Then they buy to close. Bulls buy to open here, and we're seeing them push the price up actively. This is where the first sellers are interacting, but I don't think they look very strong. We will see, though. We'll keep on watching. But this is interesting price action. So that tried to capitulation move, stopped it, failed auction. Kind of like what we were looking for. I guess it was up here. Gnarly stuff, guys. Gnarly stuff. Point of control is above. If we catch here, we could see a little bit of a squeeze back to 646 to 647. I wouldn't really count on it. But see what we get. I would be hesitant to look for, oh geez, wow, today flew. We have 3 minutes left. So this this doesn't really mean much, does it? Because we don't know what's going to happen at this point. So play safe, guys. I hope you enjoyed the stream. I've had a blast. This has been a fun one. Lots of new folks to talk to, hang out with. I'm a high energy from Trader TV. Those guys are great. Yeah, it's about that time, Mike. You want to play them out? You want to say the thing? Yeah, Mike's a real one. Mike's an OG. Mike's the boy. Mike is also in my Discord now. And since I think some people were not able to get into my Discord server because it got... I got notified that they thought I was getting raided or something. So I had to say, like, no, this is healthy. This is good. I like these people. But if you didn't get in, reach out to me on Twitter, and I'll get you in. Don't worry. And try now. It should let you in now. So this is the Discord link that I just posted right there. You are more than welcome to join. And as always, I got to say, if you're in Discord already, you got to join the Trade the Pool Discord too, because there's really good stuff going on there on a regular basis. Like every single day, there's an event, there's a book club, there are live traders in the room. It's a good place to be, and you already got the Discord open, right? Just click right, one click down, you know? It's easy. It's easy. All right, guys. Yeah, absolutely, Brody. Good to have you in here. I hope you, hang out and show up more. We do this every day. Do this every darn day. I'm always on power hours Monday to Thursdays. I do the lunch show Monday to Wednesday. I do a morning show on Wednesday morning with the Fivers guys doing futures trading. And then you can catch me every other Thursday on Trader TV for 15 minutes at 2:45 market time. Yeah, every other Thursday. So not next Thursday, Thursday after that. All right, I think that's all the stuff I have to yap at you about, pretty much. We're seeing a little bit of a buy attempt at the end. Don't bet it on too much. I think we go lower. Awesome, Brody. Good to have you in here. Good stuff, man. Yeah, everybody's more than welcome. Everything you see is free. If you like what I do and you want to support what I do, well, I also do a newsletter and a Signal server and all that. If you buy that on WAP, then it opens up those channels in the free Discord. So that's it. Sinister Steve out. No, silly Steve. I'm silly Steve. I'm just a chill guy trying to have a good time with my brothers. So, you, my brothers and my sisters, can't forget about you guys. Have a great day. I hope you enjoyed the stream, and I hope you hung in there because it's been a tough market day. But you know what? The pain will be over. Not before you know it, but it'll be over eventually, and we can make some money on the downside before then. So, be good to yourself. Take care. Get some rest, and we'll do it all again tomorrow. I've been Steve Tileman with Trade the Pool. Thank you so much, and we'll see you next time. Have a good one, guys.